Testing. Are we live? Wait for it. I think it's there, ladies and gentlemen. Good morning, and I hope you're having a wonderful day. We got Jerome Powell on the way at 2 p.m. Eastern, but ladies and gentlemen, this is going to be a big one. So, if you didn't watch the watch list, make sure you check that out. Second link in the description. We have a little bit of a theory here, but today is going to be a wild one. We have history in the making. Fed futures are already even starting to price in the 1%. People are talking about this. We got a lot on the table. You even had an emergency ECB meeting, and that has some big implications. If you didn't take a look at the euro, the yen, all of that, it is quite interesting. So it gives us a little bit of hints, but at the end of the day, we are going to see what happens at 2 p.m. And ladies and gentlemen, you are living through history. So good morning. Oh, and I closed out my natural gas future. I did that I could have got 3 more. I sold out at 7.51. We walked away with the profit. So, but there was that. But good morning, Chattadonia. Are you ready? Here it is, Jerome Powell. Oh, who's awake in the morning? I got Zuraj. I got JM. Good morning. Oh, what's up, G-Unit? What's up, Screw College? We even got the Twitch. What's up, Cran? New Cat. Jeeves. Oh, good morning. Good morning, Larancha. Oh, Ghetto. D. Dennis. Arya. Good morning. Good morning, Matthew Orman. Oh, there you go. What's up, Evan? How you living? Oh, Dean in the house. Lost one. Rah, Trays. Oh, it's beautiful to see. We even got Graham waking up. I know Graham watched the watch list too. The clean kings. That's hard to say sometimes. Open face. Good morning. Forever young Carissa Hines. In the morning, baby. What's up, my morning OGs? Y'all feeling good? Oh, good morning. Oh, there it is. We woke up and drive. Bro, it's hard not to wake up and drive on Powell Day. I'm telling you, today is going to be an exciting one. Oh, what's up, Juan? He watched it 3 times. There you go, baby. There you go. Top of the top. Adam Lowe, Rusty. Oh, what's up, Roy? Armando. Jeff Kent. There you go. I love to see it. It's lit. I know, Ark. You got butterflies? Oh, wow. I don't know if it's like butterflies or it's like, it's just game day. I don't even know how to describe it, and I don't want to hurt the environment and hurt any butterflies. I don't know. Anyways, Chad, get ready for it. Again, biggest news of the day right now, besides Powell, there was an ECB emergency meeting, okay? So keep that in mind. What time? Well, you got to like the video and make sure you answer the poll. I want to survey the Chad and see what everybody today is going to vote on before the meeting. 75 basis points or 50, and the time of Powell is 2 p.m. Eastern or 2:30 for the press conference, and then 2 for, 2 for the actual release. So get ready, baby. Get ready. But let's see what we got. The Fed may ditch gradualism and go for broke with a 75 basis point hike today. Decision comes at 2 p.m. Eastern with Jerome Powell speaking 30 minutes later. Market pricing in firms like Goldman and JP see the upper bound rising to 1.75 in the steepest tightening since 1994. I don't know why they say 1994. I mean, I'm going to have to go back and look at that. Pretty sure it's 84. But we'll see. Consensus remains for previously planned 50 basis points. If so, a dollar slide looks to be in the cards. Updated forecasts may signal the likelihood of a recession. A new dot plot may show the median rate projection rising to around 3% at year end. But as officials prepare their dot forecast well in advance, there is a risk that may not reflect the latest urgency over inflation. Jeffrey Gundlach urged a mega hike to 3% today. Barclays said Powell will not worry about the risk of breaking something, but in the case it's worth breaking something. Grant Thornton said, don't make the mistake of the 1970s. The Fed must bring down demand in supply-constrained world. As painful as that may be, Dreyfus and Mellon see a higher chance than currently priced that Powell sticks to the original plan, but he'll be somber. He's got to wear the black suit and dark tie and the black Air Force Ones. Oh, there it is. Treasury yields dipped along with the curve and futures advanced before the decision. Dollar weakened against all major peers as it retreated from a 2-year high. Oil declined and gold advanced from the lowest level in 4 weeks. This sell-off in digital tokens continues. U.S. consumer health faltered in May. Retail sales unexpectedly fell 0.3 month-on-month after a revised 0.7 gain in April. Core sales growth, stripping out the most volatile components, slowed to 0.1. Households have used savings and credit cards to sustain their purchasing, but some belt tightening is likely as the economic anxiety rises. Europe alert. The ECB accelerated work on a new tool to combat unwarranted jumps in euro area bond yields as markets strain the prospect of the first rate increases in more than a decade. Following an emergency meeting, the Governing Council said it will apply flexibility in reinvesting PEPP redemptions to preserve the function of the transmission mechanism. The yield on the 10-year Italian bonds plunged in the euro gain. So literally, we were talking about Italy, and today what ECB did, it was unscheduled, and they pretty much did something to stop that from happening. But euro is I think it's down a lot here, but it's up a lot. But it's interesting because the dollar is down. So we're gonna see how it plays here. But that one was a big one in a weird way. It could even signal a little bit for the Fed if you think about it. ECB emergency meeting on day of Powell. My goodness. The BofJ faces friction when it gathers tomorrow. 10-year bond futures slumped the most since 2013 today, with traders betting that the bank will be forced to abandon its pledge to cap yields at 0.25. The sell-off persisted even after the BofJ ramped up its bond buying program. Brazil's central bank is expected to raise today by 50 basis points to 13%. Yikes. More crypto cracks emerged. Speculation about the health of hedge fund Three Arrows Capital intensified after a tweet from co-founder Zhu Su hinted at potential stress. Crypto lender Celsius hired a new law firm to explore restructuring options, the Wall Street Journal reported, and Bill Gates dismissed digital currency projects such as non-fungible tokens as shams based on the greater fool theory. Thanks, Bill. Thanks for everything, Bill. Corporate Hertz rose pre-market after its board approved a new $2 billion stock buyback. SoftBank plans to list some of its ARM stake in London in addition to main IPO in New York. Tiger Legatus will liquidate its hedge fund due to poor returns. Stellantis will begin layoffs as it is stamping at its stamping plant in Michigan, Reuters reported. Global oil supply will struggle to meet rising demand next year, the IEA said in its first outlook for 2023. Sees China consumption ramping up while Russian production slides further due to tighter sanctions. The agency also warned that if OPEC Plus wanted to help, they'll need to deplete spare production capacity. Emmanuel Macron said fresh talks between Ukraine and the EU are needed to send a signal of support, but dialogue with the Kremlin must continue. There is an unusual dislocation between the stock market sell-off and positive earnings outlook, according to Bernstein. Only twice in the past 3 decades have earnings growth forecasts stayed positive as equities slumped, and while forecasts subsequently moderated, they also recovered quickly. This time, Bernstein says, while earnings estimates may need to be cut on recession fears, it's possible the stock market has overshot the extent of these concerns. Wow. That's like the first bullish thing I've read in a long time. I feel like that's amazing. 9 a.m. Canada May existing home sales. 10 a.m. April business inventories. 10:30 EIA crude inventory report. 12:20 ECB Lagarde speaks. 2 p.m. Fed rate decision. 2:30 Powell press conference. 4 p.m. April cross-border investment. And then 5:30 Brazil rate decision. Money Wednesday. I can't believe it's Powell. It's Powell Day, ladies and gentlemen. It's Powell Day. Oh, welcome. Joe Biden, he told oil refiners unprecedented profit margins are unacceptable and demanded action to improve capacity as soaring gas prices feed inflation and fears of a recession. Biden said he is prepared to take any responsible and appropriate steps that would help companies increase output. The Empire Manufacturing Index contracted for a second month in June, improving to negative 1.2 from negative 11.6. The NAHB housing gauge may dip to 67. Canada housing starts rose to 287 from May from 267. The expectation was for a decrease. The ECB is making a mistake in moving to raise rates and risk damaging private consumption, according to closer advisor to former ECB boss Mario Draghi. Francesco Giavazzi told an event this week that the rates were the wrong instrument and the ECB needs more help from governments to contain prices. A spokesman from Draghi said Giavazzi had been speaking in personal capacity. But it's time for the SMB to strike. Thomas Jordan was told by former academic supervisor, policymakers must allow a nominal franc appreciation, which prevents further inflation of imports. The EU is restarting legal proceedings against the UK. Both London's move to override part of the Brexit deal and proposal to eliminate the role of European Court breach international law, and the EU's chief Brexit negotiator. That's what Marco Savukis said. I can't say it. China's economy, they showed a mixed recovery in May, with the industrial production unexpectedly increasing while the property market continued to slump and consumer spending declined. Survey jobless rate fell to 5.9, but the youth unemployment rate rose to 18.4. Wow, in China, that's crazy. I wonder what ours is. The PBOC kept its one-year medium long-term lending facility at 2.85. That was unexpected given the other major central banks are tightening, but the PBOC will keep its easing bias, Craig Agg said. Australian yields tumbled or jumped at a pace last seen since 2009. Bond sell-off was triggered by investor concerns of a wage price spiral will break out in Australia after Industrial Production Relations Tribunal raised the minimum wage by larger than expected 5.2 from July. Chinese aluminum output hit an all-time high of 3.42 million tons last month, while steel production rose to the strongest in a year as mills geared up for increased infrastructure spending. In energy, crude refining stayed weak, gas output was flat, and coal mining ticked higher. Apparent oil demand rose month on month to 12.45 million barrels in a day. U.S. natural gas rose after tumbling more than 16% yesterday on news of extended Freeport outage. SocGen warned that the only oil demand destruction can counter the upside for crude prices and said it sees Brent trading at $130 a barrel next quarter. Gold advanced along with precious and base metals. Iron ore fell. Corn and wheat were in the red. The buyout industry is finally showing signs of cooling after more than a decade of rapid growth. PE firms globally struck $1.1 trillion in deals last year, breaking the record of 804 from 2006. Baidu is in discussion to sell majority stake in IQI, a deal that could value the streaming service at $7 billion, Reuters reported. Mega Robo has raised about $300 million from investors, including an arm of Goldman, securing one of this year's largest Chinese venture capital investments. ABC Life holders are considering a stake of the sale that could value the business at $3 to $4 billion. JP Morgan names Peck as new head of Australian investing. The state venue antitrust bill opposed by Google was passed unanimously by the Senate. Measure allows state attorneys and generals to choose whether their antitrust suits are heard. In Europe, Qualcomm won bid to topple a €997 million antitrust fine over 4G chips after judges said regulators made a series of blunders. Disney may shed some 20 million subscribers after being outbid for the streaming rights to Indian Premier League of Cricket. H&M dropped. Cost pressures overshadowed a sales beat. Mixed margin outlook suggests greater risk in third quarter, given the need of Russian inventory clearance and reallocation. PayPal extends buy now, pay later push with installment loans. Moderna FDA verdict on shot fills important gap. Snowflake analysts are optimistic on potential expansion. And then Alibaba's SCMP poaches former Expedia AOL executive as new CEO. Caterpillar leaves Illinois. End of Internet Explorer era spells trouble for Japanese business. Senate passes state venue antitrust bill that Google opposed. Boeing to discuss 777X with EU and U.S. regulators next week. Apple consumer tech stocks price targets cut by Morgan Stanley. Qualcomm wins the EU case. ESG has been a punching bag for disgruntled corporate execs, industry insiders, and the far right, but there's one group whose growing disapproval may be the ultimate game changer: retail investors. They're looking under the hood of an industry that's increasingly steering their savings, and they don't like what they see. Woo! Atlanta Mayor Andre Dickens wants to find a way to place restrictions on property investors who are contributing to a surge in home prices. Dickens envisions something similar to the Community Reinvestment Act, a federal law designed to encourage banks to meet the needs of all borrowers to prevent a takeover by deep-pocketed real estate investors. They don't like real estate. It's actually good, though, like in Atlanta, for you to get an Airbnb, you have to be a resident now. So I think little stuff's pretty good, but leave it alone. Headed to the Qatar World Cup, you'll have the option of staying in a tent in the desert as an accommodation to squeeze, as forcing planners to squeeze to get creative. There's 1,000 tents in Qatar if you would like that. For the ultra-rich living in some of the world's most expensive cities, surging prices of luxury items have taken a bite out of their vast purchasing power. According to the Julius Baer 2022 Global Wealth and Lifestyle Report and its annual rankings, Shanghai once again topped the list of priciest places to live. New York placed 11th, down one spot from last year. We got hammered. Bordeaux's 2021 was no vintage of the century. The typical spin trotted out for top years. That was devastating frost. What is this? I don't even know what this is. On this day in history. Oh, man. This one's good, bro. This is good, bro. I like it. I like it. It's a good one. England's King John agreed to the Magna Carta in 1215, stamping his seal on a document aiming to make peace with a group of rebel barons. It influenced early American colonists in the U.S. Constitution. The charter was more about the relationship between the monarch and the aristocracy than the rights of ordinary people, but it remained an iconic document. Wow. And now it's Jerome Powell Day. Oh, wow. That is amazing. Now it's Jerome Powell Day. So we got that out the way. Got a couple of plays here for today. Couple of pre-market movers. Spotify shares gained 2.2% pre-market. Wells Fargo upgraded the stock to equal weight. They said that the music streaming firm's recent investor day laid out a more profitable company than the brokerage has modeled historically. China tech stocks are mostly higher in the U.S., with education stocks continuing higher. IQYI shares declined 3.9 pre-market as Baidu is in talks to sell its majority stake of the company for about $7 billion. Cryptocurrency stocks fell pre-market trading. MSTR down 7, Riot and Mara down 7, Coinbase down 6. Apple and other consumer computer hardware stocks may be in focus today after the retail sales and after Morgan Stanley cuts a lot of them. Moderna shares rose 1.2 in pre-market trading and after hours as analysts said the unanimous verdict from FDA, which supported the biotech firm's COVID vaccine, came as no surprise. And then Qualcomm stake could be in focus or stocks after the company won the European court bid to topple a $997 million antitrust. So we got that. If you didn't watch the breakdown on bonds yesterday, I think it's going to be interesting. We have a lot more to talk about here, but I definitely think we're going to see a lot of action. Today's European ECB emergency meeting, it's definitely causing what we have here. So we're going to watch how it plays. As far as stocks, I'm going to be watching VGK, anything related to Europe. Tesla, we have that play from yesterday, and I think that will be good. Spotify, I really like that one. I think that could be good. And the upgrade, if things hold up, Boeing. But Boeing stays up and they kill it like yesterday. I think that one could be good. And then Baidu, they're selling that stake. China stocks are good. I'm going to watch that. And then Qualcomm, if we're able to stay up with that antitrust deal, I think that will be cool. And then TBT and YCS, but pretty much just holding the yuan or the yen. And I closed out of the natural gas future pre-market. I could have got way more money on this, honestly. I closed out at $7.51 pre-market. We got like a $300 profit, so I said, let's go, baby. Let's go. You know what I'm saying? We'll just grab it, run it up there. The yen came down a little bit. And you know what time it is? It's that time, ladies and gentlemen. YouTube said I wasn't live. Oh, no. Oh, no. Make sure you're logged in for stuff. I don't know. YouTube and the notifications. I don't know. We gave up on it. We still got love, though. We ready to go. It's still Jerome Powell Day. No matter what. It's game time, ladies and gentlemen. So, ladies and gentlemen, boys and girls, here at the Cope, especially on Jerome Powell Day, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, baby. So on behalf of the cult, the people here, the people not here, we want to give a huge and special shout out all the active servicemen, past servicemen, all the veterans, baby, anybody who has served this country. God bless you. Shout out to you and thank you for your service. And shout out to the police officers, the firefighters, the doctors, the nurses, the teachers, all the public service out there as well, baby. God bless you and thank you for your service as well. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senator Jets! Oh, it's game time, baby. Horn. Welcome to Powell Day. Good morning. Let's go. Let's get some good stats. Make sure you vote. Do you think it's 50? Do you think it's 75? Get your pre-market list out there. Get ready for some call-outs. Today is the day, ladies and gentlemen. Today is the day. Oh, my God. I don't think they feel me, bro. I don't think they feel me, man. Oh, the vote is verified. Good. Verify your vote. Make sure you like the video or we can't count your vote. And then you are just... Oh, and guess what? I found this one out for you guys, too. You guys know the Fed futures and, like, the 3-month, you know, like the short term pretty much, and how we have to go to investing.com. Well, look at this one. /ZQ will show you the Fed futures on a chart. So that's the future for the 30-day Fed funds. I didn't even know TD Ameritrade had this. So if you guys know, you know when I show you the thing and I have like the updated picture of the Fed funds futures. So just like investing.com. So you got to do the math here for, you know, the difference and like you'll figure out the amount. But /ZQ is the future for that. So pretty cool. Again, we're going to be watching the main thing, the ironic part about today, the odds of 1% are actually moving up today. So keep that in mind. We're going to watch the yield curve, how everything else plays out. Again, the dollar is down today. A lot of moves with the euro as well, too. So we'll see what happens. You think Powell will stay the course and double rate hike? Someone posted that on the watch list, and I really like that comment. It's definitely, I think it still leads to the same situation, but we're going to find out. I mean, some people are talking today about what Powell is going to do and how it's going to behave. I think the ECB emergency meeting kind of sparked some things for me, but some people are saying that the market could still be relieved if Powell goes with 75, but nobody really knows what the consensus is. I think, you know, a lot of people on Wall Street are very confused about it, but then at the same time, the Fed funds are pricing in something. So we will see. We only got a couple of hours, 20 seconds left, ladies and gentlemen. Post any plays, call it out, and get ready. 75, and we rally. Round one, fight. We might rally on 75 for a little bit. Again, there's one thing I could say about today. Just, you know, that first move isn't going to be the first move, if that makes sense. You know, whatever happens by the end of today, it's not going to summarize it for the week and the market's reaction. Again, the market reacts a little crazy. So here it is. Microsoft's up. I like the Spotify. Qualcomm. I'd play the Qualcomm if I had certainty the market was going to stay good today. Otherwise, that just gets a little more difficult. VGK, Spotify. Let's see if Boeing keeps going. Yeah, Spotify's up a decent amount, 3% on that one. NASDAQ up 1.1, SPY 0.97, Dow 0.8. Shy spread is huge. I'm sure Shy's not even down as much as TLT, but bonds dropped a lot today, even in Italy and globally as well, again, because of the ECB. But Shy's up a quarter. TLT is up 1. Let's see. I think SPY puts. I mean, I might go with another one of the dailies. We got one of those, but really we're going to have to see. Surprisingly, those Tesla puts are actually up from yesterday. So some of the volatility is kind of kicking in here today. Then Beto, you guys have way more gains on those Beto contracts. They're up almost 400% on the ask now. Again, crypto stocks are still kind of getting clobbered here. Maybe that's affecting Tesla. I didn't think about it because isn't Tesla negative on their Bitcoin right now? If Bitcoin's at $20,000, didn't he get it in at like high 20s or 30s or something like that? Amazon, Big Red, Tesla, TLT. Watch if TLT comes down. And again, if the dollar flips, kind of like yesterday. 27 to 30s, yeah. So maybe that's having an outside effect. Again, all week, no matter what's happened here in the market, crypto has been absolutely clobbered. So that's been getting in the way. UNG's making a high. Again, I closed out of the UNGs. JP Morgan on the low. Banks are up about 1% right now, 1.28, but some are slipping. Nat gas is back up. And see, the yen is even strengthened here today, too. Yeah, so that's the pre-market level. Maybe it's come back down. Gonna do with the AMC, Boeing. Tesla just went green. I think the contracts even just flipped there. Yeah, contracts just went from positive to negative just on that one candle. Boeing's up 4%, bro. Boeing's killing it. Tesla's up only a quarter. Options went from high premium to flipping. TLT's been selling off here since cash open, but market's been going up. DWAC is popping up here. Holy Spirit, come down. Yeah, DWAC's up 11. Powell is going to be at 2:30 p.m. as stated in the title. Please like the video. We love you and good morning. Roblo green. I think everything's kind of getting a little bit here. Spotify's up 5%. Again, they got upgraded by Wells Fargo. Beto's coming up, but the premiums are still holding. Shy, there it is. So Shy's coming down now. Those two candles tightened up the spreads a little bit. I think they just raised the ask on the Shy, if you notice that. Yeah, cash open. We'll wait till Euro close. Euro close especially, again, you had an ECB emergency meeting today. So again, I mean, if anything made today that much crazier, you literally had the ECB step in unannounced to make plans to change their recent actions, more or less. Yeah, Bitcoin's at 21,000. Jeez. It's coming up here, though, but again, all the crypto stocks are kind of guttered. Tesla's trying to make a move up there. Again, like I said, the premium's already declining. Uber 1.63. So pray for El Salvador. I know I need to know the date of the bond payment. Damn, when do we get a hype train going? Twitch? Oh, look at you guys. Good morning. That's what I'm talking about for Powell Day. Oh, hey, man. Banks suck it. Oh, come on, man. Don't be mean to the banks. I mean, you could be mean to the banks. It's okay. They're banks. Nobody likes banks. I like JP Morgan as a stock, but I feel you. Honestly, everything's up right now. Energy is the only thing that is declining. Energy is the only thing right on the day by like 0.5%. So everything else is good. Tesla's starting to run up here now, 1%. UNG started going up. MSTR's up 5%. Oh, yeah, where's the Baidu? There's Baidu and IQYI or something like that. I think IQ. They're going up on that now. Oh, the Cavill from yesterday, that one ended up selling off here. I closed out of the gas futures with like a $300 profit. They were up in pre-market, so I sold it at $7.51. I said, I don't want to be a part of this Widowmaker trade, and we got it. Bull trap. I just think there's a lot of digestion right now. I think it's hard to say for now, but I think let's wait till Euro close. Let's see after we got the ECB stuff today. And then really it's just going to be determined on Powell and whatever happens. That's it. Like I said, I'm assuming that whether it's immediate or, you know, following the next couple of days, though, it's like I'm leaning towards the bond market and bonds have to get clapped. I mean, literally, the ECB stepped in with their emergency meeting simply to save their bond system. So we're going to see what happens. I'm excited, though. Nice continuation on FedEx. Yeah, they killed it yesterday, huh? Yep, another 2.5%. Shy and TLT have been going down. Dollar tried to come up a little bit, but it's still down a decent amount. SPY still up 1%. NASDAQ 1.2. SPY making a move to 377. Where does this put us? So we're higher than yesterday. I think the real top out level will probably be like 381 until Powell. I don't know if we'll get above there, but we will see. Shy, damn, bro. They just jacked up the spreads on Shy to 80 cents. Let's see. Let's see if another order comes in. Shy's bid is 40. Ask is 80. Yeah, Shy is starting to plummet now again. So pretty interesting considering. Oh, wait. Why isn't that other candle showing up? There it is. TD Ameritrade, unfortunately, does not have a high-low ticker. Apple. Yeah, dollar is down for now. Carvana. They're up 11%. They're rocketing up there. Tesla, another new high. Boeing is still at the highs of 4%. Remember yesterday, Johnson & Johnson, they were struggling. Nat Gas is coming up again. Yeah, Johnson & Johnson was doing bad yesterday, but they're back up here. I do like UMC. Or I mean, I like them as far as, from the beginning and holding them. But I think they will keep their dividend. If not, I mean, that's going to be I'm going to really have a lot of questions for Mr. Matt. I'll be like, why were you bidding on this team? This makes no sense. Okay, now wait, which ones are those? That's weird. They just killed the Shy premiums all of a sudden. The Shy premium just dropped to 45. Interesting. What the hell just happened? Did you guys see that? Bro, the Shy premium just rocketed up to 55 to 80. And then now all of a sudden it just shows 45 on the ask. It's either someone's trying to sell out or they're tripping it out. I'll still take it, though. It's still a good 100%. Premiums are crazy. Just keep watch on it. Again, even the bonds here, too. You're even watching how they're moving. TLT, dude, TLT just gave up 0.5%. Experiment and not call out your price and see how you do. What does that mean? Not call out Shy. It's a good thing. See, so Shy is negative now on the day when the rest. That's a weird one. They're going to try to EWG this one. It is okay. Let's wait till Powell. Fed rates at 98. Yeah, they were even pricing in 100 basis points. Some people are saying that's going to be the real surprise now. But again, if you watch yesterday's watch list, I think it's weird how people are saying most of Wall Street expects something, and it's wild. Use up. Qualcomm, is it killing it? Netflix is even up 3.3. Again, Qualcomm, good antitrust. I thought they'd be doing actually a lot better here. But even AMD's only up 1. Tesla, new high. SPY, 378. So let's see. Where does this put us? We're like at the middle ground of Monday. Again, 381 is going to be that top level we got to watch out for. Wayfair on the high. You said Meta climbing. Yeah, Meta's even up 2% right there. They're getting a candle. SPY going pretty crazy. Even VWAP's going up. Again, Tesla is just leading the way. Amazonian just popped up there. They're hitting high of the day. Apple's up 1%, but it's not moving. Microsoft's leading. Let's see. Is Boeing? Dude, Boeing is still killing it. 5%. Jeez. Wheels up as Goldman sees substantial opportunity. UVXY down 7. Bull trap. I mean, if anything, this gives us cushion, but I mean, the SPY is still at 378. It's definitely an interesting one. I think wait till Euro close, given you literally had an unscheduled meeting today by the ECB. So what that's weighing on, I think, is big. It's interesting, honestly. Maybe it means Powell is gonna surprise if the ECB was willing to step up everything. Yeah, I'm gonna hold the SPX play. That one was $80. It's down to a quarter now, so that one's already down over 50-60%. Powell is gonna be 2:30 Eastern, baby. Like the video, amen, amen. Beto is still going up. Airbnb at 101. Beto and Bitcoin, they're starting to run it up there. Yeah, he called the ECB for. I know. That's why I'm like, I don't know. I don't know. How do you think Powell will affect the banks? I think the banks are going to rely on the consumer. That's it. Unless he says something worrisome about the consumer and also the plan or the ability to kind of flip flop, with Powell flip flopping quickly. That could be a risk, but really I think they should benefit from the high rates, but the banks won't start going up until some of the consumer fears have died down. But that's what I was saying yesterday on the watch list with kind of Powell. Is like the thing is, if Powell really does go ahead with the 75 basis point, just imagine what that means for every other meeting after this, because now that means Powell is willing to talk to you for a month and a half, tell you something is off the table, and then if the Fed futures move, he will throw it out the window within 24 hours. So it's kind of like that could add some risk to the banks there. If there's no certainty of policy more or less, or if that speeds things up, threatens the consumer, so on and so forth. Powell crashed the market. Well, people were talking about that as well today because they're saying that, Powell may just take this opportunity and raise big because it's actually, the market's already kind of clapped. If you won't break anything, but more or less you might as well, weaken or tighten into weakness. That's what the ECB said this morning. So like the ECB, they came out with an emergency meeting and they said it's better we go ahead and do this into some of the weakness rather than waiting more or less. So we'll see how that plays in. That's why I'm saying today just has so many implications. Welcome, ladies and gentlemen. Welcome. So odds are still at 98%. Chad is 75%. So after 30 minutes of voting, 2,000 votes, but only less than 1,000 likes. So, okay, no, 1,100. There you go. It updated. But that's still pretty 75-25. You guys are a little bit better than the Fed futures, but it seems like everybody – that's why I'm like, where did everybody get this? Everybody switched quickly. I wish I asked this question last week. I really did. I really, really did. Who controls the Fed futures? Anybody who wants to buy them, like low-key, we could start buying and shorting them if we really wanted to. But it's definitely a lot smaller of a market, more or less. Why should SHI go down? We'll see. I mean, it's already ran up a little bit here today if you think about it. But SHI will go anything. If rates end up going higher, then the TLTs and SHI should theoretically go down. Again, they inverse the movements of it. I think language is important. He said they don't see 75 and not discussing it. Condition change. Powell could easily sell to 75. I agree with you. I mean, that's what he said. That's why it's so there's so much open for interpretation. He definitely has hedged himself in the past. So we're going to really find out. But it will say something. That's the whole point. So it's like, for me, I don't know how comfortable I am if Powell, this is a guy who signaled for 6 months before, at least 3 months before bond tapering, before raising rates. This guy has moved so slow, has made it such a point to signal things that it adds a lot of fuel to the game, more or less. Like I'm saying, if Powell does go ahead and do the 75 today, just be ready. You are going to get literally any data point will swing the market, because now people will know that will swing the Fed instantly. Does that make sense? Or expeditiously. Inflation is priced in no matter what he does. So I've heard. Powell is the master of kicking the can. I can't wait, man. This is going to be a wild one. This is going to be something about the monetary environment is going to change today. And I think we already got a signal with emergency ECB meetings. So TLT bounced up. Microsoft is coming back up here too, or they're kind of leading the way for big tech. Shy's bouncing up here a little bit. Blessed to see another birthday with the cult, baby. Oh, and happy birthday, Gus. Amen. Gus. Let's go. You ever seen the movie Benchwarmers? What was his nickname? Was it Gus the Bus? There's another one, too. I like that name, Gus. God bless you. And happy birthday. Glad it's another one with the cult. Gus the Bus. Gustavo Fring. Okay. Y'all went from like nice baseball movie to like Breaking Bad. Okay. Amazon coming down a little bit. So is Tesla. Microsoft very, very strong. UNG chilled out for a little bit. Boeing is a behemoth. Let's see. Again, energy's the only thing down 0.5%. The closest thing is healthcare up 0.75%. You have 477 names up on the SPY. Literally, you have nothing down right now. You have 27 names down. So, like, everything is up right here. Verify your votes in the poll. I honestly think Powell might do 100. So that's where some people are saying that's the real surprise. But then again, I'm glad this morning Bloomberg actually acknowledged it. They did say that some people would see 50 as a surprise. Some people would see 100 as a surprise. So it's very, very hard to say. Welcome to the chat. I cannot read that one. Yeah, I cannot read that one. How do I say that? Someone has to teach me how to say that. I hop in. I can't say that. Holy VIX, you see that? Holy VIX is the holy dollar. That's it. See, dollar's down a lot. Dollar came up a little bit, but it's still selling off again. I think this has been our best indicator of the VIX, more or less. It just doesn't move as much. Where's oil? Oil's still down 0.6. 761 here is great on natural gas. He promised to act if inflation will not go lower. Doesn't mean he's supposed to act hawkish. I'm telling dude, it's going to be crazy. There's so many points to all of it. I just think the problem is the speed of everything. That's it. Is that the report only came out 2 days ago. It would require Powell to make a move really more reactionary rather than in control. And again, what that means for the market is the key. The market is ripping and VIX is down. Well, finally, we'll find out here. Again, today is we sold off a lot the last couple days. This is kind of setting us up for cushion, but honestly, I think today right now, cash open, Europe is killing it. Europe in the ECB, you got rid of one situation with the Italy bonds that was kind of, worrying credit markets overseas. So that definitely helped out today up until we get Powell, and Powell has the power to either add to this or completely flip this around in a very dramatic fashion. I could smell the fear from the anti-Powell crowd. I smell the confusion. That's all. Like I said, I mean, it's I wish I asked the poll question a week ago. I feel like if I asked a week ago, the contrarian bet would have been 75 basis point. Again, the market, and that's why I think it's going to be so difficult for Powell, is that can we really say the market consensus is somewhere when it's only been like that for the last 2 days, and so many people are just I don't know if everybody is caught up. So get ready. He said, no fear. We just hate his transitory ass. Okay. He wants to look like he's in control when we know he's not. If he admitted they were all wrong and did 75, that would be best for restoring some credibility. It would. And somebody posted a good comment on the watch list. They said the fact that they haven't done this in 40 years doesn't make, it has nothing to do with anything. And I agree with that to a degree, but the point is that once we start entering this realm of 75 basis point, 100 basis points, you have to ask yourself what type of environment warranted that the last time they did that. So that's how I'm kind of viewing it, where it's just saying you got to realize if they do start moving into that bigger size hikes, then it just starts to say, like, we're dealing with an inflation level, or we're dealing with an environment that we've only seen a couple of times in history, meaning it's getting out of control. He could blame unprecedented inflation. Might be able to. He's not trying to shock the market. Probably multiple 50 basis points. We got 75 in 1994. I know I keep seeing. I thought 94 is a half. I'm going to have to actually check this one. SPY hit 379. A little bit of a mini top. Dollar is still plummeting. Google came down, but I think with the dollar down, it's going to be good. Watchlist is your prediction. Bonds will drop or TLT. I think TLT will drop. Bond yields will keep going up. My theory is the only way inflation really gets broken is if you break the bond market. That's it. Meaning all the yields are going to probably, God forbid, even double from where they're at right now. I know it sounds insane, but that's kind of what I'm getting at, is that it's kind of literally the reverse of 2019's TLT, where it's like no matter what, the rates had to go down. In this case, it seems like no matter what action is taken, I think the bond yields are going to start going up by a good margin. That would be crazy. Doesn't sound insane. Well, again, that's just, I think the only way that's what's showing. It's like, all these people around the world are trying to bring down inflation, and every time something happens, whether it's bad data or an action to bring down inflation through Fed policy or central bank policy, what has happened? The bonds go insane every single time. And that's, again, even ECB is stepping in now. ECB says they want to do stuff, but what happens? The bond market starts flipping out. So it's like, in a weird way, until the bond market is able to find something, then I don't know if you could, I don't know if you're going to get rid of inflation if the bond yields still stay this relatively low. Oh, yeah, it was 1994. They did have the 75 that one time. They did 50 in 94, and then they did 75 in September to July, or to November. That one slipped in there. So then it'd be the first in take for 30 years. How do you invest in yields, or should you buy? No, I wouldn't. Pretty much we've been shorting the bonds, but you got to be careful, because that's the thing. Even what I'm saying with the bond market breaking, I hope a lot of people have bet on that for a very long time in Wall Street. That's another widowmaker trade besides UNG. People have tried to short the Japanese bonds in their system for years and have been blown out the water every single time. So, like, the way to play it is either you wait to invest, or you short the bonds if you really do believe the theory. I grab SPY puts, maybe a daily. I already have one that got clobbered from yesterday, but I'm still open to a lot of volatility plays for today. Did Volcker actually raise $850 in a month? I believe he did. Italy, German 10-year spread tightens 30 basis point to 212. So a little bit of a drop. SPY coming back up. Again, we topped out at 379 right there. If we get to 381, that's going to be the higher level we want to see. Appreciate you. Information, positivity, all of it. God bless you, my friend. I appreciate you. I'm glad to share this moment today. I can't wait to see what happens. So keep it positive, too. Again, today's going to be a day where probably a lot of you will disagree with each other and have a lot of counter plays. But keep it positive. If you got information, a good discussion, keep it going and have some fun with it, baby. Have some fun with it. It's only been 27 minutes here, and we're already up 1.6 on the NASDAQ, 1.4 on the SPY, and then 1.2 on the Dow. Volume 10 million in 20 minutes, pretty active. SPY going straight up. Dollar is plummeting, so that's good there. But I'm worried about the cushion that's leaving. Fed has established year-end Fed funds rate months ago. Wouldn't that already be somewhat priced in the bond market? Uncertainty is bonds is inflation. Well, yeah, and pretty much what the Fed is establishing a target and what they think, but then the market will operate different. That's what's been happening. You know, the Fed was saying we're going to be at 2% by the end of the year, and since January, the Fed future said, nah, you guys are going to 3. Now today we're talking 3.75 to 4. That's the thing. If the Fed goes 75 basis points today, all of the long-term expectations are going to go to 4%. And then even the Fed's dot plot will still probably lag that with where they see it at, both off of what they communicate and signal and what their expectations through the dot plot will reflect. The Fed doesn't hike 75 with market expecting it. They'll add another layer of uncertainty. But that's the thing. It's like, was the market... That could be a play Powell could do. If Powell raised 50 basis points, I assume he will say something along the lines of the market, even though the Fed futures priced it in, I don't believe that the market was expecting this. That's it. It's just like everybody tried to be all like, bro, it was just on Monday that the Wall Street Journal and JP Morgan changed their mind. That's it. So I don't think people changing their mind 2 days before the event, a day of the event, I don't think it warrants as the market was expecting this, hence the gap down in the market and everything else that we've seen. So it's like, I think if Powell wants to double down on that, he might use that as defense if he doesn't go as aggressive as some people are pricing in right now. But we're going to find out. Again, this little conversation, this back and forth debate, this is what makes Powell so important today and makes the implications so large. Because really, I don't think anybody knows what he's going to do. He's bullied into a corner right now. And really, you know, the both options either way, I don't think it's going to sound pretty. I don't think it's going to look pretty. And I think everybody on either camp is going to walk away with a surprise today, myself included. You know, I'm going to be surprised. You're going to be surprised. Whether everybody who voted 75 or 50, every single person is going to get surprised by something today. And then once we kind of know the truth and know what he's deciding to do, now let's talk about what that means for the future, right? Because whatever Powell does today, it is going to set up his next move now. He's going to put things on the table. Now when he says something's on or off the table, it will even have a whole new meaning. When Powell says he's going to follow the market, it's going to have a whole new meaning. This is a lot of drama. This is a lot of drama. Honestly, this is like Powell getting caught by his girlfriend cheating. You know what I'm saying? Like, she's like, literally, we just saw Powell's phone, and now Powell, the next thing he says today is going to change how we view him forever. That's it. He's either going to be honest with it or he's going to start lying, and then whatever happens, either way, you see what I'm saying? Because it's like it's one event today. Everybody's going to get surprised. Powell's going to get surprised. She going to get surprised. And then now whatever he says, she going to look at him different for the rest of his life, Powell. And that some of you can relate a little too heavy. You know what I'm saying? But I'm just saying that's how it is. This is the court of law, the court of Powell. Oh, man. That's it. He says, I won't be able to look at it's on the table ever again. That's it. After today, I just can't trust you, pal. I just can't trust you anymore. I thought you said this. I thought you said it's off the table. How come it's on the table? Who's 75 basis points, huh? Who's 75? You said I don't got to worry about 75. You said that 2 weeks ago. Now I see 75 and it's priced in? Oh, okay. I'm just saying. So watch out. Today's going to be fun. I know that analogy is probably way too close to home for some of you. Some of you are like, I should call her. Some of you are crying about it. It's okay. Don't worry. We got to focus and Talk about a focused peach right there. Oh, ladies and gentlemen, it is Jerome Powell Day, June 15th, 2022. We have already talked about a lot. You already have an emergency ECB meeting that has occurred today. You got the SPY coming back to the highs. And now you got Bradley Frizzle and the peach, ladies and gentlemen. Oh, no. God. Oh, man. God is good. God is good, baby. Finger to the sky. Shout out to Peach Nation. Shout out to Bradley. That's what, bro. You know what this is the most effed up part about all of this, Chad. Seriously. The most messed up part about all of this is that Bradley Frizzle has more consistency and credibility than Jerome Powell. That's sad. I love you, Bradley, and you did good. And that's what we talk about with Ultra. I'm just saying, you are way more consistent, and the peach has had more stability than Jerome Powell in the last 24 to 36 months, which is mind-blowing to me. If you think about it, it's mind-blowing. So God bless you, Bradley Frizzle. Some of us needed that. Yeah, we could count on the peach. Oh, man. Oh, man. That one was, thank God. Thank God. Thank God. So God bless you, Chad. Just get ready for today. It's going to be a big one. You missed the peach. Kind of, not really. It just came in. So kind of good timing. SPY at 379 again. We already topped out. Tesla going higher. NASDAQ 1.7. I don't think we've been up this high all week. So Monday to Wednesday, I don't think we moved more than 1.7. So let's see where we go from here. Stock market game 7 today. Hey, now this is like game 6 because Powell could either secure the win or it's going to leave it to a nice, game 7 tomorrow or Friday with the option expiration. Remember, this is still the turn, believe it or not. Oh, money is on the sidelines. Great reminder. So you guys remember big money rug pull, SPY coming up, VWAP going up. Tesla hitting a high. Again, you have only 25 stock names down on the S&P right now. Almost everything is bullish. I believe the dollar is still going down, and that's doing something. Yeah, that's going to be very bullish today with the dollar not disrupting. But you guys remember big money rug pull? That sound familiar? So, in a way, they kind of have been big money rug pulling in a weird way. Pretty much. This goes to what Mr. Market said, a lot of money on the sidelines. It is confirmed. Pretty much you've been in like the 2 percentile of hedge funds selling out of positioning. So here are the outflows, and you could see it compared on the years. In the last 2 weeks, more money has been leaving and has now set us to a very statistical point of, it doesn't really happen too much, and you can see the lows. But a lot of hedge funds and money managers, they are not waiting for Powell. Let me get you the headline for it. Here it is. Big money in stock market is in mad dash to get out of the Fed's way. Quant traders cut equity exposure towards lowest level of decades. Hedge funds in the largest 2-day selling with shorts climbing. I hope so. You hope. Let's see. So SPY 379.11. Tesla's still at the high. Bro, dollar just keeps plummeting. Bonds are trying to work their way up. SHI's starting to go up, which is interesting. ECB, they're not continuing ECB. They're just they're going to do it differently and add support if they see problems with the bond market pretty much. Ontario sells $750 million of bonds. Homebuilder sentiment drops to the lowest level in 2 years. Go up till 30 minutes before Powell. I think maybe we probably hit a mini top probably around 381. I don't know, before or after Powell. And then it might stay pinned up until there. But a nice melt up would be good after being down as much as we have been. So we'll see. Bonds maturing. I believe the first set of 15 years and 30 years. And again, today is the first day of actual balance sheet reduction. U.S. to announce $650 million in weapons for Ukraine. Bro, we're still just sending them guns. And just, that's kind of sad. Just stop buying their oil. We're like giving them guns to fight and die. That's not good. But today's about Powell. Don't get me started. Don't get me started. Just stop buying oil. I think I'm going to stop buying oil myself. That's it. I think I'm going to just stop buying oil. I'm only going to drive my Tesla, or I'm going to just buy an Easy Go. Not the China stock that clapped us, but like, you know, the Easy Go golf cart. Yeah, I'm going to just buy that and drive that around with electricity. That's it. I'm going to boycott oil. All oil. Get an electric car. No, I'm going to get a golf cart. The batteries are smaller, better for the environment. You know what I'm saying? That's it. I'm done with oil. SPY 379.41. Uber's running 3.7. Bonds are about to hit a new high here of the day, a.k.a. this means bond yields are going down if TLT is coming up. Laugh at people at the EV chargers. Yeah. Might have the tables turned. Possible bull trap. I wouldn't call it bull trap as much as I call it cushion, if that makes sense. So at the same time, the higher we go leading into Powell, let's say he does something and it doesn't end up being the worst thing ever, then this could kind of already give us a percentage point of the gain, more or less. So I think it's cushion. I don't know if I'll call it a bull trap, and just simply because we made such a big move in the last couple days, and the fact is, you know, whatever Powell says today, I mean, it could change a lot. So I think it's just still too early to tell until we hear it. Obviously, the best part about today, and let me tell you this now, the best part about today and the level of expectation and everything else is that when the first report comes in at 2 p.m., when we actually get the text, that is going to have a way bigger effect this time around. Does that make sense?
Again, and
wait, is this Michael Saylor?
well, nice to have you with us.
Oh, yeah.
Yeah, thanks for having me.
All right, let's see if
Always. Listen, look to just start off on, we just said it, it's 129,000
defaults.
roughly, coin,
BRB.
average price of
Follow me on Instagram. At the
30,700,
trading
spent
fraternity.
about $4 billion on it. One would anticipate if the price stays where it is, that's going to cause a significant write-down overall. At least your auditors may ask for that. You know, you've talked for years about the financial flexibility owning all that Bitcoin gives you. I wonder if you believe it also works in reverse.
No, I think it's been a net positive. We back-tested our strategy against every other alternative. And if you roll the clock back to August 10th of 2020, when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea.
You can't come up with a better idea. Does that mean that you would actually consider buying more at these prices?
Yeah, I think if you think about Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities. Right, this is Bitcoin's on sale.
We're touching that. We're touching that price right now. It's funny you should mention it. So, is it a great buying opportunity?
Absolutely. Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack.
They're like trying to get him to say it.
Once you understand that, and the fact that it's a singularity,
Sailor's always going to buy. He's been tweeting about this forever.
World, then yeah, this is an ideal entry point to get into this thing.
All right, but you've also taken on debt in order to actually accrue that position, which does incur a certain amount of risk, doesn't it? I mean, I know you've got, 6 and a 1.25 senior notes. They're, 2028. You've also got maturities that are out there, but there's concern in the market about margin calls, about collateral calls, certainly on some of this debt. Can you clarify for us exactly what those are under the covenants that you currently have and how they may impede your financial flexibility?
Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize. And we're 10x over collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow.
If he only has a $200 million note,
the margin call thing is much.
Think about it. You raised that money for Bitcoin. It's not secured by Bitcoin. It was unsecured.
And the Twitter trolls love to beat up on me because it gets them engagement. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8%.
I mean, for reference, Tesla's position is down over $300 million, I think, right?
Junk bond index is from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The $500 million comes due in 7 years after we borrowed the money. So
it's not based on the performance of Bitcoin.
Balance sheet, we're comfortable, and the margin loan is well managed.
All right. Well, you mentioned being Twitter famous. I should add that you helped make me that as well, because we had an exchange in May of 2021 that was viewed 800,000 times. I want to play it for you, Michael, because it's instructive to get you to listen to it now and respond again to some of the same things that you discussed then. Take a listen.
I want to see this.
You do understand how much risk you're taking on here, don't you?
There's something solid there. I mean, Bitcoin
he looks so much more awake
here.
Risky
10 years ago.
Bro, this is like how everybody in crypto be sometimes. I feel.
Like an idea virus before
he was so filled with life here. He had like a tan a little bit. You know what I'm saying?
So again,
now he's like, now it's just like it's
taking this continued risk that we're talking about.
The biggest idea here is Bitcoin is the first and the only legitimate scarcity in the universe. Gold is not scarce. They just found 320,000 tons of gold in Uganda, which would double the supply of all gold mined since the beginning of mankind. So Bitcoin is the ideal commodity because you can't make any more of it. You can hold it forever, and it's programmable. And as I said before, if I gave you hundreds of billions of dollars, you can't recreate the network. So we see it as unique, as a long-term store of value, and it's a commodity and property. We couldn't do this strategy with a security like the S&P index, and it doesn't make any sense to do it with single-family homes, which have underperformed as well. So, we stand by the decision, and we think that 98% of the world doesn't understand the concept of a digital scarcity yet, but when they do, they're going to think it's a magical thing.
Michael, you mentioned this sort of 4-year average as a proxy for some kind of intrinsic value to the Bitcoin network. This thing's only existed for a dozen years, right? So, I mean, the 4-year value, it doesn't seem like something that has some kind of statistical, significance to it.
They've been waiting to talk to this dude.
Maybe it's worked on the chart, but to me, to say that something like book value is a little tough.
Well, the idea here is Bitcoin's a bank in cyberspace, and people buy Bitcoin to store their monetary energy forever. MicroStrategy put $4 billion into the network, and we got less than 1% of the network, like 75 basis points or something. So if you think about how much money collectively has been invested by the Bitcoin hodlers, it's looking like the book value of the network's $450 billion or so. If you look at the daily deposits in the network, day after day, over the course of the last 4 years, and people
tend
coming
to hold up a little bit. We're kind of chilling out. Watch
I think it's
379 and 381
for the monetary energy invested in the network, and because it's unique and there's no other alternative network you can move it to. People that have put that money into the network are committed for the long term.
I guess the other question is, a lot of people have kind of looked at the price action and looked at the asset attributes of Bitcoin and other crypto and said that's really kind of just running in parallel to what's happening on the technology side. So maybe there's no right or wrong price for the coins, but
I'm surprised
there's
he
something
hasn't
underlying it
brought up interest
that's going to
rates.
be the next version of the internet or whatever, and this is the raw material for it. You don't really seem to be in that camp. You just think this is the stuff to own because it has the scarcity properties.
Look, every commodity in the world has looked kind of good in a hyperinflation environment, but the dirty secret is you can make more oil, you can make more silver, you can make more gold, you can produce more corn, you can even create more real estate. Bitcoin's the only thing that looks like a commodity that is scarce and capped. And in the crypto world, look, the crypto world is 19,868 likely unregistered securities, one digital commodity called Bitcoin. And so this Bitcoin is unique because of its provenance and because of the Bitcoin mining network backing it and because of the protocol. There's nothing like it in the analog world, and there's nothing like it in the crypto world.
But to Mike's point about the
so this is Mike
short
Saylor,
shelf life, Michael, and the
MSTR.
limited
People were
history
worried
we have
about
to
the
go
margin
on.
calls, a
What
lot
do you
of
say to
things.
those who
That's what
argue,
we're listening to right now.
It's been incubated in a period, a long period of cheap money and stimulus and money growth and M2 growth, and that if that era ends, why should the price appreciation have anything to do with its short history?
The price is appreciating because there's a fundamental need for 8 billion people in the world to have a store of value of their economic energy that is beyond the reach of a corporation or a government, and that cannot be debased by any individual institution or nation state. And in the 19th century, that dream was the gold dream. And in the 21st century, that dream is Bitcoin. And, you know, it's not hard to go find someone on the street that wants to find a way to preserve their life savings without it being stolen by a bank or debased by a government. And so Bitcoin meets that need. Nothing else in the world meets that need.
Michael, you indicated earlier that this is a good opportunity to buy more. You bought, I think the company bought 4,827 coin in the first quarter. Do you have the cash flow to actually buy more now if you really wanted to?
Yeah, the company continues to generate cash flow, and from time to time, as we have excess cash, we're going to buy more. Our strategy is buy it and hold it and sweep our free cash flows into Bitcoin.
Yeah, what about buying your bonds?
That
they traded a
sounded
pretty
so
significant discount.
I want more Deuce. Come on, Sailor. I want the old Sailor back.
The securities market is very volatile, and I understand that. But our strategy is levered long Bitcoin. So our investors, our equity investors, our securities investors, they know that our strategy is to be long Bitcoin with responsible use of leverage. We intend to be transparent.
Dan Snyder
and
declines
to
to
that
testify about
that makes us
NFL misconduct.
predictable. And then all of our investors can decide whether they want to hedge their portfolio.
Yeah, I mean, I wonder, when it comes to transparency, do you think, given the complexity to a certain extent of what's
And
going on
targets
right now, you're able to provide
Wally World
that clarity? 20 years ago, I know you signed a consent decree to do that, to make sure that things were as, not opaque at all at MicroStrategy. Does this period we're in sort of make it more difficult to do that?
I don't think so. I think we've gone to great lengths to explain to our shareholders what our balance sheet looks like. They have access to all of the notes, the details on all of the notes, the converts, the senior secured note, the Silvergate loan. I think that's well understood. It's posted on our website. We have very detailed investor calls where we discuss that and answer questions.
This is him telling you to look it up before you get.
And finally, to the extent that you are sort of a leader in terms of proselytizing for Bitcoin and followed, as you pointed out, very widely. I'm sure this interview will get a great deal of views long after it's been concluded. I mean, what do you want to tell those people who perhaps bought Bitcoin on margin because they've listened to you in the past and find themselves obviously in a deeply negative position, if not having to be completely wiped out in their account where they have the Bitcoin?
The Kanye.
Look, if your time horizon is less than 4 years, you're a trader. I don't think you should trade anything unless you're a professional. You do it for a living. If your time horizon is more than 4 years, you can reasonably call yourself an investor. And the Bitcoin savers
Man, that
or
is not what your
maximalists
Twitter
have a time
says.
horizon of 10 years or longer. So my advice to anybody investing in Bitcoin is, unless you're a professional high-speed trader with proprietary software,
Oh,
you
yeah?
ought to hold it for at least 4 years. And if you want to focus on something, focus upon the 4-year simple moving average. It'll keep you from giving yourself anxiety. And that helps you to understand where we are in the life cycle of the asset.
So you don't have any anxiety either right now?
Look, if your time horizon is 3 months, you should hold the currency that you have your cost in. If you want to be an investor, you can invest in stocks, but that's got its own risk. If you've got money you want to save for a decade, then allocate that money to some scarce, desirable property. Real estate might work for you. Trophy assets might work
He
for
said
you.
something
but Bitcoin
scarce.
is scarce,
With
desirable
digital
property
scarcity.
available
You
to
ever hear
everybody
about
on
it?
the planet, and it's the most egalitarian,
I'll find something
utilitarian
scarce.
asset they have access to. So I'm proud to promote
Yeah,
it.
the host sounds like my friends in high school.
Well, Michael,
who
we're
would
always
try
happy to have
instigate
you on
everything.
and have these conversations. They're quite helpful. Thank you.
I feel like
Yeah, thanks for having me.
Yeah, that I don't know. That didn't seem happy.
Meantime, the Supreme Court is in
He was like, "Damn, you just did him like that." Like that just sounded like he was instigating. He just wanted to see Saylor cry. So I guess the good part about it, honestly, I mean, I learned something from there, is that most of MSTR's loans, they are unsecured, meaning people gave him billions of dollars backed by nothing. So only 200 million of the 4 billion that he put in. That's why people were like, only 200 million. It's 10% of what he actually has. So you have to think about that. He sold a bond for his company, an unsecured credit bond. People gave him $4 billion and he said, I'll pay it back, but it's not secured by anything. It's secured by the full faith and credit of his company. So that means people believe him. So technically, he's not really over-levered. It depends how you want to view it. I mean, if you took your bond capital and threw it all into the one asset and lost money, I mean, and it doesn't come up in 4 years, then you're fucked. Again, he'll default on the bond, but 200 million of it is secured by Bitcoin. That's what they mean by the leverage. That's the margin call where, again, he has to, if that 200 million goes down, he might be required to either place capital up front or do whatever it means, or it's backed by, collateral where he could liquidate the collateral, pay back the 200 million. There's no risk. Everybody gets their money back. Again, it could probably lead to a loss for him. So that's at least good. But again, that's the thing I'll tell you right now. I don't know. It sounded like a different Michael Saylor. I would go read the disclosures of that company, and I would make sure you actually go through and read it, because I feel like we're gonna look back on some of these videos. Just give me the old Ben Bernanke vibes, or again maybe like transitory and Yellen saying inflation is coming down. So always look it up yourself and see. But I think the margin risk is a little bit lower. If anybody, it sucks. I think Tesla low-key might be getting a little bit more clobbered. I don't know, but my MSTR is 4 billion. But think about it. Tesla has 1 billion, and I think that 1 billion is probably worth 700 million right now. Scarce and desirable. Scarcity. He said some good stuff. Some of y'all were getting mad offended. I took it personally when he said real estate didn't perform the same. So I was like, does that mean real estate is undervalued based on that logic? I don't know. Anyway, I'm not going to get into this. But it was, what he was saying about you could make more gold, you could make more silver, you can make more real estate. Some of you guys got offended by that. But what he was referring to is that they just found more gold in a mine, right? You could find more silver and silver exploration, stuff like that. You could build real estate by literally, you could take land and build it 60 stories high, and boom, you just created 1,000 more houses. So I think that's what he was getting at, more or less, than absolute. You can't do anything. That's it. We can make more gold in a factory, and we make more real estate land. I don't think he was saying that, but that was very interesting to watch. I liked it a lot, and good to hear from Saylor. That's kind of been the drama, especially with crypto. Again, you see the market today; it's been chilling out a little bit, but. Bitcoin this whole week has been absolutely, ever since the weekend, has been absolutely demolished. He really basically said real estate is beneath him. Said, yeah, some of you may like real estate, but I just want something scarce and desirable. That's all. Who is holding the unsecured bonds? Probably a couple of hedge funds and banks. You could check that up. I'm not too familiar. I could probably go look, honestly, if I really wanted to. That little segment killed SPY momentum a little bit, but this is kind of what I'm expecting here. We were talking about it where I don't think we're going to run up all day. We've seen this on the Fed days. It'll kind of make a nice move. It'll hold up. We might oscillate a little bit on the VWAP for some time, and then that's it. Let's see. MicroStrategy. Dude, they haven't issued any stock since 1998. That's kind of good. And then, well, you still got only 28 names are down. Energy is the only sector down 0.35 right now. Powell, like it says in the title, Powell is speaking at 2:30 Eastern. Please put your vote in on the chat and make sure you like the video. You are, Chad, out of almost 4,000 Chad votes, 74% of you think that they are going to be raising 75 basis points today. ARK, oh, wow. They're doing good. ARLP's up too. Coal looks to be doing good, even with the rest of energy down today. Energy wants to go positive, though. I feel like we're just we're waiting. Is 7.5 now bullish? Arguably. I think everything is just arguable. It's very, very hard to tell. So we'll find out. What's my vote? I genuinely don't know. My vote is that either way, the bond yields go up. All right, and take me on that by next week. So pretty much I'm saying by the time we look at TLT and the bonds by Monday, Tuesday next week, maybe Wednesday at most, I think bond yields are going to continue to rise through the 10-year to the 2-year. That's it. Otherwise, I don't know. I don't know if he's going to do 75. I think, in a weird way, I think he should do 50, but I feel like Powell is in my history with Powell, he will listen to the Fed futures, but they've never moved this fast. That's been the problem. So I'm kind of in the 50 basis point camp, more or less. But it's very hard to say. Crude inventories rose 1.96 million barrels. So again, some oil inventory numbers. See how this moves some things. It could affect the dollar too, but oil dropping a little bit on that. But he's been moving slow this whole time. I just think it looks very panicky if he goes 75. That's it. Like, I don't know. It's just if you go from literal, being slow. AMD's dropping, surprise building crude. Crude, it didn't move too much off that candle, but there's kind of been delayed reactions with that. So watch out. Germany's Habeck says Russia is trying to unsettle and drive up gas prices. Mm, 75, they're taking inflation seriously. I think 75, they're acknowledging that this problem is worse as though this is now worse inflation, and it's really as bad as the 70s and early 80s and 90s. That, and again, I see 75 as a admission of panic, pretty much. How's it panicky? He's doing what the market is expecting, because I don't believe the market is expecting it. That's all. Just, again, if you asked this question 4 days ago instead of 2 days ago, everybody would have said the opposite. Like I'm saying, here's the Fed futures. Like, are we really going to say this was expected when this was a no shot 4 days ago? Like, literally no shot. Not one person in the market, literally such a small margin of people were expecting 0.75. SPY's coming down. You got oil numbers. Oil didn't really move off that, but we're coming down here now a little bit above open, back to 377. People would have laughed at your face if you said 3/4. Yes, and just 4 days ago. I'm not even saying a month ago. I'm not even saying 2 months ago. I'm saying 4 days ago. So that's what I'm saying is like I just genuinely I think the media is pushing this idea that it's priced in or expected. I think the Fed futures are playing along, but they weren't playing along until the Wall Street Journal dropped that article. You guys were watching it live with me. The odds were at 26%, around 30% for June, and then all of a sudden, all day we were chill, even though the market was down 2-3% up until the final portion of the day when that Wall Street Journal article came out. Not one person, the market did not price this in. So that's where I think we're in the middle of repricing, but I don't know if Powell is going to do it. That's why I'm saying it's confusing. But the thing I do think I know, the thing that I'm betting on is that the bond yields are going to go higher by next week. That this leads to higher bond yields, and no matter any way we look at it. His bullish still puts are cheap. There has to be some money that exchange. Well, the thing about the Wall Street Journal article, he was like the editor of the Fed portion. So that guy, Michael, whatever, he has a good connection with the Fed, and that's why people took it seriously. But again, you guys watched it here live with me. That's why I'm like, it wasn't really, even on Monday, up until the last hour of Monday, this wasn't priced in. He does either when it hurt the Fed credibility. He doesn't follow through original. Yes, and that's why I said from the get-go, no matter what, Powell is kind of screwed. But that's why it's like I don't. That's why I'm like I think he could go with 50, but it's not like I'm really sold on either side. If he does 50, that was what expected to begin with. In theory, that's priced into bonds. Yes, you could argue that, and then maybe he uses, he goes with 50 and says, we're going to do 75 or 1 point later, but, I mean, who knows at this point? The point is, whatever he says is going to be a problem. That's why I'm like, instead of getting caught up in 50 or 75, I think the easy answer is to just look at the bonds. What are the bonds going to do? What is the dollar going to do? And that's why I'm saying no matter what, though, I think bond yields are going to continue to go higher by next week. And just as simple as that. Because this 50-75, it's difficult, but and hopefully I hope some of you guys see this by the end of it. This is just a lot of media confusion and people, again, just like some of y'all know what I'm talking about. Like literally half of y'all in here would not even think this up until the end of Monday, which is wild to me if you really think about it. So let's see what happens by the end of it. We're going to, again, that's why we're going to see. But like I said, this just changes everything. No matter what happens, it's going to change. Like, did you see what I'm saying? Half of us are going to think it's expected. Half of us are going to think it's expected in a different fashion. It's just going to change all of what Powell has said over the last couple of years, no matter what. So get ready. We got what, like 4 hours? 4 hours exactly till Powell speaks, 3.5. And now, that's what I was saying earlier. Are you guys ready for it? Do you guys understand that, like in past meetings, Roblox price target decreased to 40 by Stifle? But this is what I was saying here, because in the past Fed meetings, usually the report comes out at 2, and then the market moves, but then the big move happens at the press conference. Are you guys following with me? Right? Today, it's going to be a lot different. Simply because if he goes 75, that, like we said, that wasn't brought up recently. And then if he goes 50, it's immediately the opposite of the Fed futures. Right? So what do you think is going to happen at 2 p.m.? That response the market is going to get is going to be a lot bigger than anything you've seen. So that's something I'll bet on right now. I'm holding my plays. Maybe we make a play right before, but that's one thing I think we're going to watch differently than any of the other times we've seen. That first report is going to actually cause a bigger reaction, and then the press conference will be bigger. Say it again. So usually on the Fed meetings, when the FOMC report comes out, it comes out 30 minutes before the press conference with Jerome Powell. And usually in the last 6 months, most of us knew what was going to happen, right? Powell, he made it clear. You didn't really. So when the report came out and said, yeah, we're raising 50 basis point, people were really just looking for little details, what factors they were saying to watch for, any headlines about employment or inflation and what they said. And then everybody would look to see if there was a consensus, if there was anybody dissenting the agreement. That's it. But most of the time, since most of everything was expected, yeah, the changes were very, very slight. You get a response, but it's not anything more than 0.5% usually. But this time around, since there's so much riding on 75 or 50, the Fed futures are pricing one thing. A couple days ago, it was a lot different. Now people are expecting a more aggressive Fed. That initial report, right when it comes out at 2, you are going to get a way bigger move than we've ever seen. In my opinion, I'm estimating this, so we'll see what happens. But it'll probably be a bigger move there right off the bat, and then the press conference will be even bigger. But right when it comes out, it will have something there. Yeah, it's just way more uncertainty and just way more just factors on the table. Oil starting to drop now. Remember, we just got those oil numbers. Again, I think dollar's been down all day today. That's what gave us the bullishness, unless they're not. I didn't even recover there. Side came back down. Seattle Genetics, I'm not familiar, no. You think it's crucial to be at this computer for the speech, or is the digestion? I think both. I mean, if you want to trade it and if you want to get a handle on it quickly, I would recommend that you be here. But if you're trying to setting up swing trades and like bigger swings off of it, I really think the digestion and where the bonds end up by next week will be more important. Oh, bro, those Betos are climbing. 82 on that. Bro, I think we might think about it. We're $2 from the money now on Beto. Those plays 20 cents into 80 cents from Friday. So 400%. Not bad. Still a great play. You would think we would have made more from where we hit it, but not too bad. And then they're going lower. SPY's coming down to the top candle here from earnings, or the top level, 377.63. The dollar truly is the new VIX. Amen. Amen. 100 basis points would put the dollar at 110. You recommend no selling till 2 p.m.? I mean, I would anticipate it. It depends what you believe, but I genuinely think nobody has, like, the Fed futures look confident, but they're not, is what I'm trying to say. I just think there's no certainty as to what Powell is going to do today, and that is what I think is going to affect any decisions or not. You seriously took at the 3-year weekly monthly chart? What's a 3-year weekly monthly chart? Like this one? Right here? In the crack of this? Or do I look at a monthly? That's how you want, I think, weekly by the month, right? People realize this moving Fed futures shot up aggressively. It does, and it was too fast for Powell. That's it. I just think it's too much. Like, in the sense that everyone's like bullshitting themselves. Everyone's saying it's priced in, and I think this shows nobody knows what that means at this point. Again, just because it's going to get to the point where let's find out what Powell really is going to do, and either answer is bad, but it's just like this was a joke 4 days ago. That's it. Nobody would have expected this, but it doesn't mean that Powell won't do it. Why? Because inflation is high. You know what I'm saying? Inflation is through the roof. He did kind of hedge and leave it open, but that's why he's like, is Powell actually going to do it? That's the real question. Think about how many indicators been acting wonky. This year's outlier. I think he diverges 50 and then does 100. You don't think a 10% drop is not pricing in 75 basis points? No, because we were down that almost 10% before the Fed futures hit over 60%. I was watching it. I could probably go back to the stream and show you. Honestly, I should probably do that. Like, that's what I'm saying is like the market was already down before the Fed futures started moving to a certain pricing of that. It was a literal Wall Street Journal article, which is not even economist. It's not, again, it's an editor. It's a Wall Street Journal person, but it is not even like it wasn't what you thought it was. Like again, then JP Morgan. It wasn't even a bank note. JP Morgan followed up after, then Goldman, then Citi. But before that, every big bank, everybody else, nobody was certain until a couple hours before the market closed. So let me see it. Hold on, I'm going to see if I can pull it up. Yeah, look. Look, thank God we stream everything. Look at this. This is 4 hours into the day. Hold on, what's the time? I can't see it. Let me get this out the way. This is you guys are, what, damn it. Anyone's, it's like 10 a.m. 10:50 a.m. my time, 11:12:1. That's like 1 p.m. About what? 2.5 hours, 2.5, 3 hours left till close. Look at the Fed futures. This is live. Fed futures were pricing in 30% chance of what people are telling me everybody in the market is priced in. Yeah, I got to lean in. It's not showing. Maybe I got to just let it run for a little bit. Yeah, 10:09 a.m. It was at 30%. So let's see if I can pull it up one more time. There's us looking at the yen. There's Biden. Hold on. No, it's this. Let's see. That's the bonds. That's the mortgage rates. Yeah. Dude, it wasn't until the last 30 minutes. Come on. Dude, that's a joke. It was the last 30 minutes. And the odds went up to 50-50. Oh, man. Y'all don't feel me. So that's why I'm saying that's why it's like, I like the discussion, though. I do like the back and forth. I hope you guys, thank you for being respectful. And this is the whole idea. We should be able to go back with that. But that's why I'm like, dude, let's, like, for real, you're going to tell me Powell is going to change the plan after literally 30 minutes. Half of the day on Monday, it was a 30% chance of odds, 3% last week. So that's why I'm like, even though we were down 10% on the market, I just don't, it's very hard to argue that this was priced in and everybody now is like, all right, perfect, it's there. So that's what I'm saying. You guys were watching it live with me if you were here. If not, again, just simply going back. And again, that was in the very minute we were watching this tick by tick. Because, again, this was a big thing we brought up from day one, even over the weekend. So that's my problem that I have right now. That's where I'm like, that's the only thing that makes this so uncertain, is that it truly was uncertain. It's not as if we came to consensus very early and fast and that, everybody was on the same page. It was literally just towards the last 30 minutes. What do I expect then? That's why my expectation is just going further. My expectation is the bonds. I think the bond yields have to go higher by next week. I think that's the result of today. I don't know what he's going to do, but I am leaning more towards 50 basis points in a weird way. But I don't really have any high level of confidence. But what I'm arguing is that nobody does. That's my whole point. Is that, like, I can't even tell you what's going to happen, and I genuinely don't think anybody else is saying it with a real level of confidence where you're like, yeah, they're going to. I think people want Powell to do something. I think people think that they need to, and they need a call for 75, and now it's getting popular with it, but I don't know. I don't think anybody has a high degree of confidence to say this is fully priced in, this is what must or will happen, and it has to, with a high degree of certainty. I just don't think that exists. You don't think CPI? You don't think CPI has changed the script? I do think it has, but I don't know if if it's enough time. Again, it was just 24 hours or 48 hours between the CPI report and then the Fed futures getting to that point. We got 50 basis points. I mean, again, that's what happened to me in 2019. The time that I thought Powell wasn't going to cut, but it was priced in, and Powell did cut, but we still hit the TLT because, like I told you guys back then, I said no matter what, it doesn't even matter because either way, the bonds are going to go a certain way. So he might succumb to the market. That's in Powell's playbook. Powell has done that before. I've been surprised by it, but like I'm saying, I think the real money comes from the bonds either way. So we'll see. Powell holds all of them. He does. He does. You think it matters to look at past performance and meaning? No, I think this is probably going to be our biggest meaning, more or less. I could check, though. We could take a look. FOMC. All right, hold on. UUP coming up a little bit. SPY came back to open, dollar and bonds. They made their move. They didn't really quite chill out. TLT did a little bit. So following 6 hours after the release, hold on, let me switch it to SPX. So the biggest, damn, which one was that? May. Damn. Last Fed meeting, we went up 3% from the meeting to the day after, if you guys remember. So the average move is about just above positive 0.10. So I don't know. I don't know if, damn, that's crazy. If last Fed meeting was 3% between the end of the day and then the next coming hours, that's pretty wild. So here is how it looks right now. This is last meeting. Green, I believe, is October. And those are the two big ones. Otherwise, every other one has been fairly negative, but not by a big margin. CYN, new high, peep race. They're killing it still. Remember, they had that EV news last week or 2 weeks ago? Time for some red. The lowest red we've gotten was we hit 2% down at one point, but then bounced the next day and then closed about 1.3. I've not added to the long term with the deposit. No, I said we want to wait till Powell at the very least. I've been waiting for this. And again, holding cash is it's good for our, our balance with the portfolio. Again, before you know it, you'd be surprised with a couple months of stacking up. It'll give us a very, very good cash balance. It'll keep us a little bit less volatile with the portfolio. And then assuming, prices are still where they're at, we're going to have a lot of pickup opportunities. That was the enthusiasm. Inflation will be tame, but we know better. Yeah, and we were already like, I mean, again, that day was May 25th. So where were we? We were like right here. We were already kind of bottom. Now, this was the last Fed meeting, ladies and gentlemen. So we literally sold off heavy into it, and then it came out and then launched you up 3%. After, again, the week before, you kind of had one of those mini 3-point. Honestly, it just might play out exactly the same, low-key. Supreme Court does not rule on abortion or guns on Wednesday. CYM or CYN? I think you meant CYN. We had it up there. A couple people called it out. I'm not going to try. I mean, I traded my one little hype stock yesterday. I thought depending on how the market would play, but I'm going to hold off on those today. But it is moving. It's up 80% or 18%. Last Fed move. Oh, yeah. Oh, my God. Stupid. Yo, you're so right. Remember that? Yeah, you're right. The last Fed meeting in that 3% was because they took off the oh, no. That was the minutes. Excuse me. May 24th was the minutes. Hold on. I had the wrong indicator. I'm an idiot. Wait, I put minutes instead of open market. Yeah, no, they tricked me. Hold on. I gave you wrong data. But I remember that 75 basis point did get taken off of the thing. SPY hitting a new low. Hold on. They're scamming me. There it is. Federal funds target rate. So there it is. So last time, the biggest, actually this one's a lot more. These are from the last year right now. And then SPY's selling off, hitting a new low. So this is from, and it was June 15th. So SPY at the low right now, June 15th was right here. So again, you were still kind of at the lows, or we kind of like bounced up a little bit, did nothing, bounced the next day, and then sold off. And then we got into the minutes. But this one was taking 75 basis points off the table. This is how it looks. So last meeting was the blue line. Where is the blue line? Where's the baby blue line? I can't even see it. Oh, no, that's today. No, it's May 4th. Wait, why is it saying it's telling me May 4th? I'm tripping out. Oh, shit. May 4th is the big yellow one. So we were up 2% and then ended negative. Jeez. So where was it? No, this was the Fed meeting. Then this was nothing, and then this was the minutes. Couldn't see the blue. Yeah, no, I was tripping out on. Blue is going to be today. That's why I was like, where is it? I was getting too excited. But SPY hit a new low of the day. You're still positive, 1.2 on the NASDAQ, about just over 0.5% down S&P. 6J. UNG still up. Oil dropped and popped. Dow futures down 0.58. A little bit of volume coming in. What time is it? 7:55. We were at 20 million on the day. Pretty decent. 30 minutes shy. We're a little bit above schedule. So volume's a little bit more active. This line of thinking could be totally wrong. Someone tell me if I'm right or wrong. Isn't it harder, this time harder for Powell to handle? The M2 supply is overblown. Our parents used to pay 12 to 18% on mortgages like it was nothing because houses are so cheap. The money supply is so inflated that raising rates in this day and age is vastly different from the past. I agree with you on it. And in a sense, it's almost harder because we've been addicted to lower rates. So they might be able to find a way to get the rates higher and you could justify it. But the point is now, with so much debt and other things at certain levels, it's just going to take a lot of changing. In a weird way, this is MMT kind of, falling apart. But that is a very, very good point. But I just think it's inherently, I think it's just different in the fact that it's harder to raise the rates now. Back then, money supply was lower. It kind of justified it. The thing about today is that the money supply is so large and the rates are so low, but we have kind of been addicted to cheap money for almost about 20 years now at this point, or at least since '08. Powell is 2:30 p.m. Eastern, as it says in the title. Make sure you drop your vote on what you think Powell is going to do and like the video. I feel like Powell's loving this. I don't know, man. I don't know. So attacking money supply would be better. I don't. It's hard. That's it. Like that's the whole point. So even to that theory there, what I'm saying even on yesterday's video is that the system is so different now that the only way you could bring down inflation for real is if you destroy the bond market. That's it. Any action that they would take to slow down inflation, it will have a drastically bigger response on the bond market. If you want to raise rates, if you want to stop things, if you want to slow things down, it's like, great, you could bring down inflation, but if you don't think it's going to cost you bond market stability, then you're wrong, because that's just what it's looking like right now. Again, that's what we've seen from last year, even to the beginning of this year. Every single time inflation has gotten bad on the data, or Powell has signaled or made a move, the bond market went haywire. Literally the biggest move since the Civil War. We have moves bigger since '08. We're talking about it even as of yesterday, the day before. So it's like every time something develops with this, the bond market is slowly slipping. And that's where I'm saying that's the change to the system, I think, is that, yeah, you can bring down inflation. The money system is a lot different than what our parents dealt with. However, it's just like if we want to bring things and normalize it, it is going to cost you bond stability. And then with bond stability comes liquidity, stock market stability, and a couple of other things as well, too. Charter downside. Amazon's climbing up here. We're bouncing. Yeah, Charter's down too. Bigger candles there. Good call out. Yeah, Charter, huge reds. What is it? Wireless up. Wireless wires up. Cable subscribers and profit amid price wars. Not seeing any specific news, but they're down too. They're saying 60 to 70,000 EBB customers getting turned. There was an update on that right before. There's a conference, that's why. So Charter is they're having a Credit Suisse conference at 10:40 a.m. So it started 20 minutes ago. So they're speaking at a conference. Amazon, ripping. Tesla's even coming up. Big volume there. Kind of looks like the bounces we had yesterday. Which one was it? Amazon. Amazon's going through the top there. Apple off the bottom. AMD, chip makers, kind of. AMD's, NVIDIA's going up. AMD not as much. Nat Gas clapped again. Charter's coming down. They're speaking at a conference here. And again, I closed the Nat Gas future around this price in the morning, 751. Adobe to report results. When does Adobe have earnings this week? You have Kroger earnings too. Oh, ACAD. They're up. They got Nuplazid. I actually like ACAD a lot, and they're back at those prior. They were up a lot higher, I think, when I made that first video. I like ACAD a lot. They got FDA approval today. Boston Scientific, they're up 4. after buying a majority stake in Korean medical device manufacturer MI Tech. Crypto is getting clapped. GL climbs 5%. Evercore analyst upgrades it. Planet Labs down 20 after satellite image company posted net loss. So these are just updating. Then Wheels is up 30 after getting a nice upgrade. Adobe's tomorrow. That could be a big one. I feel like Adobe usually does good, but hopefully if they give any sort of warning or anything, that'll be ugly. Myrna, yeah, they're already kind of up from the guidance yesterday with the FDA. They said it was more expected. Beto's holding. Bro, those plays are going up to 90 now, so we're approaching 500% on those, which is great. Again, we sold 2 of them to make it free at 73 cents. ACAT, I think, is going up again. Again, they got FDA approval. I liked it. I put this company in a video like 5 years ago. It's good to see their development finally. And then they got FDA approval. It's a irritable bowel. It's a poop company. So you guys know I know my poop stuff. They're about like poop and irritable bowel, I think. I forgot what other stuff it is, but it's good. And then it has other applications. Everybody poops. So Jerome bowels. ACAD. I've looked into them a long time ago. I stopped looking after they got kind of clapped. But they got FDA approval for the drug, I believe, today. I guess you could say you really know your shit. I do get it. Are we in 2000, 2007, or 2008? I'd say we're more closer to 2000 mixed with 1970. I don't know why nobody brings up the 70s. People forget the 70s through 80s led to a 10-year decline, a lot of weird economic and even social changes. I think we're more on parallel with that than anything. Comcast, they could be reacting to Charter there. Again, Charter is at a Credit Suisse communication conference right now. The Amarin 2020 fish pill hype? I don't. Disco. Don't forget disco. Oh, disco. Always good, Habibi. I am king of the disco. Everybody love disco. It's the 1930s. Nah. 1930s, people would get beat. Like, if you talked a certain way. So I think it's a lot different than 1930s. I think 70s makes more sense with the culture. Again, then you had hippies. You had a lot of progressive ideas that were actually progressive then. And, like, it's like a... So I think that's more comparable. 1929 was bad. I mean, unless we get a full-blown debt bubble bursting and deflation and investor confidence really craters and Bitcoin goes to zero, and then Amazon goes back to 22,000 levels. I don't know. Is CMCA responding to now? Yeah, they're dropping now too. Comcast, couple communication companies dropping. Wheat and corn on the high or low? They've been doing pretty bad lately. Oh, corn is ripping. Wheat is starting to go up. But again, they've been kind of struggling here. Hopefully no war. No, we got Ukraine. 70s was Vietnam, and that had an issue, but we'll see. But 70s, you also had very stiff election cycles or a lot of competition, and they meant a lot. The 70s, I mean, we've said it's in the 70s for a while, but I really like that time frame to compare it to today. I have puts on TLT already. They're expensive. I have old puts that came back to life. We have TBT plays that are in the money for this week, and then we have the shy plays for the short-term interest rates. But, a lot of the premiums are already up there right now. I don't think I'm going to add to them. I'd be careful if you were trying to get into them now. We'll see. Yeah, Amazon's still ripping. That's probably leading with consumer discretionaries. Yeah, consumer discretionaries top industry right now, up 1.7. Tech is up 1.3. Real estate's up 1.32. Energy's down 1.39, and materials are down 0.07. '70s had Nixon ending gold standard, oil embargo, and union movements. Yes. And you had people, and the same thing again, what people blamed inflation on. I always think that's the funniest thing, that literally the same exact things we blamed for inflation in the 70s, we're doing the same exact thing here today. Wheat going to climb. American supply was reported this morning to be hard to harvest due to wet conditions. It's good to know. It's been clapped lately ever since those news on like the Russian corridor about 3 weeks ago. It like topped out and came down. So we'll see the kind of the final run. Amazon's killing it. Amazon's up 3.7. Apple's up 1. They're trying to come back. Bonds really haven't moved too much. Dollar is still down, but it came back up. So that's kind of not too good here. But market's right below VWAP. You got about 3 hours till Powell. 3 hours till the release, 3.5 till Powell. Twitter committed a closed deal with Elon. Board chairman says Elon Musk, not 100% sure if this new or old. I think they have a meeting tomorrow, so we'll find out. Twitter committed a closing deal. Yeah, you guys are saying that. Will it take 10 years to recover? It depends on if they make good policy decisions or if there's policy mistakes that are made in the run-up, more or less. That just all depends on the decisions thereafter. That's what happened with Japan. That's what happened with the East Asian financial crisis in the late 80s and 90s there, is that, you know, a good decision by the government can help out a lot of things, but then a bad decision during the midst of a crisis, it could also extend things. So that's the way you could view the duration for any sort of downside, you know, negative market environment, anything like that. Charter expects to lose tens of thousands of broadband customers in second quarter. Yeah, I think I read that one earlier there, and then it started moving. So Comcast, where's Charter? Charter might make another leg down on that one. Don't underestimate Powell's ability to screw things up. Well, yeah, that's what you got to think about, is whether it's Powell, the government, it's like any sort of action to either step in or not step in. That is what has the big effect on how long something lasts. Twitter moving off of that. Charter getting some volume. Again, Amazon just made a nasty rip up there. Alcoa's moving up. The dollar's climbing, but SPY's coming down despite a couple of things hitting the high right now. Japanese and Russia will screw things up. Well, that's what I'm saying, is like all these things can happen, but then once something gets messed up, somebody is going to respond. And how they respond is going to be the difference between a slight injury or something bad. It's like getting in a car accident, and if somebody moves you, how somebody moves you following an injury, that right there could be the difference between you being able to recover or having something that will leave you with a scar or a bigger problem that'll stay with you forever. That's what I'm kind of saying now. It's like right when you get into an accident, it doesn't matter what causes the accident, but somebody is going to step in to try to help, and how they determine to help, depending on how they move things, that could leave a longer lasting damage, or it could really help the recovery, and that will help somebody heal a lot better. So that's what I'm talking about here, and that is what will determine the duration of any downturn or anything like that. So there it is. SPY new low. That Amazon rally did not help. You're still very solid. If anything, the Dow is starting to slip a little bit heavier here. But 376.46, where does this put us? This is like the high of the day of yesterday, and literally yesterday's open. So we'll see. It's not too big. If anything, I think it's the dollar kind of climbing back. Check the euro to see if the euro came down. I'm going to check the yen. Yen's kind of chilling. Again, oh yeah, 20 minutes. European close. Get ready. Because remember, ECB emergency meeting. That's the thing. I'll tell you this right now. The ECB emergency meeting this morning, it makes me feel like Powell might be extremely aggressive. Because, again, if they had an emergency meeting, that might signal that people are willing to do whatever on the sign of a quote-unquote emergency. So that would be the only caveat I would have to Powell being 75 or higher, would be that the ECB came in with an emergency meeting today. Yeah, the euro's weakening. Yeah, euro's just been weakening all day. 3 days ago, they weren't going to raise rates. I know. We brought it up. We showed the stream. It wasn't until 30 minutes left of close. Let me say that to you one more time. 30 minutes left of close on Monday. We were already down. So that means right here. So market was already down 10%, whatever it may have been. Up at this point right here, the market was still only pricing 50-50 in terms of triple or double hike. So between here and today, it is now turned into a future certainty based on those prices. So that's the debate that we have. But again, literally, you did wake up to an ECB emergency unscheduled meeting to announce stability and changes with how they're going to handle the bonds. Because of Italy's bond, they were going crazy. Yes, 100%. But it's, again, they were not willing to wait. So will Powell be willing to wait is kind of the connection I'm making. So 376.37. Charter's at the bottom. Shop is on the high. Zoom is on the high. You have a lot of tech names running right now. Again, Amazon was up. Apple's not really playing along. Microsoft chilled out, but they're still up 1% here. But I feel like a lot of these smaller names. Roku's up 8%. PayPal's up 1%. Let's check DraftKings. They're up 1%, not too much. Airbnb came back down. So did Booking. Snap up 6%. Yeah. Meta 0.75. Chip makers are decent. They're not up 4 or 5%, but they're up a little bit. And then dollar is now breaking out right here, so maybe it's catching up there. Because again, euro is down. It would make the dollar a little stronger, but now dollar's about to go green on the day. That is not good. See if bonds end up moving. Dollar is the new VIX. New high on the dollar today. New low on the market. Yeah, oil was at 117, 118. Oil names are down on the day. If those could come back, that could help lift up this SPY. Right now, though, there's so many names that are up. So now there's 131 names down. Again, 30, 40 minutes ago, it was literally 24 names down, but every industry is still positive. Actually, utilities went red now, and then Dow and the consumer staples. Dow is still positive, but the more defensive names have dropped. You could use UUP or DXY, and I think there might be a future for the dollar if you want to track it on Thinkorswim. TLT, I think TLT is going to have a wild ride in the next coming weeks, or next coming week even, and I think we're going to see higher yields after today. Just how it gets to there and the market reaction and the volatility, that is the unknown as of now. I haven't shorted oil yet. We're still waiting on that. I'm still waiting for one more peak and then the oil short. Need to short oil ahead of Biden me. Dude, I think that Saudi meeting is so weird. Because usually I feel like they would come and meet us. We're not the ones going over there. They said they're doing it for some other stuff, but and then even then they're about to throw all the Khashoggi stuff out the window. ECB, European Central Bank. It is like the Federal Reserve of Europe for the EU. So new low again, or we're kind of flushing a little bit. I wouldn't say flush, but you're testing the low again. This is like a higher level of where we were at yesterday. This is at opening levels, so let's see. Thinking 50 basis points, but more frequently. Or if he does 50 basis points and then he could open up the door to 75 or 1. But again, the problem is Powell just has never had to be in this position when the Fed futures were pricing exactly what he said he wasn't going to do. Higher basis point, TLT will go up or down. I think immediately, I don't know what's going to happen to TLT. So there might be a chance that TLT even rips up after the announcement. But that's why I'm saying watch in the next week, because eventually, as people digest it, that whatever way he's chosen is a bad option. Again, if he goes 75 basis points, do not underestimate the market to panic off that in a couple of days. That's why I think the bond yields will reflect that, and then vice versa. If he does 50, I think people are going to say, "Oh no, he needs to do way more," and the market is going to price in way more aggressively, and they're going to do that through the bonds. And at the very nature of today, either way, the rates are going up. So in a midterm effect, I don't know about instantly, you should theoretically see rates rise, which would mean TLT and the bonds dropping there. Elon says he will most likely vote for DeSantis for president in 2024. Myrna's on the high. Myrna's ripping right now. Again, they had the FDA stuff. They were only up 1% in the morning. Now they're up 6%. I don't see the Elon thing. Oh, he said, but DeSantis has a better chance of winning. Damn. He's Florida man supporter now. There it is. Axios. Yeah, he had like a tweet thread. Says he's leaning towards supporting Ron DeSantis in 2024. Who are you leaning towards? DeSantis. Oh, man. Yeah, I guess so. I think a lot of people would choose DeSantis over Trump in a weird way. Man, I think a lot of people will take anything at this point. This is what sucks, man. It sucks that every election boils down to this. Or just like every election just goes, I'll take anything else. That's all it's turned out to. SPY 376.20 again. This is yesterday's level. And classic. The lesser of two evils. Amen. That's what they say. There's no other way to get controlled than doing better or worse. That's literally it. That's the unfortunate part. So 376.17, where's the dollar? TLT is about to hit another low. If the dollar starts climbing again, it could go positive. I think that'll be key. And then oil is starting to move now. Dollar VIX starting to wake up. Yeah, a little bit. 376.14. Watch consumer discretionaries like Amazon And then watch industrials and healthcare, and then financials to go red. Those would be the next industries if we're going to see, like, you know, kind of everything turn. So look at XLV, they're at the bottom. They still got a gain, though. XLF, same thing. Again, everything's kind of turning here. So these would be the next industries. We went from 24 names down to about 150 now. Market is seriously getting ready for some wild shit. It's going to, I'm telling you, this one, I'm very excited. So I think we're even going to make a couple of trades on the fly. You know, we're going to see how it plays out, but we have a lot of open positions. We got everything from Beto to even I got wheat still. We got the oil, the yen, all of that. So we'll see. Often are the Fed futures incorrect? Never, in the sense that the Fed learned this back in the day. So 50 years ago, the Fed learned that they should do what the Fed futures are pricing in because they don't want to upset the market. So in a weird way, they've had a 50-year correct track record for every single Fed meeting. And Powell upheld that once at a tricky meeting in 2019. But that's the thing. Today's meeting is a lot more trickier than any of the other Fed meetings, I would argue. So, but for the most part, they have listened to the Fed futures for over 50 years. The 3 bars on the high-low is the velocity. There's 5-minute velocity, 1-minute velocity, and 30 seconds. APTV, that just showed up on the low ticker. APT getting clapped. APTV. Is that another communication stock? Active reader interest increases. I'm not seeing any news on that, but that's a pretty big drop. Yeah, there's no news on that one. Nothing on the wire. Nobody's even talking about it. Chad has it. Execs say challenging near-term events impacting customers, impacting our ability to produce. So they're kind of guiding down more or less. They're already at the low. Eyes on Husa. That went crazy. APTV, I think they're just guiding down on customers, and that's dropping. It's what? It's already 3% in like 3 minutes, 4 minutes. Yeah, Target's killing it. I don't know why. They're up 3, and then Walmart's down 1.2. Volatility seems less. Today's more so anticipation. And then again, the ECB this morning and things kind of chilling out, even oil chilling out the last couple days. It got us into more anticipation mode than anything. What strike on the 23s? I think I have 95s, I believe. So, and I got it at the beginning of the year. That's the crazy part, is that 95s are like actually, I mean, what, we're like 10% out the way now? Dude, this is like still like a 10-year low. But, I mean, the 10-year and all the other bonds are doing that. Euro close, push incoming. Yeah, we got 4 minutes. Maybe it doesn't, though. Because, again, I think Euro was one of the bigger catalysts today. So we'll see what happens. And then APTV, is that one still getting clapped a little bit? CEO just made comments on their customer base. Chad is pricing 73%, 50 basis point off of 5,000 votes. Wow. We almost have 2,000 likes, too. So God bless you. Get ready. Get ready. Chad VIX is high. Dude, I'm telling you, this is one of the most important Fed meetings we will ever watch. Again, just there has not been a situation like this where the Fed and Powell have been pushed into a corner. Numbers at historic highs, inflation, combating all of it. It's a wild one. So we're gonna see, ladies and gentlemen. We're gonna see. Time in Cali. Cali is going to be at 11 when the report comes out, 11:30 for Powell. But like we said earlier, this meeting is so important. The first release that you get before Powell, you are going to get probably one of the bigger moves that you've seen. 9% chance of 100 basis points. No way. I'm seeing 4%, but still pretty wild. And then yield curve chilled out a ton today. And then the dollar keep climbing. SPY bouncing a little bit. Dollar came down a little bit. We might get a little bit of a mini rally here, or maybe back up to VWAP. Because, again, dollar dropping today, that really helped us go up, and then it started climbing back. So, I mean, this is going to take us back to opening levels. There's a 9%. There's 5% chance of 100 basis points now, pricing in around like 90-something percent for the triple rate hike, and then that's it. And we've already had our discussion a lot here today as to why we still think it's not priced in. So let's see what happens next. Okay. Powell puts 100. Well, the real question is going to be, and again, that's what I'm saying. It's like we've talked about so much, but the thing that's unknown, we don't even know what questions he's going to get asked, and however he responds could be wild because for real, he may open up the door to 100 basis points today. So whether he does 50, whether he does 75, that is, I think, in the cards that somebody may ask him about. I think someone is going to ask him without a doubt what he thinks about 100 basis points, and just get ready for when the algos start reading that off the headlines, even when you start reading it too. Or he may open the door to QE. He may, but I doubt it. I think that's the last thing, especially with inflation kind of surprising the world on Friday. Last thing you want to do is talk anything about cutting rates, because then all of the degenerates will just start buying the dip right now. He said he'd do whatever it takes. Yes, but don't underestimate these reporters. Just like that Michael Saylor thing, they're going to want him to answer this stuff. He said he'll do whatever it takes. They're going to want to know what that means and be specific. QE again. I think we'll see QE in like 12 months, 12 to 18 months from now, after we flush through all this, get the rising going up, get the rates to a crazy level, get people freaked out a little bit. Maybe we see a recession, and then, they'll be cutting event. I mean, just watch the yield curve. Maybe 24 months. Who knows? How would cutting rates make people buy the dip? Wouldn't that make people more fearful? Yes and no. I would be more fearful. I would even short the market if he cut it. But the yield curve's not fully inverted just yet. However, because people, if he starts saying, yeah, we might start looking at QE, then people are going to use that as a Fed put. And they're going to say, okay, boom, that's Powell drawing a line in the sand, and that will be used as the floor. Because if you can anticipate the Fed is going to start easing in 6 months, why wouldn't you buy ahead of it and price into that now? I'm 50% bearish, or 50 basis point bearish, 75 bullish. But what do I know? Time will tell. Anything bullish won't hold due to June. Due to June still behind inflation. Just watch the gas prices. Amen. We'll see. You said 30-year must hit 6 for housing. Are we there? Yes. I didn't say correction, but I said that's when I will begin to slow down. And I said that months ago, and you're seeing it happen now. And I was already slowing down prior. But yeah, it's, mortgage rates are at a dangerous level. Even then, some people were even saying with what happened in bond markets the last couple days, and that's like I'm saying, for some of you guys, my theory with bonds, it would correlate with some of the weakness in real estate, where I'm saying the only way you're going to get rid of inflation is to break the bond market. And the bond market for mortgages, everything, it has been bad. 119-day bills allotted 2.09. Allotted at high 62%. So, yeah, Shive's dropping off of that 119-day bond auction. 73% of the 5,000 people who voted, but they all didn't like the video, so it's probably like half of that. But, yeah, 73% is voting that 75. Read my lips, 100 basis points. Let's go. We could take side bets. I don't think 100 basis points is going to happen, but I think someone's going to ask him about it. Hey, 0T and blue and yellow. Okay, this is Twitch. I'm giving you both a yellow card. Okay? I don't care who fouled. Okay? I don't care who started it. That's it. It's Twitch. Okay? You guys should be friends. Okay? Nothing is that deep. You both get a yellow card. Okay? Leave the other Chads out of this. Amen. Amen. Yellow card. Next one's a red card. I started it. Okay, you're getting a yellow card too. Thank you for admitting it, but you get a yellow card. Everybody getting, that's it. Keep it clean. Just play clean, good sportsmanship. Get a GG in there. Remember GG. Don't forget what the GG means. Yeah, double text cancels each other out. Okay, we're gonna run a clean game today. Okay, this is Powell day. That's it. You could feel free to disagree. We've had a lot of respectful disagreements today. We've been able to talk about a lot of different theories. So let's just keep the good vibes going up. Feel free to disagree, but do so in a positive manner. And let's just GG and just have a clean fight, okay? So when you guys get back in, touch gloves, and you'll be good to go. You think someone will address the elephant room with Powell? We can't afford higher rates because of $31 trillion. Yes and no. We'll find out. But, I think that question should be phrased differently. It's bonds. So it's one thing about the debt, but, I guess you could say the bonds are debt. But do you see what I'm saying? It's I think the elephant in the room is how are you going to raise rates without absolutely destroying the bond market and destroying debt markets, realistically, debt and credit markets. That is what I think it is, but I think you're going to get a convoluted answer that's not really going to address it, let alone if somebody even asks him. LYT Lotus IPO? Like Lotus the car? Or no, it's Lightus. Lightus. I was like, that'd be cool. You think money in reverse repo allows them to kill the bond market? No. Just because, it could help withstand some of the pain, but eventually it's just the rates keep going up. If they're more aggressive, the currencies start moving. If they really want to stop inflation and it leads to them pulling out of the bond market, letting the market find, natural pricing, it's just going to get more and more and more and more and more and more expensive. So, and that is really where it just slowly just chokes things out, if not breaks things. Who sets Fed futures? It's whoever trades them. So I showed this morning. If you have a TD Ameritrade, you guys know how I pull up the other chart with the Fed futures. If you go /ZQ, this is the Fed. This is the 30-day Fed futures. So this is actually what you see in the last couple days. This is us pricing in 100% of a triple hike. This future right here. This is the Fed future. I don't know if I could trade it. I've never tried to trade it. Should we try to trade it? You need $700. Let me try it, actually. I'll put in a really low order. Yeah, I could trade it. So yeah, this is it. You could trade it if you want. But this way, you guys don't need Bloomberg. You don't need Roblox. You don't need to, even if you, this is a visual representation of this chart right here. So, and how it's like, if you could chart it out, remember I show you the other ones? So /ZQ will bring up this future for you, and you could pull it up on any platform, I believe, but at least for TD Ameritrade. So pretty cool find. I didn't know that till yesterday. I was looking through some of them. And I have another trade I haven't made yet, too. There's one currency I'm looking at next to Japan, but I think I'm going to wait till after today, and then we're going to go for it. Don't touch this nonsense. I want to see if I can put it in an order. I mean, realistically, this would be a crazy trade to make if you believe that they're going to go 50 basis points, low-key. It's not really the best trade, but again, this is who's trading them, and like, what's the open interest on here? Like, you got a couple 100,000 people trading him, but it's pretty cheap, more or less. But it's like, if you really think they're going to do half a basis point today, I would actually buy this future. It might actually go a little nutty. Otherwise, you'll just get instantly clapped. 100 basis points at 6.3, was it? I'm getting 4.1. Yep, now it's at 6.3. Daily spies. The ones from yesterday got clapped, I think. Yeah, they're down to 25 cents from 75. The bond market will destroy lives of retirees on fixed income. It's a different type of wealth destruction that happened in COVID. I think it's definitely a different type. So you'd be surprised some people might be able to do better because those are the people who actually buy bonds. So they would suffer from some of the immediate losses. But if they have the right management, can re-roll over, or depending on their time frame, it could actually lead to them getting a lot higher yields on fixed income in a weird way. It depends on how it gets, how they pretty much, if they refinance their bonds more or less. So 377, we're bouncing back up again. This correlates with that level I set on the dollar. So we'll probably get back above, back to open where VWAP is. Again, we still got, 3 hours here till Powell speaks, 2.5 hours until the actual release now. It's coming. The clock is winding down. So, ladies and gentlemen, boys and girls, Euro close was even 9 minutes ago. So keep that in mind, Euro close and what they did today. But, ladies and gentlemen, I need the blood pumping. I need you ready for Powell. I need you stretched. I need you excited. I need that brain working. Thank you all for all of your comments today. Again, we've had a lot of great discussion. We're going to have a lot more interpretation to go, but I love to hear people's opinions. Y'all have been respectful, and y'all have been leading us some great discussions. It's okay to disagree, and it's beautiful the way y'all have been doing it, so I appreciate you. So now let's get the body moving, okay? We've been here for 2.5 hours. We got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1. Get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then, optometrist recommendation, stare at the object 10, 20, 30 feet away. Blink a few times. Relax those pretty little eyeballs. Blink, 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 blink. Blink, 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 blink. Oh. Wow, I needed that. Oh, beautiful. Relax the eyeballs. You've been staring at the screen all day. Don't worry. You're getting a little bounce. You're at VWAP. You could look away for a little bit. Come on. Calm the eyeballs down. It's good for you. I know. Eyeballs were hot, huh? Yeah, relax them. It's okay. Come on. Get those Powell blinders on. You know, come on. Let's go. Let's go. Let's go. Oh, it's beautiful, right? It's beautiful. Okay, do that. Now drop the shoulders. Okay, fix that nerd neck. Nobody is attacking you. Okay? Nobody is attacking you. So relax the shoulders. It's okay. Powell has not showed up with black Air Force Ones just yet. Okay, but chest to the sun, flex the core, tuck the hips in, legs in front of you. You are not riding a dolphin, and I see some of you. Some of you are kicking yourself with your left leg while you're leaning to the right to lean on your computer mouse. It's really awkward right now. You're mangling your posture. So let's go. Legs in front of you, chest to the sun, drop the shoulders, and boom, baby. I ain't gonna lie to you, man. You look good right now. I'm just saying, you look a little bit taller. It looks like I've been seeing a lot of progress. Whatever you're doing, keep doing it because you are glowing. You know that, honestly, you have my attention more than the Fed futures right now, man. Keep it up. Keep it up. You look amazing, okay? And then finally, relax the jaw. Go, breathe in really deep. Breathe out with the tongue out. Do the dragon breath. Go. Respectful question. Are we making any plays post-release? Depending on what is said, yes. I don't know what I will be playing. I have my go-to with the banks, and then if anything, I'm just probably going to go for daily spies and Fed futures, or excuse me, just normal futures, to be honest with you. That will probably be the only play I'll be going about, depending on if I could interpret something that's just very, very easy out of it that could confirm a direction. But, I don't know if it's going to be that easy today. I think there's going to be a lot to it. I think you're going to have multiple day digestion. The bonds are definitely what I'm looking for. And we're going to see. I don't know if it's kaputs or call. Bro, it depends on what Powell says. Like I've said all day, and again, with the level of talking we've had today, everybody's on so many different pages. This is a very important Powell. He's pushed into a corner. Either way, it's gonna have a lot of implications. And that's why it's just, we don't know if it's puts or calls just yet. But whatever it is, again, I'm sure within that first 30 minutes after the release too, we will get a better idea. Then it should be exciting. Market reaction at 230. I don't know. It doesn't matter. I mean, ultimately, I think the bonds are going to go higher, and that could probably devastate the market a little bit. Who knows if a summer rally could be bought right now, but at the end of the day, it just depends on what Powell says. That's all I need right now is what Powell does and what that changes with the plan. Then we could start repricing. You see what I'm saying? Once Powell opens his mouth, once we really know what is going to happen, people are going to start pricing for the next 30 to 45 days. And that once we have that information, then we could kind of figure out what's going on. Market is closed on Monday, June. Oh, no way. This Monday? Chad, should we go to Vegas? My mom thinks you're so weird. That's good. My mom thinks I'm weird too. At one point in my life, I told my mom I was not going to be a doctor, and that's it. She just disowned me. So I feel it's how it happens. Go to Orlando, Disneyland. High ticker. What's HTHT? And then CMRA, CEIX. They kind of look a little smaller. And then there's SHPW, penny stock moving. Oceans is when you play the options in the final 15 minutes after close. So a lot of people don't know that when the stock market is closed, there is a select set of ETFs that you could trade 15 minutes after close. So Oceans 11 is if there is a chance of big volatility and the market is moving a lot coming into close, you could make a option play that theoretically has a 15-minute expiration. So if you thought a daily option was crazy, take that, and then this is probably 24 to 50 times faster. So it literally, I'm telling you, you could go from 1,000% to broke in 30 seconds and vice versa. It's even crazier than the futures, believe it or not. The best part is you could control your amount of leverage and how much you use, but it's, again, a 15-minute option. When you really put it into perspective, it's something just massive. Co-real estate will be in Orlando. Man, if the day off, I might have to pull up on y'all. Let's go. Vegas, you paying? Nah, I'm not paying. If we go to Vegas, I am not paying. I'm going to get all of you. I'm going to throw 20K on a YOLO, guys, and we're going to get all of them, and they're going to hook it up, okay? And they're still going to have saved money than doing that YOLO. That's the best part. But they're paying, not me. But if co-real estate's in Orlando, if I'm going anywhere, I might have to pull up on them. Unfortunately, I do not think you could do the Ocean's 11 on Robinhood. Boeing's going up. Alcoa is up 6%. Is this finally going to be the material rip? see. Pins. Snapchat's up 6 today, so I feel like Pinterest, yeah, Pinterest is up 9. Pinterest doing way better than them. Microsoft, Apple, they've been kind of chill. Amazon, big leader. Coca-Cola's on the low. It's doing it again. Again, a lot of the staples and discretionaries are just clapped. Very weird balance. And then 121 names down. Materials are negative. Utilities, consumer staples, and energy. Healthcare, financial, and industrials are the ones holding on. But financials got a little bit of a recovery there. Watch out. Dollar's climbing back up. So if the dollar starts coming back up, honestly, just treat that as the VIX. McDonald's settles French tax case for $1.3 billion. Damn. It's a lot of bill. Traded SPX Gamma Irons. I've been waiting for you to show me. I mean, I thought you were going to be the one to show me with how much you talked about it. But other than that, I've not. I probably traded like some ghetto ones and done a couple of calendar spreads here and there. But that's about it. You do calendar, not as much. I'm not really a big fan because sometimes the leverage of them. But waiting, I think if the premiums still stay this high, and things chill out, I'm gonna probably do more spreads during the summer. I can't show you a hedge fund bought you out. Come on. With all this stuff you say in the chat, I know you could tell me. I know you can. Because I know damn well they know that you ain't saying what you say in the chat. You know what I'm saying? Just believe me. Believe me. This market is the year, the episode they're cooking the pigs. Still good. Taiwan will get clapped if they invade. Yes. U.S. officials say admin to announce about $1 billion in Ukraine aid again. They announced like $600 million for weapons this morning. Ribbon Communications getting acquisition interest. RBBN. Acquisition interest. It already went up there. It's up 12%. We're a little late on that. And then AZEK reverses. They're down 5.3. AZEK is getting clapped. Ukraine headline just hit. Is it new aid or is it kind of just part of the original however many billion we've already done? And then SPY. Watch if the dollar, it's chilling at the high yet, but it hasn't moved. Take a look at the euro and yen as well. Yen is still high today, so we lost pretty much all the gains on that from today, or from the other day. And then we sold out of that one. Those old FX. I remember we got FXY puts earlier, calls, because I thought it was going to bounce earlier in the year. What if Powell doesn't show up? I don't know. I would retire. I'd be like, that's crazy. Bored Ape Yacht Club sells for record Ethereum amount. Big bet or marketing play. Robinhood is now offering a 1% match on deposits. If you deposit $5K, they give you $50. $100K, they give you $1K. Starting to sound like DraftKings. They've done that in the past. Remember they did that, I think they did that late 2021. We brought that up, but I think they probably just raised the price. Jerome Powell, yes. Yes, Jerome Powell. That's a lot of questions. Is Jerome Powell speaking, and then who is Jerome Powell? And then you're asking me the time. We're going to abort on this question because, again, it's in the title. So that means you know who Jerome Powell is from the title, and then it has a time frame already. You see what I'm saying? But then you're asking who Jerome Powell is. So I would direct you to the watch list. I think yesterday's watch list was very good. I think we outlined a lot. We even gave a recap for some people who are missing out on it. We talked about the yen trade and everything. So this is a good time to tell you. Second link for the watch list. And we are live Monday through Friday, 30 minutes before open. Amen. Love the watch list. I do too. I had a lot of fun with yesterday's watch list. It was just exciting. You know what I'm saying? It was exciting. UNG Energy Minister says Ukraine gas production could fall 16 to 17 million cubic meters from about 20 in 2021. So Spy, watch the dollar. What time is it? 8:53. 2 more hours. Hot dog. Chad, 2 more hours until the report comes out. Then 2.5 until Powell speaks. Oh, is 100 basis point? I don't think it's off the table. It's not going to happen today, but I mean, the odds of it have gone up a little bit, 4 to 6%. I mean, let me explain this to you real simple. The odds of a 100% basis point right now is the same odds of a triple hike on Monday or last week. So there you go. So anything could happen at this point, and that's why today is so confusing. So it's at 4 to 6%, but again, on Friday, you were pricing in a 3% chance of a triple hike. So we'll see where it is by the end of the day, but the thing you got to keep in mind is that the Fed has already made their decision yesterday. So are you ready for that too? That's what you got to keep in mind. So the Fed had their meeting yesterday, and they made their decision on yesterday's data. So no matter what changes leading up into this, it's not like Powell is going to be walking into the room and then see the Fed futures and then change everything. You see what I'm saying? So I would say 100 basis points probably off the table, even if it moves on the odds today. It just doesn't say much. But like we talked about, there's probably a good chance that Powell is going to be asked the question, and he may put it on the table for some of the future meetings, especially if we're going to be looking at, if people are comparing this to 1994 and this size of rate hike and all of that. It's just, that's, again, 1994, the 80s, they started with these bigger hikes, and then once you start getting into this realm, it just opens up the door for a lot bigger ones. What do you want the Fed to do? Soft, slow, or hard? I would prefer a soft landing, or if any, I think everybody would. Honestly, if you prefer a hard landing, you're a diluted fuck. Excuse my language, and what I mean by that is that I don't think people recognize, like, you do not want again, a hard landing comes with economic pain for everybody. It comes with problems. Some people may not recover. It's just like, I don't know, as a rational human being, I don't know why people wouldn't want a soft landing. That one came out aggressive. I know. I'm sorry. Hard landing gets it done quick. Not necessarily. A landing is a landing. You see what I'm saying? So if you, like, imagine you're landing in a plane and it's saying that as you're landing on the runway, if the pilot slams down the plane and loses a wheel, that is not faster than slowly landing. You see what I'm saying? This isn't a matter of speed. It's a matter of impact. That's the whole point. We know the whole point is landing. The point is you are going to land no matter what. Things are coming down. They need to bring things back. This is a matter of impact, not speed. So a lot of people think, yeah, just get it over with, but this is more so of how the plane lands, and then what does it injure upon landing? I sense derision. Too much derision in your comment. I can't answer that. I'm sorry. I don't know why you're being so divisive. So much derision in your comment. I've got my parachute. That's good. But we're all on the same plane. That's what I'm saying. It's like, the harder the landing, the more likelihood more people get injured. I feel like I'm going to start sounding like that guy from The Big Short. Like, you guys know, like, every % increase in unemployment or decline in GDP, how many lives that leads to. Again, it's just like, you don't want to see the wheels fall off, essentially. Yeah, and that's a good point, too. The plane will take longer for it to fly again versus soft landing. Exactly. If you land hard, it's going to be a longer time before you take off. And then Boeing is ripping. Apple's coming up if they could kind of follow with Amazon, but the dollar is at the high. So that's the interesting part about all this one here. Slower the landing, you might miss the runway altogether. 100%. Look at you, Chad. Look at you. I like today's discussion. Amen. That's a very good point. See, look at that. You see that, Chad? We talk one way, and then somebody comes in, and y'all are able to balance it out. Again, everybody has different views, but I love hearing it. That's a good point. Because that's what's happening right now. They try to do it so slow. It does look like we are just missing the absolute runway or any area where it was kind of safe to land. They're like, fuck it, let's just keep fueling up there. Why don't we just do that? I know Bitcoin 4-year timeline. What? Fucking Michael Saylor. This guy. He was like, if you're not going to hold for 4 years, you did not say that on any of your tweets. Bro, I woke up every morning to this guy saying, like, stack and hold. Bitcoin's going to the moon. They don't understand you. All your friend, and him battling with Peter Schiff, and then he comes on today and he's like, oh yeah, well, unless you have professional algorithms and you got a real investment manager and a real strategy, I would personally go for something that's scarcity, digitally scarce. But you should be a professional. And man, this guy, he said hold for 10 years. I actually like Michael Saylor to a weird degree. I just don't know. He definitely felt a little different here. But, bro, he was the poster boy during 2021. I know, they're kicking him while he's down. It's just he definitely, if y'all don't see the, change in attitude, I don't know, because how many of you guys have dealt with something goes up a lot and you own it and you're like yeah and then till it comes back down and then you're like, oh, I hope everybody deals with that. And even this is a guy on a $4 billion trade who's going through probably the same thing most of you guys have gone through. You know what I'm saying? It's absolutely just it went from being very exciting to being down, and then obviously you see it. People are going to kick him while he's down too. So he does have faith. I mean, you better fucking have faith. Or do you mean? You don't have $4 billion on that without any faith. You know what I'm saying? I'll say, hold up. Okay, I need to go to the bathroom though. Follow me on Instagram at the Trading Fraternity. We love you. Get ready. 2 hours till Powell. God bless America.
median going
God
to
bless the
go?
Colt.
Where are they thinking they're going to stop now, given what inflation has been doing? So a lot to look forward to, David, as we follow the Fed today, and as you point out, more than usual.
Yeah, and we'll be watching it right along with you because there's a special on at 2 p.m. Eastern Time right here on Bloomberg. Thank you so much to Bloomberg's Michael McKee. Now we turn to an economist who really has been extraordinarily good at following the Fed and also predicting where it goes next. He's Stephen Stanley, chief economist at Amherst Pierpont. That's a Santander company. Stephen, thank you so much for being with us. In your note, you say the most important thing for the Fed today is to recapture the control of the narrative when it comes to inflation. What does it need to do that?
Well, I think they need to convince the markets that they're on top of it. And the markets have really lost faith. We've seen that in the wake of the CPI release last Friday. Obviously, there's been this violent reaction in the markets, which I think is basically telling the Fed, hey, you need to go more. You're not doing enough here. And so the Fed feels like the Fed is being reactive. And, you'd much rather be in a situation where it feels like the Fed has control of the situation rather than being dragged around by the markets.
Well, so you're projecting a 75 basis point rate hike, as I understand it, Stephen, like a lot of the market is at this point. But what about the out months? What comes after that? Because when you're looking for credibility, do you want to be very specific about what comes next, or do you want to leave some leeway? Because right now, the Fed is a little on the back foot because it did say what it was going to do, and it looks like it's not going to do that.
Right. Well, everything is always data dependent with the Fed, right? And even that forward guidance that they offered in May of going 50 at each of the next two meetings was contingent on things playing out about as they expected. And of course, you can make a good case that CPI came in a lot stronger than anticipated, and therefore, the Fed is reacting to that just as the markets have. But I think you're right. There's always going to have to be some flexibility in and out. But I think it's remarkable to look at the evolution of market expectations around that question. If you go back just to the end of May, so just a couple of weeks ago, the markets thought that the Fed would be the peak rate of this cycle was going to be somewhere in the neighborhood of 3%. And now that number is close to 4%. So we've moved almost 100 basis points in just a couple of weeks. I doubt that the Fed dots are going to move quite that radically. Or, I don't expect them to approach 4%. So there is a danger, I think, that the markets are still going to conclude that maybe the Fed is even now not being serious enough about the problem, and that's going to be a big, task for Chairman Powell in the press conference to convince everyone that, hey, the Fed's got the situation under control, we understand, and we're on the job.
So, Stephen, I remember the last time when they came out with their economic projections, a lot of people said, we don't think this makes any sense because they kept a very low unemployment rate. At the same time, they projected that inflation would come down. How important will those economic projections be this time, and what do you expect in terms of unemployment?
Well, I think it's a bit of a wish list as much as it is a realistic set of economic projections. The Fed participants are asked to project the economy based on their assessment of appropriate monetary policy. And of course, right now, first of all, that's in flux. And secondly, I think different people will have very different assessments of what kind of policy evolution we're going to see. And so in that sense, I think you want to think about 2023 and even 2024 economic projections that the Fed provides as this is what we'd like to see. And of course, we know that what the Fed would like to see is a soft landing. So the unemployment rate kind of stabilizing right around here, maybe ticking up a tenth or two, but not moving up in any significant way while growth slows down a little bit. To your point, I think, the Fed projections for a long time have not really been internally consistent because as long as the unemployment rate is running lower than its long-run equilibrium, which the Fed pegs at 4, and, in my mind might even be a little higher, the pressures on inflation are supposed to be continuing. And so you can't so much have your cake and eat it too, which is, what the Fed, of course, would love to see. And that's what I think. That's where that contradiction in the projections comes. And
what about the relationship between the neutral rate and where they need to get to contain inflation? I mean, what will we see in terms of a terminal rate? And does that need to be significantly above what the neutral rate might be, whatever it is?
I think it does, and I think the Fed has kind of come around to that. If you go back to March, the projections, the dot projections showed that the Fed thought that they could get away with just moving a tick or two above, a quarter point or two above what they thought neutral might be. And they've kind of moved away from that a little bit, I think, as the inflation situation seems to have worsened. And now you're hearing more of the participants talking about maybe having to go significantly above neutral. So the first thing is we don't know where neutral is. And Chairman Powell at the last press conference kind of
so this is going to be interesting. Again, he's pretty much saying, too, that even though the market has moved aggressively, they're going to see what Powell does. But at the end of the day, too, that dot plot with the Fed, it's going to come in way behind no matter what. So even if Powell raises by 75 or even 100, chances are that dot plot is going to still be at 3% for their neutral rate. And in the market, Fed futures are pricing in 4. So again, if you apply that to the short end of the scale, what he's pretty much saying is that the Fed is going to be behind the market. If that's the case, then we'll get 50 today. But let's find out. Get ready. Get ready. You got 2 hours. 2 hours till the result or till the FOMC release. And then 30 minutes after that, you are going to get, what's it called? You are going to get the press conference with Powell. Yes, I can see your message, my friend. Good morning. I can't see your like, though. Did you like the video? I don't know if I see your like on there. I see the votes. We got 73% of the chat saying that 75 basis points is coming. 27% says no, so we got some contrarians in here. Right? I don't even know if it's a contrarian bet. Soft crash. If we hit 16,000 Bitcoin, I'll start freaking out. It's crazy that it's at 20. I mean, this is the high of the last cycle. Or I remember the first time Bitcoin hit like 18, 20,000. It was crazy, but it's crazy we're actually back there now. Bro, what a day. What a day. And you hit your push. That was good. JP Morgan rate hike scenario. Let's see. Screw JP Morgan, bro. So they said 75 outcome priced into bonds and is now the house view of JP Morgan. If we see the Fed do 50, 75 as well as weather the bottom yesterday, here's an attempt to answer those questions. Let's see. 50 basis point on Wednesday would be the market negative and may represent the worst case scenario. Markets would quickly, inflation moving higher, and you may see bonds price in more aggressive Fed. That's what I was saying yesterday. Similar to yesterday's, you likely see another global sell-off, perhaps with a smaller magnitude. Pre-market bonds are pricing in 75 for June, 50 for September, 50 for November, 75. I need this higher. Stocks may rally on the print along with bonds as this removes the uncertainty, but the key is the conference call. How does Fed address its updated guidance, given that Powell's flagged 50 in June, July? Again, this is what we said yesterday. How is he going to explain changing the plan? Are there any changes to quantitative tightening? And is there any insight into when the tightening ends? A data-dependent approach may be the best outcome as then investors would likely rely on what bond markets are pricing to guide Fed expectations rather than the prescribed approach. And then 100 basis points, short-term likely negative for stocks. This view could fade later in the week as bond yields fall and volatility dissipates. The logic here, Fed does 100 basis points now, takes a less aggressive approach later in the year. Bonds may continue sell-off as this would be surprise. Again, every single scenario, the bonds are going to go up. So I'm with it, though. It's kind of similar to what I said yesterday. So if you guys watch the watch list, you should have something similar. But that's good info. Good to take it in. So, again, a lot of they are trying to hammer home this 75 basis points, but we will see. We will see. Oh, what a day, man. What a day. Get ready, Chad. I can't wait till it comes out. I'm gonna need a carbo at 10. Watch list ahead of his time. You know, we've just been here before. That's the beautiful part. Like I said, this is reminiscent to like 2019, and just in general. I mean, thank God we followed every single Powell. We followed the Fed futures literally up until the minute where we could pull it up on stream and everything. So it's exciting either way. You know, we got positions in place. And even then, there will be an opportunity to trade it right when the release comes out. So I'm getting pretty excited for that one. Wow. So if bonds are guaranteed to go up, buy TBT calls. I mean, yes, but it depends on the premium. So in all of these scenarios, I don't think this will reflect until next week by the fullest. So if the premiums are too high now on the implied volatility leading into it, those premium break-evens may be too high on any of the bond plays. Literally, I bought SHI 2 days ago. That's what I'm saying. It's like SHI wasn't even a money play up until a day ago. It's already up over 100%. So those premiums are high. And that's where I'm saying, you know, hopefully we get a move, it kills the premium, and when we're good to go. Atlanta Fed's second quarter GDP 0. We're effectively in a technical recession. Saitama. This recession is too predictable. You're right. This would be the most forecasted recession, but we are not there right now. That's it. Like, that's it. We are just not at recession. That's the whole point. The funny part about all this is that everyone's freaking about recession before it gets here. So that increases the odds that by the time we're actually in a real recession, half of the people will be crying wolf. The other half will think it's not going to ever happen. So I'm for real, baby. Me and the boys sit in the whip after the gym and bump the watch list, repping ATL. Let's... You had me at gym and watch list. Do you see what I'm saying? You know what I'm saying? And shout out to ATL too, bro. We have Atlanta mods in here too. I'm surprised that we are not there already. It's because it happens slow. You know, and that's what, again, do you remember the first yield curve video I made at the beginning of the year? The first drop in January, people were talking about recession. I put out that video, and I was saying it will be 12 to 18 months from here. Once it was the first time the yield curve inverted. Once the yield curve inverts, everybody starts freaking out about recession, but that is a signal that it's 12, 18 months or longer away. So there it is. We weren't watching live streams on YouTube in the past. It just gives the appearance this is more forecasting. I agree, but also like economic forecasts, banks, like analysts, and even just like the media. Like you have more, I think it's social media and the way we share information today. Definitely there's more sensationalism behind inflation. You have more people talking about it. And like you said, we're watching it on YouTube, but there are people who are actually forecasting it more than not. Recessions will start when the Fed starts cutting rates. That's what I believe in my view. Yes, not everybody agrees with me. That's not really a market-wide perception. A lot of people agree with it, but it's not market consensus. But yes, that's what I agree. Accused all the stocks are green and the SPY's so low. We're just chilling out. It's giving us that cushion. Again, emergency meeting. Got us chill. Cycles are shorter, magnitude better, the beauty of information age. We will see. We will see. If good decisions are made, we have nothing to worry about. The real, like I said earlier, the real risk is if you start stringing together the worst policy responses, I just frankly don't trust anything. That I think is the real big problem, more or less. So let's see how Powell handles it. Okay, that's what I'm saying. Whatever Powell does, it's gonna be crazy. This is all because CPI was 8.6 instead of 8.3, and then the peak was 8.5. So, but again, I mean, have you looked at the inflation chart? I mean, I could show you with a pretty picture to give you a good explanation of it. It's super simple. This picture will explain all of it to you. So this is the CPI chart right here. The problem is it's still going up. You see that? So, let me get my John Madden on. Right here, that was the first, what's it called? That was the first peak. That was a couple months ago. And right here at this month, everybody said, okay, that will be the top of inflation till at least the end of summer. Most people were expecting that things were going to just level out at 8.5, and then maybe by the end of it, then we'll see what's going to happen, right? But then the other one came in lower. That supported it. It was still high, but at least inflation wasn't going up. And then now, after that last CPI on Friday, this chart is going up. So instead of it coming down, your trajectory is going up. Look, I feel like John Madden right now. You see that? So this chart is just still climbing up. There's no peak to it. Market feels like it wants to rip, feels like it's ignoring everything and ready to rally, which is scary. Maybe hiked, and we may see a non-event. It could rip, but the digestion, and just think about 3.2 trillion on Friday. So that's what I'm saying, but I believe my theory. I mean, I think that by the end of this, coming into next week, the bonds are going to go higher. If we could get a rally. I mean, again, JP Morgan is saying it will initially be bullish if they do 75, but any bad question at the conference, if he comes in at 50, I mean, it's just going to be wild. Mm. 50 tank, 75 nothing burger. I don't even know. We're going to find out. Dollar daily high. Get ready for the market to come down then. Especially if the dollar flips green. Nah, I'm using the UUP, but dollar index might be up there again because the euro. There's still a little bit of confusing moves in the market here with currencies. It's not even all that great right now. Again, that euro ECB thing was crazy. Another relief rally today. Look at Tesla, Amazon. They're ripe for a push. I mean, they're up 4%. I just think this is such an unstable situation. That's kind of how I'm viewing it all. That's why I'm like, we'll see when the report comes out. The report's going to cause a big move. Then Powell afterwards, and then where we go from there, leading into the digestion. That will be the final dagger. The Europe thing, the ECB pretty much stepped in, and it wasn't scheduled. It was an emergency meeting, and they said they're going to change their mechanism to make sure that they could stabilize the European bonds. ECB President Lagarde speaking. Honestly, I hate listening to her. Like, I just even Yellen pushes it for me, but I hate listening to her talk sometimes, and they always play her in the mornings on big ECB reactions. So I'm gonna wait for the headlines. It's not an emergency hike, but unscheduled emergency intervention that was not planned prior. LTY up 350. And what scenario do we shoot up? Possibly with a 75, but how long it'll last, whether it's the day or the week, that's the key. But that's what people are saying, but I personally I don't really know if I believe it. I know anything could happen, and don't underestimate the S&P and some of these moves, especially after what we've made. But I'm still, like I said, I just think there's so much. I think this is a powder keg for Powell. There's just so many opportunities for it to not come out good, and I think some people are going to be inherently confused. So it's just we're going to find out in an hour and a half, possibly, just about. SPY coming up is not really reacting to the dollar. SHI is up a little bit, kind of holding the lows of the day. TLT came back up. Let's see. Yeah, Amazon's up 4.4. Jeez. His tie will say it all. What scenario do we sell off? Probably 50 or 100. But I don't even think 100 is a real case. But, I mean, we got to talk about it. That's just what we've been forced into in the last couple days. Besides that, though, I mean, I still don't think 75 is a sure lock is bullish. That's the only thing. I think every outcome seems pretty negative, but we're going to find out. But if anything, 75 seems to have the most bullish weighting to all of this. My real play is going to be on the bonds. Don't know if I'd do if there wasn't you. God bless you, baby. Shout out to Colt. And I don't know what I would do if Powell was actually not crazy. Because Powell's this guy. This guy is making us. This is the real Tom Brady moment. But the game is now Powell's coming up. Powell does not have the lead. Powell needs a touchdown just to tie. That's the problem with today. That's the best way to explain Jerome Brady. CPI changed in January 2020 using lockdown period spending habits. No explanation for the BLS, but it's being way understated now. I think it's just I don't believe the CPI. So I think they've altered it way too many times, whether it's because of 2020 or as they changed it at the beginning of even 2021 too. It's just so I don't even know. I think prices are going up. We've known that through. I think you could pick up on that way better by just looking at your daily purchases, and average life kind of shows it more. Jerome Curry, oh no, he's about to go 0 for 10. Gas is way understated. So that's what I'm saying. That's why I think it's a lot higher because, again, we've been. I hate to say it this aggressively, but it's just like we've been lied to so many times this last 2 years with everything related to this topic. That's why I started telling people, don't even use the word inflation. All you have to understand, the prices of goods that you need are going to keep going up. That's it. There's no other way to describe it. Inflation, because again, it's like the word inflation has been hijacked because some people will say inflation and then they're referring to the CPI. Just a month ago, they said inflation, and then the White House even mentioned the PCE. So it's just like you have a lot of different things. Everyone's saying a lot of stuff, but it's just like the prices of necessities are going to keep going up until there is a fundamental shift in both supply and demand, I would say, at this point. Let's go. Can I get my birthday horn? I'll use my B-Day wish to crash the real estate market and J Powell give us a 3% horn. I'm just staring at you right now. That's it. If you were my kid, I would have beat your ass. I said, why are you wishing on any downfall for your birthday wish? But it's okay, baby. Happy birthday. Oh, you didn't get it on YouTube. That was on the Twitch. I just stared at him, though. Said, what? That's what you're using the birthday wish for? Like, bro, you could have just wished for like $10 million and everybody would have been fine. You could have wished for a $10 million stimulus check. He was like, nah, I just want 3% rates in the real estate market to crash. What? That's crazy. That's okay. Happy birthday, though. For real. We love you, man. Appreciate you. Amazon. Where's Walmart still? Walmart balanced. Target's the one that's been killing it. How can Powell break the bond market? Aggressive rate hikes, amongst other things. Powell gonna shoot Shaq free throws. Let's see. I've been using my wish for world peace. Always next year, I guess. Sailor says it's definitely a buying situation. I mean, for the real estate bears, I forgot who it was. Somebody said it yesterday. They're saying after the mortgage-backed security kind of blowout on Monday, some people are saying this is bigger. This is something we've never seen. So we'll find out. But again, even with my initial theory, like I said, depending on how Powell wants to address this, I mean, the only way to stop inflation would be to kill the bond market. and that in and of itself would have consequences on real estate. New to trading, explain the bond market. We got videos on the main channel, the Trading Fraternity. It's the second link. And even if you watch some of the latest watch lists, we'll talk about it. You'll hear us bring it up, but I can't go into a full bond market lesson just yet. I saw a story of a family where their spouses all moved in together, and the too bad they could afford rent and food. They're worried if they could do that. I feel like that's common even before this. So working in real estate, I remember back even with the Inland Empire, that's why like a lot of like Temecula, Murrieta, Lake Elsinore, the houses were so cheap. But back in the day, even like 2016, 17, 18, what would happen is that one family would buy or two families would buy one house to live in. So they would go buy one of these like $300,000. Back then, this is what they were going for. It was like $400,000 for like a 4,000 square foot house, and then they would just split it between two families. So it may sound like that's like what people are getting pushed into today, but very common. And I'm even growing up, I'm pretty familiar with that. That's a very Middle Eastern thing to do. I told you that story. I used to have this one guy who would cut my hair back when I would actually cut my hair. Boeing exec says engineering test flight for 730 MAX nearly complete. Boeing's been ripping off every headline, so we'll see. Wolf is on the high. Petco, a little bit of a pop. But how were they selling it after? They would either live in it forever, or whenever one of them started making more money, one person would stay in the house, or they would sell it and split the profits. It's just joint ownership. But, you've seen it a lot. Like, literally, like I said, I had a barber guy. He was Arab. And one time, like, I went in there and, like, he knows my family and everything. And these guys would always, like, they were, like, low-key throwing shade. They would always ask. They're like, how come you guys don't all live together? Huh? How come you guys, no. You're not supposed to do it Western way. No, you guys supposed to all live one house. You're supposed to all live there. You share. You could save. Why would all of you all be separate houses? This makes no sense. Rover might be related to Wolf. So, very, very common. Yeah, Rover and Wolf. Petco and Rover. Rover's the dog walking company, right? Josh Ibn Rashid. What is it? Boeing starting to move now. Another high is popping like another $1 almost. Here's a 10. They don't want to kill inflation. They want to kill oil. Only way to stop the war. Ooh. That's a good take. Because, again, that's what they did in 2014, but they actually had oil come down. But it's very hard. Again, it's very hard to get oil to Europe. So even then, it's just like they're relying on Russia a lot. Top halted. Boeing still going. 9:30. Hour and a half till Powell, ladies and gentlemen. Or the report, and then Powell comes in at an hour and a half. Look at Beto. Is it getting clobbered? Oh, whoa. Bitcoin coming down. The Beto plays are at 90 now, so we're almost hitting 500% on those. Where is Bitcoin? Yeah, Bitcoin's back towards the lows of the day here. 21,000. It's about to flush through, bro. Bitcoin just had a $150 candle. Ethereum's at 124, 1,000. It just broke below 1,100. Ethereum tested 1,030 this morning. That's crazy. Biden tells Ukraine Zelensky about $1 billion in security aid. CL and NG little pops. Yep. You got one on nat gas. CL's going up a little bit, but it's still kind of guttered. And the yen is still holding. SPY's coming back up now. We're getting towards the lows of the higher range we were in at the morning after that little massive move. Eric, AERC. ETH was 1017 this morning. Yeah, that's crazy. That's big, bro. Like I said, once we'll see what happens once we get Ethereum below $1,000. That'll say a lot. But now Beto, crypto, Michael Saylor, all of that is, I mean, it's been a rough week for all of them ever since the weekend. Bitcoin at 2. That's the highs of like 2018, right? Or did it top out like 18,000? I remember it hit 20,000 or it was like 19,000. But damn, bro. How much do employee trading windows affect stocks? Sees minimal in my experience. Can make moves happen. It's not that big. I mean, what's bigger is the buybacks and the buyback blackouts. That's more likely to have a bigger effect. Yeah, it's like 19,000 and some change. Think about Altria, 5250 calls. If they could turn around, I mean, if this move, so let's say the bond yields start going up, depending on how the market takes today. Let's say it starts triggering one of those rotations to value again. Then I would go for those plays. But I think we might have to wait. Or if you believe that, if you want to front run it and you think by the end of this, growth might get clapped a little bit and you're going to get some of that value rotation into the dividend payers and some of these, stocks that we saw perform really good this year up until the last month or so, that I think it would be a great play. But we just got to confirm that that type of rotation more or less. I think next week we really react to the meeting and sell off more, depending on obviously the contents of today. However, I do believe the bond market is going to, I think yields are going to go higher. So, and depending on how high they go, if it upsets the bond market and we watch another blowout, it'll definitely feed into the market. I probably will front run that. 85 minutes till announcement. No, the announcement comes out in less than an hour now, right? Or hour and a half? No, it's hour and a half. I'm tripping. So 2 hours till the speech. GM CFO Jacobson, GM dropped Bolt price and reduced incentives. Did you see that article? It was like, GM lowers price on Chevy Bolt because demand is so high. I just scratched my head for like 3 minutes. And I said, okay. It's got us notifications. Sol is on Robinhood. Is that the crypto? Solana? Bro, all of it's crazy, man. I'm telling you, this is a crypto winter now that is bigger than this is even bigger than the first crypto winter in 2018. That one just lasted for a long time, but now, I mean, bro, 60,000 to 20,000, 4,000 Ethereum into 1,000. I mean, it's absolutely nutty. So, any of the cryptos, I mean, you could probably see with the consumer confidence right now or investor sentiment. Just be careful with anything. Gold drop wasn't bad. 3 trillion into 480 billion or 4,800 billion. Wait, what? You're not going to make any SPY plays until the data is released. I already have plays from yesterday. So, like, we have the Beto plays. I bought a SPY daily. That one's down already. I may want to grab one more of those. I'm active Dow futures. I'm active short on the Dow, active short on the NASDAQ. I got a play on oil. I grabbed a Tesla next week play. I have TLTs that are up for January, a TBT that is in the money already leading into this, and then I have the shy play. And then AMD short, end phase call or stock on the upside. So I have plays. And again, I've been like, if anything, I want to kind of slow down because I feel like I've grabbed a couple. I grabbed a couple of those $100 ones yesterday. So, but those are kind of really what I'm going to be holding coming into it. Egypt oil minimum gas exports to EU 500 million. Lawmakers seek insight into cryptocurrencies retirement savings. FedEx spilling off. SPY straddle. As long as the premiums aren't too high. That's the thing, though. With a day like today, premiums have been going up, especially after the way the market moved. I mean, you got a lot of people excited for a lot of different things. So I feel like premiums both ways are going to be expensive. Just make sure you look at the break even. So if you straddle it both ways, you're pretty much saying it's going to do this or that to break. It has to move 1%, 2%, 3% to break even. You just have to, think, do you believe that or not? If you are, you go and hit it. Bitcoin futures 20,920. The Beto plays are moving nice now. Very excited with that one. Boeing unsure if 737 MAX will be certified by year end. Yeah, FedEx is starting to come down. SPYs at VWAP. Doesn't seem like good news on Boeing, but they're holding up a little bit there. And again, Bitcoin, crypto, Ethereum, all of them are getting washed right now. Yeah, no reaction on B. Just give it some time, though. Again, BA's kind of had, I feel like, delayed reactions on all the news that have came through. Or maybe we just get the Boeing news pretty early here. I feel like we got hits on the Boeing. Troy, I think we have a lot of people who look at Boeing. It's popping off of that. That's weird. Beto again, another new low. Contracts are at 97. The bonds moved. Last FOMC was what? Was it May the 4th? So last one we did the same thing. We sold off and led into it. Then May the 4th, the next couple days it went down, popped up, came down again, popped, and then kind of just kept us in a range that didn't really go higher than the last Fed meeting. So in a weird way, the last Fed meeting kind of set the top of the bond range or the low end of where yields will be. So again, if that happens again, that means 3.4 on the 10-year will be the next will be the new low for the next month until we hear from the Fed again. 3.39. So this is how it would look on the chart. So this was the last Fed meeting. You were already up. You rocketed up the next 2 days, and then it came back down. But that was the top in yields. Came as low as like 2.7, and then it shot up. It kind of looks like it's doing it again. But I think we're kind of more April-esque, if anything. Do you ever miss Tastyworks? No, not at all. Especially with what I've heard like afterwards, but nah, I'm good. Banks go up or down. It depends on the outlook for the consumer. Because that's it. Usually, right, like the banks should be going up, but for the most part, we need that consumer support to be able to justify the banks going up. Earlier on, King Street said to drop 2.1 billion pursuit of THG. Tether market cap inching lower. I want to check. I think this one. Let me see. I think I might take this trade in before. All right. I shorted MSF futures. Does anybody know what that one is? My girlfriend's going to kill me. Spy Chicle. What is it? Hmm. 1.0047. That's going against the Swiss franc. So I shorted this Swiss. How much time does that one have, though? 96 days, yeah. It's a small play. I did the mini one instead of the normal one. But no, Swiss franc, I shorted the futures on there. I'm going to talk about this probably in a little bit, but pretty much I'm worried about any safe haven currencies pretty much. Stable currencies in Europe are not necessarily the ones I think they could be a little bit of risk, but I might be very, very early on it. FXF, Invesco, Swiss franc. Yeah, you can go with FXF. It's just very illiquid, and there's not really I don't know if sometimes these chains might move like EWG and the other ones. What? Bro, Lending Tips just texted me. Are you ready? He just had a deal for somebody. 930,000 purchase price, 10% down, 760 credit score. What do you think their mortgage rate was at? Okay, let's see my Fed contrarians. Oh, whoa. 6.5, 6.6, 7. 6.1, 7, 12, 6.5. Oh, man, Chad went crazy on that question. Jeez. Okay, y'all ready for Powell? There you go. I just had to make sure y'all in the game. Oh, God bless the cult. Amen. You better all like the video and then vote. Okay, I know you hear me. You know how to get to the like button. It is 2022, and you could type that. I know damn well you know how to find the like button. Stop play. You are active as hell right now, too. What the hell? You think I expected that many responses on that question? Hell no. Oh, man, today's filled with surprises. So, yeah, like the video. Oh, God bless you. God bless you. So, the answer to the question, 7%. So, Lending Tips has just funded a mortgage here in the year 2022 with more money in the system than ever. And he just funded a mortgage-backed security, a home loan, to somebody with a 760 credit score with an amount around $1 million at 7% interest rate. Wow. So pretty much it's saying it's a 5% increase towards her debt to income from last week. So a house got 5% more costlier. It's a 15% increase from January 2022 and 25% from January 2021. So homes are more expensive, but the prices are the same. Ta-da! That's why you're not getting your crazy moves upwards, but it's not necessarily coming down. It's 5% more. No, that's of your debt to income. So you can't even qualify unless you're buying cash. So that means if your debt to income on that $1 million last week was for $930,000, this week you can't afford it anymore. This week the bank will not give you the loan. It's illegal to do it, pretty much. Nobody would fund that or underwrite it. So that means it's 5% more of your debt to income ratio increased in the last week. And then from just the beginning of this year, it is 15% off of your debt to income. So pretty much take your debt to income and now lower it 15% from the beginning of the year, and that's what you will qualify for. And then it is 25% of your debt to income from the beginning of 2021. I would have taken points and lowered the rate. It would make more sense, honestly, if they only put 10% down. So they're going to have to, if they put down 20 grand, 30 grand and lower the interest rate, it may have, saved them on the debt to income. But still, I feel old with the pony. That's good, baby. It's wisdom. Wisdom. That's what my dad would say. Gray hair, wisdom. The pony is a wisdom, Habibi. So my house more than doubled. I have no other properties. What strats can I use if my credit is just okay? Well, what do you want to do with it? You have a couple options. It's either take out money so you could live off the money and use the money, or it's take out the money to leverage it into another thing. Pretty much, I would keep that piggy bank there until I needed the money for something, whether it's a new business opportunity or whatever it may be, and then I would pull out the money if I needed it. Otherwise, I would just keep riding it and take advantage of the fact that your interest rate and housing situation is going to be more secured than not. I keep getting approached to sell my house. Oh, yeah. It's probably someone in the chat, too. It's funny, though, but now, I think what might happen is that if this feels like 2014, 2015. So I remember when I was buying houses in 2014, 2015, motherfuckers would say the same thing. They're like, it's going to crash again. And then anytime the real estate market slowed down, or even coming into 2014 after the 2012, 2013 Euro debt crisis, it created a bad real estate market, even though the prices were elevated. So what I'm trying to tell you is that there will be some, I think average, it might calm down. Like I said, I don't think you're going to get your 10, 20% real estate increases anymore, but some people will be willing to make deals. So you might be able to find a good house deal right now. Somebody might be willing to sell with the home now that things are slowing down and they're not watching the same speed. I built my house 1.5 years ago, 520 with the land house. With the land house next door sold 930. Do I lock in profits, pay the taxes, or wait 2 years, pay zero taxes, but take the chance of housing crashing? No, because you got to think about it. A likely scenario, which is again unlikely, is saying real estate is going to crash 50%. It's like if you wanted to see a slowdown, let's say the property went down 10%, you would still be at 800,000, and then you would probably save 20% of your profits in taxes. I would personally hold. Again, if you have good equity in a house right now, unless you need the money to do something with the money and have a plan, and your new plan does not lead to you over leveraging yourself, I would just ride on the house until then. Because again, you got to think about it. If you're living in the house and have to sell it, you are, part of your profits are going to go straight to rent, and it's not cheap right now. Pretty much 2 years of renting will equal your down payment pretty much about right now. Maybe 3 years of renting will be the down payment you need to buy something right now. So that's why it's like you could still save by renting, but that's it. If this shit doesn't like drop considerably after 2 years, you just blew a down payment and you're still renting. So that's what you got to watch out for. And that's the like good and bad with real estate right now, because that's where some people, they're never going to sell during this because again, the alternative is way too much money, and if things don't chill, then there you go. So no normal people are pretty much screwed. Everybody is affected by this. I think a lot of people need to get around the idea that like everybody's getting hit by it. This is just limiting options for everybody. So whether you are normal, elite, super rich, super poor, in the middle, this is just going to limit your options because now you have to think about your future. Do you see what I'm saying? Now before you sell that house, now before you take money out and go buy a crypto, go buy an NFT, you are now thinking about, well, wait, where will things be in a year? Where will things be in 2 years? Okay, if I'm going to sell my house, where am I going to live, and how much is that going to cost me, and then how much is that relative to what I'm paying now? If I sell or refinance now, I lose my rate. SPY's coming down. Proposed FOMC red line. Oh, so this is what they think is going to change? So they say the economy continues to be resilient, led by continued job gains, while unemployment, however, this is not the release. This is what they're expecting. But this does say for release 2 p.m. today. Although overall activity, they're going to take all that out. Inflation remains elevated, reflecting supply-demand, higher energy and broader prices, COVID-related restrictions, they change in lockdowns, federal funds rate, decided to raise to 1.5 to 1.7. Committee continues to reduce its holdings of Treasury. And then who they think descending. We'll see. That'll be interesting to compare to. We're coming down right now. A little big of a bigger candle, but again, dollar's kind of climbing up, and it just held that high when the market kind of ignored it, but now the market's coming back. You think SLR relief is on the table? I don't know. I don't think so. I think the big problem is just going to be rates. I genuinely don't know what to expect from Powell. All I know is that this is like a bunch of gunpowder and a bunch of gasoline, and Powell is going to be the spark. And hopefully it doesn't light anything on fire. If something, that's it. If he could get out of here, we'll see what he's going to bring up. I think, the only thing, if he does talk about, chilling out on the tapering, then we got something, that may be good. Otherwise, it's still, it's still kind of just, we really don't know. And what will be the main focus, what the market is going to like, that's it. Because, again, a lot of people are looking for stuff. And lately in the last 48 hours, people have been, it's just like, I think people are getting unhinged in the sense that it's like, are people just calling for shit because of the surprise? Or is it like, are people really thinking about it? And like, it just, everything is just like this. What's Powell going to do? It's like people are very finicky right now. And I think we'll get a reaction once Powell starts speaking. But that's why I'm just boiling all down to watch the bonds. That's the thing I think we have some higher degree of certainty on. Everything else is in the wind right now. So either Powell is rocket fuel or TNT strapped to a rocket, or he gets away with it. That's it. It's just, there's a bunch of fuel, there's a bunch of accelerant, and it literally, if the sparks fly and nothing gets ignited, Powell may walk away with this as he has in the past as Jerome Brady. But let's see what happens. I mean, that, like I said, this is just a very challenging position for Powell today. And like I said, no matter what happens, I really believe everybody will be surprised at some level. Something is going to surprise you about today, regardless of where you voted on the poll or what you think is going to happen. Nigeria says 60% cash, most since '08. SPY came here towards the low of the day. Bonds may come down, but they're holding stable today. And then dollar's about to go green, so this one's going to be interesting. Yeah, this is a vicious game of hot potato, low-key, I feel you. Is the recession guaranteed? Not necessarily, but depending on what Powell does, that's the next level. This is what gives us guidance, because depending on how he goes about it, I mean, Powell may inexplicitly cement a future recession and what the future plans are saying about kind of where things are going. So we might break through to another low right now. You're at 376.23. Dollar does affect bonds, but lately, again, the bonds have been in kind of their world of their own, and just the dollar is destroying everything. You would think the bond yields would be lower with the dollar this strong, but we're dealing with inflation, and the dollar's only strong because everywhere around the world is super weak. You know, that's the problem you got to think about. Let me show you. Where's the New Zealand? I want to get you the New Zealand dollar. Because, that's the crazy part. You'll see what's going on with us, but have you guys ever looked at these countries and their currencies that have been weakening? So this is reversed split. So if this chart goes down, that means that it's weakening versus strengthening. This is not an inverse. Currency chart. But take a look. New Zealand has been raising since when the Fed should have been raising, right? But look at their currency is just getting weaker and weaker. Do you realize how wild that is? Some of these countries have done 10 rate hikes. Some of them have raised. Again, go look at Brazil. Go look at all of it. All of these countries have done massive amounts of rate hikes, and their currency is weakening. Whereas the dollar, we're paying, almost $6, $7 for gas, but your dollar is strong. It's because of that. Muddy Waters agrees with Tesla short. SPY just kind of flipped there again. Bitcoin was kind of leading the way earlier. Everything's still kind of, at the low here, but let's see what happens. You got 1 hour till Powell. Ladies and gentlemen, I hope you're ready. Yeah, but Tesla's still holding up strong. Someone said there's a short report. Definitely not the first for them. Worries me, inventory climbing, corresponding price reduction is starting to occur. So, I mean, the real estate market is changing. There's no denying that. There's things that are good, things that are bad. But like I said just not too long ago, I think worst case scenario, we finish the year maybe down 10% on real estate. Maybe. Or, again, 5 to 7% like we've seen in other years during the 70s and 80s. Or it even stays the same, but I wouldn't be surprised by that type of move. But I don't think anything else besides that, at least by the end of this year, I don't think you're going to get anything crazier no matter what rates do, unless the bond market fully collapses and them trying to raise rates and tapering our balance sheet reduction leads to an inevitable just ultimate problem with credit markets and funding markets. Anything I should read? What do you think? I know you think I'm 24. I need to read and learn. Have you read Richest Man in Babylon? Or have you read Intelligent Investor by Benjamin Graham? That's a very great stock book. And I think if you are trading and investing and have never read Intelligent Investor, I would slap you. I should slap you, but I got love for you. So that's why I'm telling you to read it, and with such aggressiveness, because that book is very good if you want to understand investing, even a little bit of trading, and just understand Wall Street a little bit. I'm telling you, it goes a very, very long way. Jerome is speaking in an hour and a half. The release comes out in an hour. And Richest Man in Babylon. If you haven't read that one, I definitely would. But if you want something more stock related, definitely go for Intelligent Investor by Benjamin Graham. United adding 2 new impossible menu items. UAS Beyond dropping off that. Fake meat on a plane. Beyond's actually reacting good to it. Let's see. 5% odds of 1. Yield curve better than yesterday. Interest in adding longer dated EMs that set from last year are expiring this week. I would want to, and I think maybe afterwards that's how they're going to scam us once those options expire. But I would want to wait a little bit. I'd say once the yield curve confirms what we need to see, then I think we could go after some of those. What a day, man. Intelligent Investor by Benjamin Graham. And then Marty, for the roof thing, contact your real estate agent and whoever did that deal and ask them about the home warranty and how you could apply it. Otherwise, you could call the seller. If it's a handshake deal, it's harder to get. You know what I'm saying? Like, it's going to be harder to prove. It's just going to be up to them. It's like you could tell them, you could threaten a lawsuit, and you could take them to small claims court, if anything, if they were, if you really wanted to argue it. But usually there's usually like a base home warranty that comes with it. Ask your agent, ask the escrow people, and see if it would apply and if you need to do anything to set it up. This is one of the most anticipated. Oh yeah, I think this is the most anticipated Fed meeting of the last 2 years, if not since 2018, 2019. Again, I just think Powell has not been in this position for a very, very long time, and I think it's a very unique position to be in, and that's why I'm just calling it a powder keg, just because it's very confusing, and I genuinely think everybody is trying to talk themselves into what's priced in, but I just don't think everybody is uncertain about this one, and I think it's going to be like that. I feel like you say that at every meeting. I kind of get excited. I think I would say for the year, lately, as we've been getting into the last one, I would say it's the most important of the year. But I'm telling you, this is going back to 2019. This is more important than 2019, 2018, just because we are in one of these, that's it. We're about to enter a new realm of everything. Again, whatever Powell does today, you will not look at Powell the same ever again, no matter what it is, because so much has just changed already, depending on what he does. So that's where I'm kind of getting at that. But let's find out. Let's find an hour away, man. 55 minutes. The next one could become more important too. You never know. But this one definitely holds a lot of weight. And it's probably the most level of uncertainty we've had in one of these meetings in a very, very long time. Which is crazy considering what we have actually dealt with over the last couple of weeks or last couple of months. Ba-da, bap, bap, bap. Qualcomm wins fight against EU. That was early this morning. That's why I said if today was a good day, I felt like Qualcomm would have went crazy. It's not one of those days. It's not one of those days. What if he meets in the middle with 62.5? He might. That's what they did back in the 80s. That's funny, actually. I think usually the Fed, they've made it a point. I forgot when they made the shift. I think it was after the 90s where they said they were only going to do like a quarter point, but he might be able to come in with 62.5. I never really thought about that. That would be unique. I would be pulling the cat out the hat. 60, yeah. No, how come no one says 6.25? 0.625, actually. Right in the middle. Low key, I think that would be the most bullish thing. I would be extremely bullish off of that one. I wouldn't even know how to act. .625, literally right in the middle. He said, we agreed to disagree. Don't worry, Habibi. Let's do .625. Everybody happy, huh? Come on, yalla, rally. Even though Fed think SPY's too expensive. We rally. Yalla. Powell speaks in an hour and a half. The report comes out in about 50 minutes. So 30 minutes after the report, Powell comes on. That's the press conference. But usually we wouldn't really care too much about the release. But right now with today, and that's what I'm saying to highlight how important it is today. We haven't had a Fed meeting in a while where once that release comes out, you're probably going to get a bigger move. And now watch out. Dollar is now break even on the day. I only made $2 off that. Come on. 0.01. Where is it? So yen is not moving at all yet. Again, they have Bank of Japan tomorrow. Any place today? I grabbed a Swiss franc short. Oh, the betos are at 101 now. Damn, son. So betos are up now 500%. That's beautiful. But other than that, all I grabbed was a Swiss franc short. That's going to lead to another play. I haven't really talked about it. It's kind of connected to the yen. I think I'm pretty early on it, but I figured I'd go ahead with that today. I have that Tesla put from yesterday. That one's down now. It was up in the morning. I may add to a daily SPY put, and that's about it. But otherwise, I think if I just wait, and I'm going to probably trade the futures as we get the report coming out. Bitcoin at 25. Once one currency shifts, others have to adjust, right? Yes, and even like looking at some of the trends, but that's kind of a broader connection to make with them. But I'm focusing on quote unquote safe havens more or less. Spotify will keep growing, said person familiar with memo. Huh? Spotify to slow hiring by 25%. Another one. Bro, every day. So Spotify got upgraded today. Then they said that they still expect the company to keep growing. But yeah, Spotify, that's a reaction to the news. Spotify's cutting 25% of workforce. That's crazy, bro. Imagine, remember all the people who worked at Spotify? They wanted to fire Joe, what's his name? What's that dude's name? Joe Rogan. Now they got fired. Oh, that's not going to go well. That's not going to go well. Bro, it went from Spotify employees trying to get Joe Rogan out of the company, and now they're firing a quarter of them all. That one, I don't know. Y'all remember when you heard more about Joe Rogan and trying to cancel him than anything that has to do with inflation? Oh, yeah? You forgot about that too? Okay. Yeah. I think at that time they were still saying it was transitory, even Jerome. TLT new low. Dollars chilled out a little bit, though. EWJ up or down. Well, EWJ, it'll be hard after today. Again, depending on if the dollar moves big, then the yen is going to get clapped. But then Japan has the BFJ tomorrow. The Bank of Japan, they have a meeting. So there's a lot of talks about what's going to happen with it. So we will see. Rate announcement, 48 minutes. Your show's the only thing my flat screen is used for. Good, because if you on the flat screen, you could like see everything really good. So that's good. I'm glad. That's good to hear, baby. And get ready. Good day to have it on the flat screen today. It's ETH is not at 980. ETH is at 1,067 right now. $60 away from Ethereum breaking again. Your BITO options now. I thought those were going to go up 500% on the first day, but whatever. The option market scams us now. But you got $1 on those. Honestly, still at 360. Okay, I sold one of the BITOs. I had 3 left. I wanted to book one in at 500. So I sold it. We bought it at 20 cents, sold it for $1 right now, and we already made the other 2 free at 70 cents. Is 75 priced in, or do we tank on the announcement? JP Morgan and a lot of people, anybody who's clinging for bullish, people are saying bullish is 0.75. Again, I don't necessarily believe it or not, so we're going to find out and see. Again, and watch out for any, again, even JP Morgan, they said initially bullish too, so keep that in mind, is that you still, you're still going to have the follow-up leading into tomorrow and then after the next week. So we're going to find out. Good choice. Well, we still got time on the BITO, and, I mean, they're already free right now, but pretty much is holding $200 now, 2 contracts left. But we hit that play very, very nice. $45 minutes till meltdown. Oh, why? CLBT. Celebrate ordinary shares. It's not updating. Said it was at 480 earlier. Maybe the high-low ticker is just moving slow. Now there it is. TLT bouncing off the bottom. CLBT actually popping. Shy staying stable. Dollar still near the highs, but fell off to the high of the day. Still negative on the day. It was about to go green not too long ago. We get 75, we pop up 3%, so halfway through tomorrow. Whew. Let's see. ECB Lagarde, we cannot be dominated by fiscal issues. We must deliver our price stability mandate. This 92% dark chocolate smacking, bro. For the first half of that comment, I thought you were talking about interest rate probabilities. I was like, wait, what? I said, I don't know if this, I feel good. I think it's at 94 right now, give or take. That's why I was like, yo, this is, I feel you. It is smack. There's a lot of confusion. It is smacking, I guess. Come on, load it. Load for me, Habibi. It's at 99. Now the odds of 100 basis points have diminished. Let's see what happens. SPY leveling out there again. Dollar came down. We're really back at the same levels there from earlier. You have a Mexican chocolate bar you've been working on? Perfect. You have a spice? Are you making it? Or what do you mean you're working on it? Like you're eating it? Chinese stocks. I bought Alibaba back on IPO 2014. That's about it. We flipped a Pinduoduo the other day. My take has been, as of late, I've been telling everybody, it's very, very simple. I would go for a Chinese ETF if you're trying to take advantage of the recent dip in China instead of trying to kind of pinpoint these random individual Chinese companies that we don't really deal with in our day-to-day lives, more or less. $2014. How old are you? I'm old, man. I'm old. Did you get the billboard in front of UMC? No, I need to look, actually. Martha Stewart, iHeartRadio to start iHeartRadio podcast. Yeah, I don't know if Martha Stewart popping. I don't know. I think she's like better for the stock and the stock going up for other reasons, but I don't think she gets that social media effect. Like I think that one Cardi B stock moved a little bit more. How come there's so many trading fraternity scam accounts on Instagram? We are a hot commodity and big tech does not love you. That's it. That's the only way I put it. Just report them. Thank you. XLF KRE puts in August. Banks could be a good one too. So just don't forget after this, like once we again after every Fed meeting, I have played the bank stocks. I think every single time. So the premiums have kind of moved around a little bit today, but just keep this in mind because once we get the report, depending on the interpretation, then we're gonna really be able to like get an idea. But this could be an instant one to start looking at. I might go straight for the futures and call it a day. I might just go for another MNQ or even go for the MYM and just, that's it. Oil hit a low there recently too. It hit 116. ARC pumping. VWAP's 377.42. 40 minutes left till Powell. Oil and Biden. Did he say something else? And then that Spotify slowing hirings is coming on here. Spotify ended up turning off of that. I guess people end up liking that. That's crazy. Snapchat said they're slowing down hiring. So they dropped this stock 30%. Every other company comes after. Everyone's like, okay, it's good now. They playing us, bro. They playing us. More stocks going red. It looks like you have 155 names red on the SPY, 349 are green. Earlier in the day, we only had 24 names that were down in the morning, so it's came back, but it's not too crazy. You still think oil will spike? Yeah. Do you not see what's happening with oil? This is happening exactly as we talked about. This is doing exactly what I wanted. So I may even, depending on how low it goes from here, I might even buy more. But this was that little first peak I told you about, right? We were worried if it would go past 130 or not, but if it stays down for another week and calms down, the next run up, that will, I think, be the final peak. And then after we break through 130 off of that, I will probably begin shorting. Did you not see how much Exxon made first quarter? More than God. That's crazy. Short it now. I don't think it is the time to short now. Again, you could disagree, do what you need to, but again, if it plays in line with the thesis that I could call out prior, I'm going to stick to that plan, and I do believe it's going to come true to a degree with some level of some margin of error. Appreciate what you do. Started watching right before COVID. Rode the TLT calls. Amen, baby. God bless you, and get the long term. How low can XLF? It just depends on the reaction, but I mean, you have bonds. AERC's pop in. That's been a hype play. I mean, I think we could still get down to 2020 levels, but that would take a lot of market cap away from a lot of the banks. I think for sure XLF might benefit, but it depends what they say about employment. It depends what they say about the consumer. Again, the press conference, all of that. Holden, we went over. We have a lot of plays. We have NASDAQ shorts, Dow shorts. I got calls on Enphase. We have TLT, TBT, Shy, Beto. We just sold out one of those again. Japanese yen, AMD. There's a lot of different ones. We're all over the place. Even some SPY dailies that we made. And that's about it. Rates go up, TLT goes down. Yes, that is correct. Powell pump. Let's see. They say it's too strong. GG Bears. Find out on the next episode of Powell Brady. You still believe this is the turn? The plays will come later? Yeah. Again, it's the digestion, even with the bonds. Like I'm saying, I think bond yields will continue to rise no matter what happens today. So I'm expecting that to come through by either Friday or next week. But don't forget, no matter what, like look at the market today. Look at everything going on, how crazy this week started, how crazy people have been with what's priced in and what's not. And, you're holding up 1.8% on the NASDAQ right now. So it's like the market could do its own thing here. It's going to operate a little bit weirder, but at Friday expiration, once we clear all that money, you're going to get we're going to have a bigger move with a lot more information, and then we're going to go from there. So yes, I still believe this is the turn. It's a big turn though, right? This could put a straight on the table. This could put a flush, maybe even a full house for somebody. Who knows? So it's pretty wild right now because this is such an important Powell. However, I do believe start after Friday, then the horse race begins. Then the races are off, just like you saw last week. You don't remember last week? You had the CPI, and then Friday came back. You had some reaction, but the race didn't start till Monday, and we have a lot more that we're dealing with here. And just the nature of the bond or the option expiration, it's going to be absolutely massive. So once that gets cleared, I think it's going to be good. Citron to start shorting again. Year and a half not being vocal on short side, as whatever potential words did not justify the trolling of family members on and off. Sometimes it becomes too difficult not to bite your tongue and not chime in on the obvious. I'm retweeting that, bro. You got my retweet, Citron. You got my retweet. I feel you. I feel you heavy. Sorry, what platform? This is E-Trade, and then the other one where you see the futures and everything else, this is TD Ameritrade. The bond auctions, I think there was one on the 119-day, and that came in a little higher. It affected Shy a little bit, but then just get ready, because after today, we should technically start watching the Fed's balance sheet reduce. What would make it more bearish today? What would be bearish would be if it didn't come in, if it came in at half a basis point, and then the market says clearly the market wants more than that. So if he came in lower, the market would go ham on the bonds. They would sell the shit out of it as people would start pricing that in. And then people would think that they're behind the curve. Then people would start pricing in. But then it also depends on what he signals. It's one thing about what he does today, but then the next part is about what does he signal for the next couple of weeks here, leading into the next. Because, again, we thought the plan for rates was outlined last month. We thought that the plan was already good to go for the whole summer. We thought that the May, June, July, and then September, we thought that was already there. But ever since that Friday CPI and now everything moving, people are reacting a little bit different now. My Twitter is Real Cult News. I've been trying to use it. I posted one picture the other day. And then you could follow me. And then usually we made this account so you could follow, news accounts. These are the ones that we follow. But we didn't have Troy back then. So Troy is a beautiful member of our community, one of the best in the game right now. So you can follow his account too. It'll take you a long way. I got alerts on Troy too, man. It's good for you. And then this is mine with the Lexus and Elmo and the pony. This is how we do things. So, but you can follow me too. Say what's up. We love you. God bless you. I'm gonna try to start doing fin tweets. I tried here the other day. Again, we brought this up. I need to start taking some of the main points on the watch list and getting you guys this a little bit better. You know what I'm saying? But, yeah, God bless you. Get ready. Get ready. Can we get a Twitch bet of 50? Bring the mods. Mods, they want it. They want it. You tweeted me. I think I might even just start following all of you on Twitter now that we have Troy for the account, because I think that's the only account you should follow. Troy is the only news that I like that's not fully institutionalized, because we get our news from institutionalized places, but at least I like Troy a lot. He's there for the work. He's there for the love. I don't really like the stock market world, believe it or not. Believe it or not. Push-ups. Let's go. Let's go, baby. Time to do the push-ups, but I'm going to go get a carbo. So I need you to move your body. 10 push-ups. I need you to drop the shoulders. I need you to just stand up. I need you to start moving. That's it. Do your thing. Okay, relax the eyeballs, chest to the sun, flex the core. I'm ready, man. You see the reply to that. I need to learn. I need to start using it. That's it. You already got I got girls tweeting me already. Are y'all gonna get me in trouble with my girlfriend, bro? You better watch out. You better watch out. We love you. We love all the ladies in the chat. God bless you. Find your soulmate here at the cult. Not really. Get a long term. Don't trust these dudes. They're all degenerate gamblers. What? You can't say that. Yes, you can. All right, let me go get my drink. I'll be right back. Please hold. Please hold. From the mountains to the prairies to the oceans, white with Powell. Let's go, Poweldonia. It's going to be a good one. CNN talking about Bob Biden's cognitive status. Yeah, apparently somebody asked him a question yesterday, and they said it was super rude. Can I show you this? Because somebody came at me yesterday because I was making my Biden jokes. Hey, what's your Biden? Fuck you. Okay? Calm down. Don't worry. There you go. There you go. Now I have my Twitter up. Somebody said you're a sexy boy, Joshy. Thank you. I tell you, I looked a lot better back in the day when I would ride the Amtrak. I had to talk about gasoline prices at the table. I looked a lot better. Oh, I'm telling you. No. Okay, here, let me show you this one. Hold on. Okay, hold on. No, but someone got mad at me yesterday, and they were saying, they're like, how dare you make fun of Biden's speech impediment? And I'm like, bro, y'all know Biden does not have a speech impediment, right? I'm sorry. I know this is a controversial opinion to some people, but I don't know if y'all know that Biden has been alive for a long amount of time. You know what I'm saying? Like, he's been alive like almost 100 years. Like, no lie. Like, for real. Okay? But let me show you. Just listen to this. I'm gonna play you a clip. And this is the same person we're talking about. And you want to tell me it's a speech impediment? No. This is no. It's not what's happening. Okay, where is it? Okay, here it is. This one's a good one.
Because the truth of the matter is I've got myself in trouble. And hell, I might be president now if it weren't for the fact I said I had an uncle who was a coal miner. It turned out I didn't know anybody in coal mines, you know what I mean? Really? I tried that.
This is him with Jon Stewart. Early 2000s.
But I actually thought it. You believed it? I actually believed it. You know, I'm from Scranton, Pennsylvania. I figured there had to be a coal miner somewhere in the family. Nothing, huh? Nothing. It was an engineer. I mean, the guy, you know, we were Irish, you know, and the Irish, I thought the Welsh and the English owned the deal. And we must have been stabbed in the dark. He thought it was stabbed in the dark, and I found out he graduated from Lehigh. I mean, what can I say? The truth.
Uh-huh. You should hear I don't know if you heard the context of the conversation. I won't comment on that. But, bro, yeah, he sounds amazing. Bro, if you've ever listened to old Joe Biden speeches, my guy was on top of his game, bro. That is not so. I feel like it's offensive to say that is a speech impediment when you literally, like, it's just something I think as of late, again, as he's aged and all of that, but dude, I'm telling you, it's not like, dude, go listen to his old stuff. Well, he's old now. I mean, like, when he was younger, and it just, oh, man, it hits completely different. Again, that's the same person we're talking about. Yes, he was a very eloquent person. Was, more or less. But it is what it is, you know? It is what it is. Did you short TLTs? I had an old play that went up, and then I shorted SHI as a short-term interest rate play. So technically, yes, I am what I told you I think is going to happen. I have money on the line. I have about $2,000 of TLT puts, and then I have about 400, or no, maybe it's worth more now. SHI is worth about like $400 in SHI puts, and then whatever other futures and anything else, but those aren't bond related. And then I have another $400 or $500 in TBT in the money. So yes, that's what I'm in. But I bought those a long time ago, so that's the thing. I don't necessarily, I don't know if I would buy them at these prices now that they're up. Read Troy's comment. Sky tweeted and deleted that says U.S. increases rates by 75. They could be getting confused off of this. So some people are saying a leak, but this one right here, the Bloomberg shit that came out, it says to be released 2 p.m. and then it says June 15th, and then it says 75. So I don't know. Be careful, because that was my first thought when Troy sent this one. Again, this is what Bloomberg or JP Morgan put out as their expectation. So just keep that in mind. I think some people might misinterpret this right here, because this looks like it's legit. Like, this looks like the release, but I'm assuming it's not. That one was Bloomberg. Jay Powell's moment, his whole life led up to this. Let's see. What time is it? 10:30. Dude, 20 minutes, man. Chad, 20 minutes till the release comes out. 50 minutes until we get to hear from Powell at the press conference. But remember, once that release comes out in 20 minutes, that will have a big reaction considering the scope of what we are dealing with. So just get ready. It's going to be different, but ladies and gentlemen, the moment is here. So like the video. Make your vote on the poll that we have. Again, I think a lot of people are in the camp of 75 basis points. 7,000 votes. 7,000 votes. And y'all didn't like the video, really? Oh, man, they playing me, man. They playing me, bro. I mean, we have to invalidate a lot of those mail-in votes. So come on. Like the video. Validate your vote. We love you. Amen. Amen. Pretty good, though. I mean, if you think about it, a sample size is 7,000. That's why if you like the video, I just know it's not like you're not like a bot or anything. You know what I'm saying? But it's like 7,000 people, and 70% of the said 7,000 people believe that it is going to be 75 basis points. So, man, one Wall Street Journal article and a full day of JP Morgan spamming. That got a lot of people on the table right now. More people voted here than the recent primaries in Louisiana. It's crazy. Hor, nice to see you on Twitch. Let's go, baby. Welcome to Powell Day. You guys some of you have picked the best day to show up here today. I'm telling you, it's a good day. You got 50 minutes before speech, although market will move off announcement in 20. Yes. So just get ready. The market volatility and movement, they're about to enter here in 20 minutes. And it looks like we're going to be at opening or VWAP, which I think makes this that much better of a story. Stop by to like. Now you staying for Powell? Well, it's on the way, baby. Just join the chat today, baby. Hey, man, let's go, Wambi. God bless you and welcome. Make that badge look good. Welcome back, Victor. Just liked and bought SHI puts. Oh, you bought them. So how do you feel about the premium? That's what I'm saying. If you want to play SHI right now, I mean, do some of you think it's worth it to pay 100% more than Monday, essentially? TBT's going up. So there it is. So pre-Powell already. Bonds are still green on the day, which is good, but they might start flipping. TBT is still red, but that's about to go positive. The dollar chilled out. SHI's even coming down a little bit. Man, I'm excited, Chad. This is it. The moment we've all waited for. It is game time. I wonder that I need to get the analyst won't start, I think, until like 45 minutes before. So let's see. Twitter's doing something. Again, keep the banks on watch. Yeah, Twitter's popping right now. Up 2%. Great call out. Musk says he voted Republican for the first time. Musk appealing judge's refusal to end SEC. Yeah, there's no news on Twitter specifically. Check Twitter or anything. But keep an eye out for that. Again, we've got a couple headlines, and Twitter tomorrow has their that like employee meeting or some shit like that. PayPal again. Shy's coming down. XOM and oil. So oil's dropping this time around. Let's see. Crude is kind of selling off. I remember hit that 116 low. But oil names are dropping. Again, they're the worst on the day. Yen is strengthening a little bit. Utilities are in healthcare. Those are the ones that are green that are the weakest. Then consumer discretionary and services are up 2%. You have 368 names up on the SPY, 134 that are down. Then nothing came across yet for Twitter. Yen strength, that means the yen is strengthening versus weakening. The thing that's been happening lately is that the yen was weakening. That's the play that we've been going for. So if it does the opposite, it is strengthening. So the dollar's down today. That means, dollar got a little weaker, relatively speaking, on paper, and the yen got a little bit stronger, relatively speaking. Usually yen is flight to safety, yes, but then a lot of people are kind of anticipating the moves tomorrow for the Bank of Japan. You'll wish you were here forever. Forever. FNIV. Twitter, we have no idea. Just moving, and then oil plays are starting to drop right now. FNIV, FINV. Finvolution. Any plays? I did a short on the what was it, MSF. I shorted the Swiss franc, which sounds weird when you say it out loud, but that's about it. And then any of the other plays that we've kind of just been holding throughout all of this. "15-minute warning." Are you ready for it, Chad? We came so close. We are so close right now. This is the moment. How's it going? It's going good. I'm waiting for a lot. I have a lot of anticipation. That's how today's going. Today has been a waiting game. We started the week off crazy. I mean, we are gonna watch what Powell does, and I think the world is gonna get shocked. Somebody is gonna get shocked, I guess is the best way to put it. You know what I'm saying? Somebody is gonna have some level of reaction. Pre-Powell uncle. Nah, we go because a little bit. It's like when is it? There it is. So we should be getting the analyst meetings are going to start coming in right now. So here it is. Welcome. Policymakers are set to raise interest rates sharply at this meeting as they take a more forceful action to quell stubbornly high inflation, but there is some uncertainty of how large. With markets now counting on an increase of at least 75, we will also get an updated economic projection from Fed officials revealing what they think interest rates, inflation, and unemployment rates are headed to. So it'll be important to understand the summary of economic projections, SEP, that reflects the game-changing CPI print last Friday. According to David Wilcox, former head of domestic economic division at the Fed, technically the SEP remains open until the close of the meeting, and he would expect that participants would want to be able to say that their submission did reflect the CPI release. So, again, this is Chris Ansley. He's saying, I don't want to be a broken record here, but this really is a big day for the Fed. There'll be a huge amount riding on Powell to instill confidence among investors and the public that the Fed will be able to get inflation under control. Will he pull out the legendary Mario Draghi 2012 Euro crisis, whatever it takes? We'll find out. And that's it so far. So analysts are going to start updating it now, and we're going to start hearing from people. So get ready. AERC again on the high. MO getting clapped. Coca-Cola. Rate hikes bearish for banks. Not typically, just this year as the consumer started to slow down and worries of recession came about. That's why the banks are kind of getting clobbered. Otherwise, they should benefit, but we just really haven't been seeing that as of late or as of this year. Fed watchers will be looking at the latest summary of economic projections for a better sense of how high policymakers expect rates to go. In March, officials' median projection for the Fed's fund rate to end 2022 was at 1.9. That's sure to rise, and the new projection could offer deeper understanding of how hawkish officials are becoming as they work to keep inflation in trends. That's crazy. So again, if they do a triple hike today, you'll be right at like 1.7, and we started the year with people thinking the Fed would end at 1.9. That's crazy. So the Fed has been continually forced to change its policy guidance as inflation continues. Policymakers had to speed up the end of quantitative easing. They had to speed up the start of quantitative tightening. They had to shift from quarter point to half a point hikes. And today, despite weeks of telegraphing a 50 basis point hike for June, Powell and his team are going to hoist the benchmark by 75, most on Wall Street expect. A 75 basis point increase would be the largest rate increase since 1994. Still, some of Wall Street are betting that the Fed will be even more extreme and lift rates by a full percentage point. So SPY getting a little wacky there. Is the dollar breaking out? Nah, dollar's calming down. TLT, this one's a little bit weird, honestly. What we're usually seeing is not really causing this. I mean, the dollar's down now and back to the earlier levels. The candles look a little bit bigger here. Let's check the volume. You got 41 million, not too bad. I guess we're almost at 11. 10 minutes till Powell, baby. People don't seem optimistic. I agree. I mean, we're holding the gap up level, but we're just gonna find out. 10 minutes. All the talk goes out the window. Let's see what really happens, and then that's it. It's game time. Dennis Debauchery, founder of 22V Research, says investors are focused on 50 versus 75 this week and how the market responds. Maybe we bounce 50 versus 75, but that's just short-term noise until the Fed goes full-on shut this economy down mode. The data going forward will determine if they will need to go more than currently priced. A fair assumption is the Fed will be tightening along what is currently priced in. They likely help determine that pricing after all. A hike of 75 is a high probability now to Brian Nick, chief investment strategist at Nuveen. He said, quote, the Fed doesn't like to deliver hawkish surprises, so I think the instant they thought they'd be considering this at this meeting, they had to leak it to let markets prepare and price it in. They don't want all the volatility to come between 2 and 4 p.m. the day of the meeting. But adds Nick, he has rather seen, he said, He'd rather see the central bank communicating progress towards goals. They're already softening in the housing market, for instance, and wages aren't out of control. A calmer, more reassuring Fed bank might decide to point to those things and say, we're continuing to hike towards neutral at steady fashion, but we're not going to do herky-jerky where every meeting is completely uncertain and will eventually achieve our goals. Oscar Munoz and Priya Misra at TD are expecting the Fed to deliver 75. So Oscar Munoz, he's the number one Fed economist for the CPI. So SPY coming down here, we're testing a low. Let's see. The FOMC is now leaning toward a more front-loading hiking cycle after another hot CPI, showing signs of de-anchoring. They wrote, quote, "We believe this shows the Fed is more determined to do what it takes to end inflation overshoot as rapidly as possible, even if that raises the chance of a hard landing in 2023. How the market might react to 75 basis point has been all the chatter this week. Chris Murphy, co-head investment derivatives at Susquehanna, he said, look at what happened following the hike of magnitude in 1994. With the exception of utilities, equity markets overall fell over the subsequent month before recovering the losses after 3 to 6 months, he said. So he said 75 and bearish pretty much. Then yield curve might invert more. Bloomberg Intelligence, Ira Jersey, he says no matter what happens today, the Fed is still likely to hike to at least 4%, leaving room for the bear flattening of the yield curve. The break of 2018 10-year yield of 3.26 paints 3.56 as the next target and will lead to further inversion of the yield curve. Quote, we expect the 2 10-year curve will invert more than it did in the prior 2 cycles, given how aggressive the Fed will be and the rising probability of a second half 2023 or 2024 recession. And then Jersey says also, again, I like Ira Jersey a lot. He's a genius. He says an increase of 50 basis points could be seen as dovish, but if the Fed decides to skip the 75 hike, it could change the statement to read. The committee decided to raise the target range for the federal funds to 1.2 to 1.5 and anticipates that ongoing increases will be appropriate, potentially at a faster pace than recent moves. This would imply a move of 75 or even 100 in for July and September. This might steepen the front end of the curve, but flatten it more in a forward process. Did you guys hear that? I don't think you heard that. So even Ira Jersey is kind of 50-50. So he said Ira's not looking at 50 or 75. He's kind of viewing what I'm telling you. He's saying bond yields are going to go to 4% no matter what. And then he's saying that, quote, the committee he's saying that if they did want to change the statement, if they did 0.5%, they're saying that they would raise 0.5% and then justify it by opening up the door. So pretty much Ira Jersey he's not picking 50 or 75. He's saying he doesn't even know. All he knows is that by the end of the year, we're going to be at 4% bond yields. And that, again, I could agree with that heavily. But now that's an interesting one because that means some people are actively taking into consideration that a 50 basis point might come in. 50 basis point would open the door for a one basis point or 100 basis point hike. Probably the most troubling number in recent days for the Fed was jumped in the long-term inflation outlook among consumers, raising the risk of expectations getting unanchored and, in turn, the danger of continuously spiraling prices. A central lesson from wage price spiral of the 70s is that even though the central bank raised rates, it did it too slowly, allowing inflation expectations to become unmoored. Powell appears to have taken that lesson to heart. Here is what the Bloomberg is expecting for the Wednesday decision. FOMC will raise by 75. Powell will argue a supersized move is needed to preempt inflation expectations from unanchoring. Powell will signal another 75 hike for July if inflation keeps accelerating. Dot plot will show median FOMC participants anticipate terminal rate of tightening cycle at 3.5 next year, up from 2.8. And then headline PCE forecast revised to 4.9 and unemployment to edge up gradually next year and reach 4% in 2024. So here's another one. The Fed policymaker projections are likely to have been submitted before the recent moves in the market, in which case there's a risk that they may already look like a little dated. It will be interesting to see whether Powell or indeed statements out at 2 p.m. suggest they might have a different submission later this week. Chad, 5 minutes left. 4 minutes. Oh, man. Why does this channel lag so much? They clap us, baby. Go to Twitch if you're lagging, okay? If you really get bad lag, we have the Twitch is good to go. We got a lot of people on the Twitch. They brighten early today. So get ready. 4 minutes. Again, usually at release, you don't really watch that big of a move considering everything we've already went over today. This is probably going to be a big one right off the bat, whether it's 50 or 75. That's going to say one thing, the summary of economic projections. That's going to be number 2. Just get ready, ladies and gentlemen. It's here, 3 minutes and 30 seconds. Oh, Chad, how do you feel? The why is as important as the what. Definitely. And just remember, too, whatever happens, that presser is still going to be big, and that comes in 30 minutes after, okay? So like the video. Help support the channel. If you support high-quality free stuff, then, yeah, like the video if you want to validate your vote. Hopefully we see you on the watch list tonight, youtube.com/the trade-in fraternity. But it's game time, ladies and gentlemen. So I'll have anything here that comes up if we could get a side-by-side comparison. Again, here is the expectation of what is going to change coming from Bloomberg. So we'll see when it actually comes out. Again, the first response, rather 50 or 75, that right there is going to be a very, very big driver. So I hope you're ready, ladies and gentlemen. I hope you are ready. PayPal Army strong. Come on. What is it? 2.5 minutes? Josh rotation. Yeah, so I don't know. You could take another SPY daily right now if you want it. I kind of want to, and I kind of don't. I feel like I got enough of everything. Yeah, these are expensive. $2. $200 for a 3,500. Oh, you're ripping up. This is kind of good for some confidence here. My heart beating fast. Let's go, baby. 2 minutes. Oh, are you anxious now? Ooh. China raise. Fed takes more dramatic battle to action. A group of protesters led by the activist group Fed Up gathered outside Fed headquarters Tuesday to remind officials that their actions affect vulnerable workers. I didn't hear about that. That's an interesting one, ladies and gentlemen. It's here. 1 minute till the release. Okay. All right, Chad. Good luck. Lock in your bets. You have about 50 seconds. Lock in your bets right now. Lock in your votes. Good luck with it. Don't panic. Remember, after this move, you got to wait 30 minutes, and then there will be the press conference. And then following that, that's it. It just goes crazy from there. Hold on. FOMs. People are reacting like it's already came out, bro. Meta's on the high right now. Twitter's still at the high. Hold on. I need to get Apple up here. Okay. You got about 20 seconds left, Chad. Here we go. The markets are, bro, look at how big this move is leading into it already. Oh, man. Watch TLT. Even the dollar. I'm actually going to switch Meta out for the dollar. We'll see what Apple does. Dollar's coming down. 5 seconds. Fed dot plot offers clue. Wait. They said see longer term at 2.5. Wait. There it is. They raised rate by 75. So they did it. 75 basis points. So TLT's coming. Oh, my gosh. He said strongly committing to returning inflation to 2%. They see the Fed at 3.4 ending 2022, 3.8 2023. So that's still behind. Big rally so far. Dollar is getting dumped on right now. So 70 basis points. No, I'm not really buying that one as much. But look at this, bro. That's already what? A full percent off the first minute? Oh, we're going to have a big day today. Where they say they see 3.4 by end of 2022, 3.8 in 2023, and then 3.4 end of 2024. So it's coming up here. JPY destroyed. I think it might have came back down, right? Let's see. Oh, it's going all over the place. Nah, again, that's a big 1% move, but here it is. comparison. Let me get it. All right, so here's what we got. Excuse me. Let me save this. Here's the side-by-side comparison. So now we're coming down. Again, I'm not really buying this one. I don't like it. That means, bro, Powell just panicked. That's it. Powell just did what he wasn't supposed to do, even though it was priced in. But now, I mean, this has a lot of different implications. So they changed. They said economic activity, edge. The blue is the changes. Red is what was in the last meeting. They says appears to pick up after edging. Household spending, they took out that remaining strong. They said unemployment has remained low, so they took out declining substantially. They took out the U.S. economy being uncertain. They talked about the invasion. It's likely to weigh on global economic activity. They took out with appropriate. The committee expects inflation to return to 2%. They got rid of that. They changed the amount they're moving. Again, 1.5 to 1/3. In addition, the committee will continue reducing holdings. And they took out the start date that we were issued in conjunction with the statement. Issued in May, the committee is strongly committed to returning inflation to 2% objective. And again, they took that out there. Because remember, they said they expect it to return there. And now they're saying it's not. That's like one of the biggest. This is the biggest top and bottom candle off of a Fed release in 1 minute. This is huge already. And then voting against was Esther George, who preferred to raise by 0.5. And then Patrick Harded voted as an alternative member. But that's only one dissent. So honestly, the statement wasn't that big. We need to hear Powell now. So again, you're getting a reaction. I know people want to say this was bullish and all, but no, they raised by 75. They raised by 0.75. They're going they range with 3/4. Yeah, they're going to 75, 1.5 to 1.75. But Powell just pivoted. That's it. There's only one dissent on it. But take a look after this reaction. It's like that was probably the bullishness. We'll see. But that press conference is going to be a lot more important. But I don't know. But here's the key headlines here. Fed raised benchmark by 75 basis points, the biggest increase since 1994, in line with investors and economists' expectations. Such a move would in the wake of picking up inflation data. New dot plot showed a sharp increase from March with the federal funds by 3.4, but still behind the 4% the market's expecting. Couple major changes. FOMC adds a line saying they're strongly committed to returning inflation to 2% objective, and they removed prior language that they said that they expect inflation to return. We covered that. Economic projections showed a much bumpier soft landing expected, with unemployment rising to from 3.7 to end of 22 to 4.1. Growth forecasts were cut to 1.7 in 2022 and 2023 from 2.8 and 2.2 in March. That's big. Fed officials still expect inflation to come down, and they reiterate path on balance sheet that took place on June 1st, shrinking by 47.5 and stepping up to $95 billion in September. Let's see. So bonds are coming back down. So check the dollar. Oh, look at dollars rocketing now. That's it. So yen's dropping. Let's check MSF. Even the Swiss franc is dropping off that too. So we could wait for Powell, but again, I think it's just like I said. I think it ends up negative no matter what. But I want to see what Powell says. But this is already a big reaction. I mean, you've already swung almost 2%. We were up at like 1.96. Now you're back to like 1.5. So you've swung about 1.5%. Powell pivoted. I mean, again, everyone's saying that Powell did what was expected, but that's it, bro. Powell was willing to move off of 2 days. Do you realize how confusing this is going to be for the rest of the year? That's it. Powell just got spooked. And if anything, now this is telling you we are at a scale of inflation that you got to go back 20, 30, 40 years to find. 75 is huge. 75 basis point is big. Powell said nothing about this and took this off the table last time. And now they're saying they need to get back to 2%, which they no longer believe they're going to get back to. I mean, this is not good at all. But that was my reaction from the beginning. So now it's just happening. But now you're watching the market kind of react to this here. I didn't make any bank play just yet. If anything, I'd watch the dollar. Dollar's positive now, but it's still fighting. We might chill here a little bit, but if the dollar spikes, this thing's coming down. Yeah, watch out for the pump fake too. I definitely, again, whatever is said on this press conference will be big. So new wording in the statement says Fed is strongly committed to returning inflation. That 3.4 median forecast for the year is about 175 basis points more in tightening. That would mean half-point hikes at all the remaining 4 meetings, or another 75, say, next month, clocking back to 25 in December. But yeah, the fact is they said they're strongly committed to returning inflation to 2% objective, and then they took that out. So right now, the analysts are freaking out about this part. I'm more worried about everything else, but this is what people are tripping on right now. SPY is about to go negative. Again, you just sold off almost 2% here. NASDAQ is still kind of holding up, but they took out this line where they said the committee, they expect it to, wait, that's not the one. Where is it? Yeah, they expect inflation to return to 2% objective. They simply removed that from the statement and added that they're strongly committed to returning inflation back to 2%. So 374, SPY's about to go red. It might bounce there. Dollar kind of topped out there a little bit. Recession confirmed. Possibly, or at the very least, Powell is worried about inflation. That's all I got out of this. 2s and 10s inverted off of that. Where's Shy? I put shit on accident. Yeah, Shy moved down big. Let's see the yield curve. I can't believe he did that, bro. That's it. Now, every single meeting, dude, Powell is, Powell will flip at a moment's notice. That's it. He is firmly committed to those Fed futures. That's it. I'm actually like kind of shocked. Yeah, yield curve is about to invert again. But again, let's watch the bond action. That's the real one. Why are you they decreased Roblox's price target? Now's not the time, Morgan Stanley. Come on. Stocks are herky-jerky after the release. It's already been about a 1.25% move, 1.5%, top to bottom. So be careful with all this. Yeah, read the room. What are they doing? Don't y'all have anything else to focus on right now? They follow the Fed futures. 50 years in running. They proved it again today. But, I think that comes at a loss of credibility for me. Imagine if I told you that. What if I told you, I was like, nah, we ain't going to buy anything for all month. I'm like, nah. And then in 2 days, I'm like, never mind, we buying because the bonds moved up. I think you definitely lost credibility with this one, although people wanted even then, a lot of people thought this was going to be a lot more bullish at 0.75, but nah, this is that's it. This is down the hatch. And again, at this rate, we're just doing stuff that we haven't done since a much more negative financial situation. That's it. Just welcome to the 90s, 70s, 80s. We could keep going down the list. So get ready. That's your first little bounce here of the day. The initial judgment in markets is that headlines aren't particularly hawkish relative to what people were expecting, but let's see if we might get a bigger bounce. VWAP didn't move too much. Again, I would be watching the dollar and bonds right here and see where they go. Banks are still positive. They sold off. NASDAQ everything's still positive. The Dow is the only one that might sell off right here. You got Mad Powell disease. Let's see. So 20 more minutes of this, though, and then that press conference is going to say a lot. So get ready. Let's go. I like the video. Hey, man, yeah, run your likes on the video. God bless you. Amen. Amen. Yeah, you got to follow Troy, too. We put it out here with my Twitter here. You can follow my Twitter, and then you can follow the accounts here, but you could quickly go to Fast Stock News and get a lot of updated news and information. God bless you all. But we got 20 more minutes of this BS right now. Just get ready. You're going to get a lot. Again, it's funny because all the reactions are kind of all over the place. Analysts are saying everybody's getting what they expected. You're still positive on the day, but you've just moved about 1.5%. So let's see if we go below 374. SPY. Dow just went red. So Dow is finally red. Let's see. MYM. Those are still up now. So I'm up on the Dow futures on the day. That's going negative. Got 30 bucks on the Swiss franc. Let's go, man. The yen, and watch out for that. Big candles here, man. Very, very big candles. Yeah, we went over the strike comparison. So ahead of today, many investors were expecting a relief rally on 75, but the Dow's trading flat, S&P up about 0.3. So people are already addressing that. Again, JP Morgan, a lot of people were expecting this was going to be bullish at 0.75, give us a little mini relief rally. So let's see if the first move was wrong. But remember, we did a 1% candle on that. Reject off 50-day. We're going to find out. I mean, I would watch VWAP, especially on this, and then watch the dollar too. That might move before anything, because take a look. It's coming back down here. If that comes down in a weird way, bonds are relatively neutral. Short end of the curve is actually came. That's not moving as much. So maybe SHI might give us some better indicators here. So Bloomberg Jersey says most of the Fed statement was hawkish, but not much more than we expected. We quote, "We still think the yield curve will invert more similar to the 1990s than during the last two cycles, when the 2-year, 10-year only inverted modestly. A more aggressive Fed hiking and slowing economic backdrop should keep flattening bias in the market for now." And that's what you saw. The yield curve is about to go negative again, or inverted. That's JP Morgan's view. So it kind of bounced, but watch out for that. And again, this isn't over just yet. You know what I'm saying? The press, if this was our first move, that press conference is going to have a lot right now. The SHI play is still up, I believe. I don't know if the premiums went up more than where it was. They're back 35 to 45, same gains as yesterday. It's really not moving too much, believe it or not. Friends, if the Fed funds rate is 4, where does the 10-year go? I think people are. We will see where the 10-year goes at 3.5, because in a weird way, once the Fed gets to 4, the short end will rise up. SHI will get very, very high. SHI will probably get around 4% there. The short, anything 1 to 3 years, but then anything beyond that, it might actually get capped out, which leads to the yield curve inverting. Hyperinflation. I mean, that's it. I'm just shocked. Powell caved. Again, he did what the market was expecting, but like we were talking about, that wasn't fully priced in even by the last 30 minutes of Monday. I think the problem is a lot worse than we're expecting now. If anything, for me, credibility on Powell kind of dropped, but now I'm more, that's it. I think the Fed is kind of gearing up for anything back in history, more or less. And then again, let's see what the bonds do, and then watch the dollar here. Bro, 75 is big. How did he cave? I think it's BS. That's all. I've said it all day today. I still believe it without a doubt. You said somebody would get shocked. It was you. I think I got my surprises with it. I think I'm more surprised about them saying they took out the inflation goal, or said that it's not their objective, that they're going to try their best or whatever. So, but we're going to see. We are going to see. But like I didn't believe the again, Powell just changed a month of signaling in 48 hours. I don't see that as a good sign, no matter any way you frame it. Yes, I think Monday's stock market is closed. So get ready. VWAP's not moving much, so if we do make a test up, it's either, honestly, we're either going to flush hard down or we're going to test VWAP. Only way we flush hard down is if we don't make it up to VWAP around here. So be on the lookout for this. Am I bearish? For the most part, I mean, I want to see where the bonds end up after this. I want to see what Powell says, but definitely I got a little bit of the heebie-jeebies after. Again, like I'm saying, I think Powell just moved a little too fast, but he did keep some credibility by listening to the Fed futures. I just think it was more, it was a little bit more of bait and switch by media, more or less, or again, how it was signaled by the market. I think it's kind of nonsense. So Fed raises 75. Kansas City, George dissents in favor of 0.5 point. Inflation reference altered to committed from expects. And then policy forecast signals 0.5 point hikes for the rest of the year. Mike Lowengar of Morgan Stanley. Where'd it go? Or of E-Trade of Morgan Stanley. Quote, even 2 weeks ago, we may have thought a 75 was off the table, at least in the short term, but with inflation not letting up, it has become pretty clear that the Fed needs to take a more aggressive approach. As we entered bear market territory this week, the market may have already priced in a higher than expected jump. That's not to say the larger hike may spook some investors. Keep in mind that as things, where to go? Keep in mind that as we go through a changing monetary policy landscape, we'll continue to see volatility at the market digest new norm. Sticking to your investment strategy during waves of volatility is a solid course of action, aka don't panic. So again, they're even addressing what I'm saying. Some people are still going to be, even though you would think 75 is warranted, some people are going to be a little bit more, shocked by the size of it and all of what this means. We have not bought it in the long term in the last month. We own 15 days from the deposit. What does this do to housing market? Well, rates have already went up kind of leading into this. We'll see where it continues. We'll even see what Powell says. So back up to VWAP. That's a good sign. We're making moves. Maybe the first move was wrong. Hot dog. And then dollars coming down now, so there you go. I think that could be warranted a little bit. Shy and TLT ain't doing anything right now. Fed swaps price 75 for July, 140 over July and September. And then for the record, no change in quantitative tightening program. Not that any changes were anticipated before. XLF is bouncing up. Tesla's coming back up now. Powell's watching. He'll tune his tone based on whatever it does. We'll find out. What time is it? We got 13 minutes. 13 minutes to the Fed. They did 75 basis points. Yes, the Fed is hiked by 75. Changed a couple statements. Elon Musk appeals ruling upholding the Twitter sitter deal. I think that was a little bit older. I don't think 75 is fully... People are just digesting it. That's it. I have to come to terms with it. Everybody else is coming in terms of it. Now the next question is like, oh shit, 75 is big. Okay, you got what you wanted. If it was really expected, you got it. But now what does that tell you? 0.75 is huge. Again, we haven't done it in a very, very long time. So now we're kind of just... Everybody got what they wanted. You got the little reaction. We still haven't even heard from Powell, but now there's still a lot of questions on the table now. And now what does this say? What does this mean now next? So let's see. Anna Wong, Bloomberg chief economist, quote, FOMC supersized hike coming even as the economy shows signs of cooling, reflects the Fed's alarm over the recent rise in inflation expectations. Chair Jerome Powell determined not to repeat the same mistake of Arthur Burns, who led the central bank during the wage price spiral of 1970s, with the largest rate movement at the meeting since 1994 and a signal of more tightening to come. Bloomberg believes the behind-the-curve Fed has put itself in a position to catch up quickly. So that could be the positive narrative. So again, if people are like, yeah, it's bad, but now they feel like the Fed isn't as behind, that may be your new bullish thesis here. But let's find out after Powell's talking. Watch, the bonds are moving. Another stupid bounce in the dollar. That thing is mad volatile right now. So be on the lookout for it. But now some people, again, you're going to start hearing that on the bullish side. If people are saying the Fed, that's the first time you're getting that from the chief economist of Bloomberg. She's literally saying that now the Fed is in a good position to catch up, as opposed to saying that the Fed is behind the curve. So again, that's the bullish case for right now. Stocks are heading back to where we were. Yields are higher, but still down. Powell's press conference is where it might get more volatility. Why should we be trusting Powell? I think every single Fed meeting is going to be super volatile. That's it. Pretty much the CPI is going to move like the Fed. Esther George's dissent is a surprise. She's been regarded as the longtime inflation hawk and has dissented as a hawk in earlier years, but in the past year she's emerged to be much more moderate and centrist. Even so, a dissent in a dovish direction is new ground. In a recent speech, George has urged the Fed to be very deliberate and intentional, and considering how tightening is affected by reductions in the balance sheet, she may have well felt 75 basis point, which markets priced in this week, was just not deliberate and intentional. Let's see. 75 is bullish. It's bullish if you believe the Fed is no longer behind the curve. It is bearish in the sense that, in my opinion, I feel like Powell just panicked. That's it. And that means they're willing to move it at a rate that is just very, very large. Again, 0.75 ain't nothing. It ain't nothing soft. Powell is going to be on in 10 minutes. I just put out a stream alert, so it'll be good. FOMC statement. Oh my. Panic or not, this is most likely the right move. Maybe so. Again, it's bigger. I think that's maybe a lot of the other stuff, the logistics of stuff is a little bit wilder, but I feel. Man, oh man. But get ready. Again, we've been moving within what, 1.5% for the last 10 minutes here. Every 10 minutes, this should be causing fear. Well, give it time to set. Let everybody digest this. Guggenheim Scott Minierd on Bloomberg says all the numbers the Feds are throwing out today are in fantasy land. So some people might still not be happy. Low key. So we're coming down again. Neil Duda, Renaissance. Slower growth and more aggressive Fed is a recipe for recession. For political leaders that have been begging the Fed to answer their constituent calls, be careful what you wish for. It's flipping negative now. So you just got like 3 analysts right now, and now they're saying they're saying the opposite now. Now you're getting some of the freak out here, and markets are reflecting that. Another one, Max Gockham, chief investment at Alpha Tri. First off, this is clearly low volume tug of war, but bears are winning. Policy rate going up to 3.4 from 1.9 is hawkish, just not because of the move, but it shows the Fed can now very quickly get even more hawkish if data pushes it. We could see them hike it even further at future meetings. That's the point I'm saying now, because now this just means it could just the Fed could get crazy with anything if they wanted to. Man, let's go. What you're looking for is if everything on the table is 101. That doesn't even matter. I mean, clearly the market, as long as the Fed futures prices it in, it doesn't matter how big or panicky it is. People are going to find a way to find it a little bit of bullish just because they're going to say, yo, what's it called? They're going to just say simply, Fed isn't behind the curve now. But now some people are getting a little bit worried that this is just highlighting, be careful what you wish for, because now you have growth slowing down, people firing people, layoffs, but then you now have the Fed raising aggressive in this negative environment. So that right there, now people are going to look towards recession, but thankfully you have the bond market to show you what to do. So if people aren't worried about inflation, then in recession, bonds will go up. But if the bonds keep going down, I think we'll find the truth of this, more or less. 5 minutes. 5 minutes till pow. Oh, wow. They've never had it on this early. Damn, I already got the podium live. I do have physical gold and silver, but it's not a big portion of my portfolio. Bro, that's actually crazy. Usually they have like some stupid music or something. All right, we'll keep this up here. I'm getting it set up. Dude, this is it, bro. Everybody's looking at it. We're now near the lower end of the range, which is, I mean, it's good and bad, depending on how you want to look at it. At least this could have been bigger, though, I'd say right now. But every question here, I will give commentary above it. So if he says anything groundbreaking, given the nature of this speech and how important it is, I'm going to try my best to not interrupt. But, yeah, we're going to bring that to you here and just see how this plays out. Again, this is already ready to go. Usually they don't have the camera on here, so get ready. That's a big mistake. The Fed is insane. It might be. I mean, that's it. The whole point is whatever happened today, this may come back. Is it bad? Well, it depends how you want to look at it. Like we said, some people think this is good because now the Fed is being aggressive. They're thinking the Fed is not that behind. The market was quote-unquote pricing this in. However, some people would say this is bad because now in a recessionary environment, things slowing down and the Fed raising this aggressively, then this isn't going to be good. And then on top of it, just the way how quickly the Fed went from signaling the exact opposite to one data point changing everything. For me personally now, I believe the markets are 10 times more vulnerable to every single set of data here in the future. That's it. Just simply put, that's the best way. That's what I think today showed us after all of this, is that the next CPI, the next minutes, or whatever economic data that comes out, it will definitely move the Fed in a second without any delay. Oh. CL, oil up or down? Down. Damn, oil's down. That's good, though. Maybe this is what happens when you raise almost a one full basis point or 100 basis points. Gonna walk out early. So, well, you got 2 minutes, ladies and gentlemen. So here it is. We are entering the press conference near the low. You ain't Powell. I was like, damn, Powell really called in sick today. Again, bottom left is TLT, bottom right is the dollar, and then I'm going to put up like Tesla and random ones throughout the day. Can you give context on Twitch and leave YouTube quiet? I think we'll try a little bit of both. If YouTube turns into a bunch of babies, I'll just mute it, and then we'll talk it on the Twitch. So we'll find a way. And, yeah, like the video. We need your help. So you need to support the channel and like the video, and we need to verify the bots. Get ready. I'm hyped, bro. That's it, bro. 1 minute, 50 seconds, ladies and gentlemen. Get ready. We're going to start the press conference near the lows. Bonds barely moved throughout all this. They're at the same spot, and then the dollar is slightly higher following the release. So let's see where we go from here. And just get ready. This is game time. Game time. 375. Like the video. Come on. Come on. If he drops the R word, I don't know if he'll say recession, but someone's going to ask him that question. Someone is definitely going to say, okay, you're being aggressive, but what about the risk of and again, watch out for any of the questions related to 100 basis points, and then any questions related to him flip-flopping, again, or the speed of how he did it. And then anything with economic projections, and then anything about the Fed futures or the neutral rate around 4 and where they have it now, and then abandoning the whole what's it called is going to be where he abandoned the they abandoned the 2% target. There's our guy, ladies and gentlemen. It's game time. Here it is, Chad.
Good afternoon. I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply.
Bonds aren't moving. Be on the lookout for that.
As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories.
Again, most of what you're getting right now,
Core prices
this
rose
is already
4.9%.
pre-written. You already know this, so this is
May,
not
the
moving
12-month
things.
change in the
This is
consumer
just
price
kind of the
index came in
reaction.
above
Once they ask him
expectations at
questions,
8.6%.
it's going to start moving bigger.
And the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials.
Kohl's is popping,
like food,
KSS.
housing,
Take a look
and
at that one.
transportation.
Could be a buyout deal.
We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%.
Some people are saying, notice the paper
As shown
shaking.
in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer-run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer-run value. Of course, these projections do not represent a committee plan or decision, and no one knows with any certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase
that
is an
paper is
unusually
shaking.
large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
I think he's taking off anything off the table with
Our
that.
overarching focus is using our tools to bring inflation
saying at any meeting
back
we
down
can
to our
change.
2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain
Massive dollar
environment
dump.
requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, this is game time, ladies and gentlemen. None of this is
Thank you.
scripted.
Howard Schneider with
This is
Reuters.
where it gets big.
Two related questions, Chair Powell. Did you feel you boxed yourself in with the language you used at the last press conference on 50 basis point hikes in June and July? And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook. So, and I think over the course of this year, financial markets have responded, and
the market's
have
coming back up,
generally
bonds
shown
and
that
dollar
they
finally
understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it. And of course, when I offered that guidance at the last meeting, I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data.
Watch for
and
the
also
380,
some data
150
on
level.
inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
I think market likes it because it shows he's, again, that's Powell being aggressive, not behind the curve.
Thanks
That's
for
pretty
taking our
shitty answer.
questions. Gina Smilik with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have, and why not just go for a full percentage point at
You're
some
breaking Monday's level.
Sure.
That's pretty bullish
So,
right there.
If you take a step back,
If you get above
what we're
382,
looking
it's
for
going
is
to be good.
compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels. And over the course of the 7 months since we pivoted and began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels, and we came to the view that we'd like to do a little more front-end loading on that. So I think that the SEP gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second, what it really says is that committee participants widely would like to see policy at a modestly restrictive level at the end of this year. And that's 6 months from now. And so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are. And that's what they want to see, knowing what they know now and understanding that we need to show resolve, but also be flexible to incoming data as we see it. If things are better, we don't need to do that much. And if they're not, then we either do that much or possibly even more. But in any case, it will be very data dependent. Then you're looking at next year, and what you're seeing is people see a bit more tightening and in a range of maybe 3.5% to 4%. And that's generally what people see as the appropriate path for getting inflation under control and starting back down and then getting back down to 2%. So 75 basis points seem like the right thing to do at this meeting, and And that's what we did.
Steve Leisman, CNBC. Thank you for taking my question, Mr. Chairman. You have not used the phrase in a long time, monetary policy is in
This
a
is a
good
big
place,
level,
which is a
382.50.
phrase that you used to use often. Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year, do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5% to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also look at the yield curve and ask, all along the yield curve, where is the policy rate? So for much of the yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of financial conditions. So I think I have to look at it this way. We move the policy rate, that affects financial conditions, and that affects the economy. We have, of course, rigorous ways to think about it, but ultimately it comes down to, do we think financial conditions are in a place where they're having the desired effect on the economy? And that desired effect is, we'd like to see, demand moderating. Demand is very hot still in the economy. We'd like to see the labor market getting better in balance between supply and demand, and that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still, pushing upward on inflation. So that's really how I think I would think about it.
But does 3.8%, 4% get it done? Does it get the job done of breaking the back of inflation?
I think it's certainly in the range of plausible numbers. I think we'll know when we get there, really. I mean, honestly, that would be, you would have positive real rates, I think, and inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days. So I would think it would, but you know what? We're going to find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation expectations. So you've got the public, you've got surveys of the public and of experts, and you've also got market-based. And I think if you look across that broad range of data, what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%. And so this is really very important to us that remain the case. And I think if you look for most measures, most of the time, that's what you see. even if we even see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary Michigan reading, it's a preliminary reading. It might be revised. Nonetheless, it was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking, this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations, would that put a 75 or even 100 basis point increase in play
This is the question.
at your next meeting?
You know, I'll just say we're going to react to the incoming data.
That's not good.
And,
that's not a good hand.
appropriately, I think.
Every
So
data point is going to be
I
so
wouldn't
much
want to
more
put a number
volatile.
on what that might be. The main thing is to get rates up, and then pretty soon we'll be in an area where we're, I think, as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive. So,
Dude, you literally have no
I think
idea
that's
what
how
they're
we'll
going to
take
do next now.
Hi, Chair Powell. Neil Irwin from Axios. Thanks for taking our questions. The late-breaking kind of decision to go to 75 basis points, do you worry that that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation or if the labor market starts to roll over?
To take your second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. It's always a trade-off, because you have to live with that guidance. And so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. This is the same speech you
gave for transitory.
With us having really just done a very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause. Even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point, and we'll react appropriately to that too. But I would like to think, though, that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, very close to our meeting. Very unusual to one that would actually change the outcome. So I've only seen in my 10 years plus here at the Fed, I've only seen something like that, even close to that, one or two times. So I don't think it's something that'll come up a great deal.
That's what I was freaking out about today. He just said it.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
Sorry, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series of declining monthly readings for inflation, and we'd like to see inflation headed down. So but and right now our policy rate is well below neutral, right? So soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you, that you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and we're looking, ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down. And that's what I mean by, that's what it would take for us to say, okay, we think this job is done. Because we saw, and frankly, we saw last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't. The monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take for example in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Well, that was a
Thank
crazy
you for
answer.
taking our questions.
We're going to come back to
Rachel
that.
Siegel
Hope
from
you're
the Washington
listening.
Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So you're right. In the SEP, we have unemployment going up to the median is 4.1%. There are, of course, a range of actual forecasts, and I would characterize that if you were to get inflation down to, on its way down to 2%, and the unemployment rate went up to 4.1%, that's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
Does that include people losing their jobs, or?
We don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where, where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic, where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see, disparities between various groups at historic lows. We'd love to get back to that place. But to get there, it's not going to happen with the levels of inflation we have. So we have to restore that. And it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Bosa with Bloomberg. So as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate and the SEPs over the next couple years. And it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though. So I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now to bring inflation down.
Not trying to induce a recession now. Let's be clear about that. We're trying to achieve
the question.
2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways have become much more challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in Ukraine, which has brought a spike in prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger and longer lasting than anticipated. So the sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. The sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just didn't seem appropriate, so we took the sentence out.
And given the new projections for the unemployment rate, could you talk a little bit about what accounts for such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out? Thanks.
Well, yeah, I think you've seen, again, we've been expecting progress, and we didn't get that. We got sort of the opposite. So I also think the situation, really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. And you look around the world, I mean, lots of countries are looking at inflation of 10%. And it's largely due to commodities prices. But all over the world, you're seeing these effects. And and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really, and by the way, headline inflation is important for expectations. The public's expectations, why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to. So expectations are very much at risk due to high headline inflation. So it's become the environment has become more difficult, clearly, in the last
At least he
4 or
admitted
5
that.
months.
That was good.
And hence the need for the policy actions that we took today, hence our resolution to, to get rates up and ultimately get them to where we think they need to be in coming months.
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're, of course, watching very, very carefully for that, and looking at the retail sale, the big store numbers and all that kind of thing.
Somebody needs to ask him about the layoffs.
But I think the fair summary of what we see is you see continuing shifts in consumption. You see some things sales going down, but overall, spending is very strong. The consumer's in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending. But we watch everything. We watch business fixed investment, which actually has softened a bit. We're responsible for watching everything. But, consumption is 60-some% of the economy, 2/3 of the economy. So naturally, we spend a lot of time on that. And again, there's a lot going on. There are a lot of flows back and forth. But ultimately, it does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
Thank you, Mr. Chairman. Michael McKee from Bloomberg Radio and Television. Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
So
that's a great question.
We're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too. Also, other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in, and we can't do much about the difference between the elements that make up headline that are not in core.
Could I just, as a follow-up, get a clarification on the SEP? When the members gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is of one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you've talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
So I think the role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right? So, and we'll be able to see the areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation that we're seeing, but going forward, they would be very important, particularly in the service sector. So, sorry, I'm not sure I'm getting to your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. We have to restore price stability. We really do. Because everything, it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to. It won't work for people. Their wages will be being eaten up. So we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation down to 2%, and that's critical. It's absolutely key to the whole thing that we sustain that confidence. So that's how we're thinking about it.
Hi, Brian Chung with Yahoo Finance. I just want to expand, I guess, on what you just said now about the general public feeling like you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up, recession just broadly being dinner table talk, does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
So clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways. And we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So, I guess what I'm saying is the really critical question from the perspective of doing our job is making sure that the public does have confidence that we have the tools and will use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier measures of inflation increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to? Where do you see those going in the near future?
So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. In particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. Some of that will be passed through of energy prices, but so you're experiencing services inflation. Shelter inflation is high. So the question, and you see the Cleveland measure going up, and many other measures are going up. So it's a time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the SEP looks like it does, is that we see it as appropriate to get the policy rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you see, you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%. That would be, I would call that as meeting that test. Do I still think that we can do that? I do. I don't want to be the handicapper here. That is our objective, and I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges, and again, the answer to the question, can we still do it? There's a much bigger chance now that it'll depend on factors that we don't control, which is
it's possible
fluctuations and spikes
says, yes,
in
they
commodity
can do
prices
it, but
could
now
wind up
it's
taking
risky.
that option out of our hands. So we just don't know. But we're focused on, very, very focused on getting inflation back down to 2%, which we think is essential for the benefit of the public, and also to put us on a path back to a sustainably strong labor market like the one we had before the pandemic.
Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer, and that now there's even more risk of a recession than a 50-50 path of rates. So could you talk a little bit more about that, and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. And even if we did another, we're going to get here by the end of the summer somewhere in the 2s probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the 3 to 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So again, we'll be determined and resolved, but flexible.
Evan Reiser, Market News International. Thank you, Chair Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given the inflation, and will that be shared with the public? And then secondly, given the illiquidity and extraordinary volatility in financial markets, Are you concerned that QT will make that worse?
Sorry, what was your question on QT?
Just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
So, of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate the extent of interest we have in that question, morning, noon, and night. So, but you have to understand the context. For really
New
the
low on the
context is
dollar.
this.
Finally,
For,
we might move up a little bit more
decades
active.
before the
not related to
pandemic
what
and
he's
the
saying.
reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or aging demographics, let's call it that, globalization enabled by technology, other factors, low productivity. So, and that's how all the models work. Is decades and decades of data. They look at that. It's a very flat Phillips curve work, and the supply shocks tend to be transient, right? So we have now experienced an extraordinary series of shocks, if you think about it. The pandemic, the response, the reopening, inflation, followed by the war in Ukraine, followed by shutdowns in China, the war in Ukraine potentially having effects for years here. So we're aware that a different set of forces are driving the economy. We have been, obviously, for quite a while, that these forces are different. Inflation's behaving differently. And in our thinking, it really is a question of very strong demand, but you couldn't get this kind of inflation without a change on the supply side, which is there for anybody to see, which is these blockages and shortages and people dropping out of the labor force and things like that. So that's how we're looking at it. And we've done a lot of work internally on and thinking about what all that means. The thing is, you don't know whether those forces are, what extent are they going to be sustained. In other words, will we go back to a world that looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on? The history is you see these waves of supply shocks, as you did in the 70s, and then they go away, and sort of there's a new normal and things settle down. But honestly, we don't know what that's going to be. In the meantime, we have to find price stability in this new world and maximum employment in this new world where clearly inflationary forces you're seeing them everywhere. Again, if you look around the world at where inflation levels are, it's absolutely extraordinary. It's not just here. In fact, we're sort of in the middle of the pack, although I think we have, of course, a different kind of inflation than other people have, and partly because our economy is stronger and more highly recovered. So that's what we're doing. We've done a lot of introspection and work on that. And sorry, on QT, we've communicated really clearly to the markets about what we're going to do there. Markets seem to be okay with it. We're phasing in. Treasury issuance is down quite a lot from where it's been. So I have no reason to think, markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Thanks. For the last question, we'll go to Mark Hamrick.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously, and so the demand was just suddenly much higher, and low. So we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. It's obviously we're watching that quite carefully. You would think over time. So there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels. So, thank you very much.
Wow, thank you, pal. All right, everybody adjust your mic, because I'm going to start screaming. You know what I'm saying? I don't want you to get the Powell bro, but okay, are you guys ready? So, I got two things for you. I'll give you my outlook on it, but I'm not going to start there. What we need to talk about is why did we go up and down. I even draw these 2 points here. Again, my line's a little messed up, but pretty much this is when the Fed report came out. This is the high of the day. Again, right now we are only about 1.5 points, maybe about a point above where it is. So why did we start rallying up here? There was one quote by Jerome Powell. He said that 75 basis point will not be, he pretty much said he doesn't plan on doing it too often, that's not the plan. And even a couple of economists, even Fed futures right now, they are all pricing in 0.5 point for the next quarter, okay? So that's the first part. Why did we start going down? This is now what kind of factors into my view. We went down a little bit right when he said that there's factors outside of his control pretty much. They were asking him about the recession, the soft landing, how he would respond to 100 basis points, if you remember that. And he pretty much said they're going to do whatever they can, but they got to be flexible. And now that's pretty much it. Again, like I'm saying, it seems like we did a lot in a weird way. You kind of had a bigger move here, like I'm saying, from the high of the day right now. You're about less than 2 points above it, almost 2 points if we could go higher from here, and that's key. But I don't know. I'm still watching the bonds. The bonds have not broken out of the day. The dollar is the only thing that has actually responded quite bullish to all of this. So if anything, if the dollar stays down, that's good. But I am not. What's it called? I think the Fed is in the back seat now. That's it. That's kind of how I'm viewing it. So I still like Powell. He's a good guy. But I don't really trust it as much, because pretty much all he's saying is that whatever happens, it's all on the data. That's it. So whatever data comes by, I will tell you this, what I got from this speech, every single data point is going to be so much more volatile right now. That's what I'm getting. I think the Fed is saying, hey, inflation isn't doing what they expected. They're kind of in the back seat now. If the data goes up, they're going to raise higher. As far as 100 basis points, who knows? If the data calms down, they're going to chill. Everybody in the market will be chill. Some people are feeling good that Powell was a little bit more aggressive today, but he didn't really have an answer as to why he signaled. And that's the question I said that was most important. Remember, I said that's why I was freaking out here today. He said it. He said it was very rare. He's only seen it once or twice in his history where the data came out right before during the blackout period, and they were kind of forced to either make an aggressive decision or wait another 6 weeks. So it's interesting that he commented on that, but that's it. That's what I'm saying. I like the guy, but I pretty much trust data more than Powell now. And the irony of all of this is that data dependent equals transitory. I hate to break it to you. So I don't know how everyone's going to take this in the long term. Again, the one thing I'm looking at with my theory in line, the bonds didn't really move much. Again, we are not moving the same way here with the market, even from the top of the day. I don't think we're up too high, but just get ready. I mean, volatility is not going away for the next 6 weeks minimum. I could promise you that, or whatever data set, the next CPI, the next producer prices, anything, PCE, consumer confidence, the markets are going to respond a lot different because I think everybody got the message. Powell will respond if the futures price it in, even if it's within 1 hour. He doesn't give a shit. But the problem is, any data is going to either push us more aggressive or push us all the way back. So pretty wild if you think about it. Pretty wild. But besides that, the only two things were, he said that 75 basis point won't be continuous. Market like that. He kind of left a lot to unknown and outside of his control. Market doesn't like that, and then we'll go up. I sound upset. I'm not too upset because, again, the bonds have not moved, and that's kind of worrisome. I'm just like, I'm more surprised, or if I was going to be disappointed, it's in the fact that Powell is not driving anymore. That's it. Like, Powell, I love the guy. I think he's great, but all of those answers, the way he positioned, the way he kind of, was able to do that so quickly, and even his response as to why and how they did it, I just think that from now, I think we're going to get a lot more volatility. That's all. But I wouldn't say I'm too upset or at all upset in any way. I still think we got the next couple days to watch this, but it's just not – it's the same bullshit we've been dealing with. I mean, again, we're not too much higher than today's high. It's good that we got above Monday, and we're going to see, but we're kind of in no man's land. But let's see. We got, 30 minutes left? It ended a little bit earlier. I'm not buying gold. No, not buying gold. Like, yo, I effed up. He didn't really say that, but again, everything is going towards I'm still pretty bearish on all of it. I mean, I want to see how the market takes it. And again, like we said, this was the turn. So let's see the flop coming into tomorrow. And he did say housing will reset, but I don't know if you guys listened to all of it. What he said was he was talking about mortgage rates, pretty much where rates have to prices need to relax a little bit, but mortgage rates, that's what he was referencing the reset to. But we will see, baby. He was nervous all day on that, but that's good. I mean, it's good to see the market taking it off, so that way you could confirm some of the relief rally expectations for some people, which is good. I think Friday is going to be the river. Today is Thursday, but now I don't think – let me check the data. We don't have any other data releases that can move anything. You get housing starts tomorrow, initial jobless claims, and then next Monday you're going to get Fed activity. Let's see. Oh, Monday's closed. 21 is the next week. You get consumer sentiment next Friday and new home sales. That'll be it. But otherwise, it's going to be good. Today is Wednesday. Yeah, so tomorrow we let that burn one day, and then Friday. That's going to be the that'll be the flop right there. Gas still high. Again, wait for the reaction on this. Again, this is, I'd say we're up about like 1% now, 1.25. Let's check the ECMI. It's not updated yet. So 1 hour, we're actually, this is in a weird way, it's been an average response, believe it or not. So here's today. Here's the move within 1 hour after the release. We were at the upper bound of a positive response, and then we came right back down here. NASDAQ is about 3.81. Again, we gapped up at 1.5. So that's where I'm kind of putting it in perspective here. Coin Beto even bounced up there too. What if all the data is wrong following the FOMC? It'll be, I mean, that's what I'm saying. It's just going to be a lot more volatile. Powell, again, he gave the market what they wanted in the sense of being more aggressive. However, the way he explained how he got to it, I mean, I don't know. It's harder to, it's very hard to, again, I think I lost a little bit of confidence in Powell today, but it's just all going to boil down to that data. We're just going to whipsaw. That's it. Whatever data is good, we're going to respond bullish. If it's bad, we're going to go bearish, and then Powell's going to come on, and then wherever the futures are at that point, then it's going to drive it home. But that's pretty much what we're going to be dealing with now. Everyone is super bullish. I mean, people like it, the dollar coming down, but again, you see it on the week. It's not. I don't like the bonds not moving. That's the weird part, is that bonds are at the same place of where we started. That's why tomorrow and Friday are going to be key. But again, we're about 1.5% now above where we gapped up and then the opening. Sounds bearish. It sounds volatile. That's how I'm taking it in. That's why I'm saying, like, it's like if I'm going to be disappointed about anything, is that Powell just introduced a lot more volatility into the market to accomplish what he needs to do. Does that make sense? That's where I'm saying it's like, damn, I'm like, I can't believe he's taking that step, because I'm like, all right, well, that's pretty big. But for him to accomplish what he wants and to do it, again, they're even being a little cautious how they're viewing the soft landing, but that's it. It's just that he is going to introduce more volatility. You could say it's good, but it doesn't necessarily guarantee what you're looking for. So if you want things to level out and you think it's good that prices go down, I feel you on that. However, this does not solve that problem. All this is going to do is create a stock market that is going to be very reactive now to every single piece of economic data. And now we have evidence that Powell's words are it's Mickey Mouse. That's it. So Powell can say whatever he wants today. If that CPI comes in higher, even on headline, and they're going to ignore core, like he said, if that goes up, it doesn't matter. They're going to raise the rates. And depending on how high it goes up, they will raise it as high as 100 basis points, whatever it may need to be, and vice versa. Anytime good data comes out, even if it's for 1 week, you're look at the bullishness today. People are going to buy that shit up, and it's going to send money moving in a very good direction. But it's now really up to whatever the data says. But the ironic part about that, like I said, that is arguably the same answer for transitory. So, well, he says recession isn't there. So they asked him explicitly, and again, we were all waiting for that. He said the soft landing is possible. The answer to that question is yes, a soft landing is possible. We can't avoid a recession. However, it is not up to his control. It is outside of his control, and that's where I'm saying Fed is in the third row of the back seat by this point. So that's that first part. But then recession, he said, let me make it clear, we're not there. As long as employment and everything else is there, he said recession is not in play, and they are not trying to force a recession, which is, again, that's kind of bullish, but that's if you believe my man right now at this point with everything else. At this point, that's it. Powell has there's no shame in giving guidance today. If the data is bad 3 months from now, 2 months from now, they're going to throw everything out the window. Basically, Putin is driving the car. Not necessarily, but I would say service-side inflation is driving the car right now. And if that continues to go up, if that starts to hit headline CPI, they can't even look at core anymore, and they can't even, again, he said headline is the most important thing because they acknowledge that people eat food and live in places and actually use energy. So that's why they're saying headline now is going to be the big one. But yeah, it's kind of setting him up for a pivot. Very, very good comment. But right now, it's like a pivot without fully being in a pivot because it could go any way right now. We could get 100 basis points by July. Y'all don't feel me. If that CPI comes in above 8.6, we're going to get 3/4 or 100 now. And Powell won't have, and there's nothing to say he won't do it, let alone all of his answers today. He will say what he said today. Just look at the data. It was outside of our control. Again, we said we weren't able to do it. So there you go. But then vice versa, if the data ends up becoming good, the market, that might give you a little mini of a summer rally up until he will have to make a sharp U-turn if the data makes a sharp U-turn as it did. So that's why I'm saying it's like just Powell is just in the he's in the third row right now, the back seat. It's just all up to the data. So that means more volatile markets, or at least how I'm interpreting it. Until we get to that point, I think price stability is still going to be all over the place, but Powell is definitely not in a leading role anymore, and even trying to stop it does not seem to be, it just doesn't seem like that this is all he could do. just respond if the market prices it in. They could be aggressive, and that's about it. So all the data points from here on out are really going to be the keys. William Dudley, former New York Fed pres, says, I think the Fed forecasts are still remarkably optimistic. And then, here's another one. Are you ready? So maybe before that, you have June 22nd, we have Powell at the Senate Banking Committee. And then June 23rd, you're going to have Powell before Congress or the House. So maybe we get other headlines from there, or we'll see how the data changes. But realistically, your only big data set now is consumer sentiment next Friday, and then real estate data. And then today you had bad retail sales data. Is it next week? Yeah, pretty much next week, Wednesday, Thursday, you got Powell before Congress. So that will be our next opportunity to hear from him, and maybe something changes. Again, we've seen that happen where Fed meeting happens, Powell goes before Congress, and then he says something. Maybe he brings up the hard landing. Maybe he brings up anything of that nature. But as of now, again, the Fed is data dependent. He just didn't say it like that. But remember, they said the same thing with that's the same logic for transitory, which makes it that much more interesting. Feels like 30 minutes will be way more important than this meeting. We'll find out. We got 20 minutes left, but Friday, tomorrow, or Wednesday, Friday, not tomorrow. The day after that is going to be now we get this big expiration. I can only imagine how people are positioning today, and then we'll see. But again, look at the lines that I drew today. One, this is where the Fed meeting started, right? And this line right here is where we hit the high of the day. So it's like we did a lot of movement, but you are literally up 1 point now from where we were at in the morning. So that's why I'm saying it's like I think the reactions are still all over the place. I don't know if we'll go below V. We'll see. We'll see how this ends. We got 20 more minutes. We'll see the close on the market on close and all of that. But again, I would just be on lookout for any other data. Wait till the rest of Wall Street interprets this again tomorrow. But I'm still kind of leaning more till bearish until I see the bonds do anything. The one thing I like that's bullish today is definitely the dollar. This is good, but I mean, it's still kind of shitty for the week. The dollar is barely getting below where we were at Monday, kind of where we were going up from. So we're going to see how it plays out. But the bonds, I mean, they did not move more than they did today, and that says something to me. Again, I just my confidence in Powell is like, I like him still. I think he did very good today, but it just does not seem like that's it. He's not making decisions at this point is all I'm trying to say, is that it's all up to whatever the market and everything else. He's gotten ahead a little bit. This was a good sign that he was willing to do that, but it came with a lot of other things that we have to now factor in. Friday's the expiration. Tomorrow is a VIX expiration, so maybe that could help with something, but we'll see. Yes, they did 75 basis point. Market liked the fact that Powell said it's not going to be continuous, but they didn't like the fact when he said that recession or that a soft landing and other things are outside of his control, and that could open up the door to even raising more. So he did do good today. Again, he did do good because now he won't be in this situation next month. That's it. Powell has made it very clear. He's going to respond to the data at this point. So even if he wants to go 100, if he wants to go 25, I don't think anybody is going to care as long as the data represents that. That's just simply it. So it got him out of a corner for next meeting, but I definitely think it came at a price of some level of credibility, which is going to get reflected in market volatility as every single data point comes out from here now. He took back control a little bit, but he took back control by not saying he's in control. You see what I'm saying? So that I could agree with that if you feel me on there, is that literally he did get back his control, because like I'm saying, next meeting he could go 50, 75, a quarter if he wanted to, but the data has to, as long as the data warrants it, that's going to be it. So you can't blame him for the pivot like this week. We can't blame him on anything for the next time around, but now every data set get ready for 3%, 4% CPI reactions. Get ready for the Fed minutes to move the market 1%, 2%. Consumer sentiment, retail sales, beige book, PPI, PCE, anything you could think of, especially if it's been doing bad. Those are the things now that are really going to push the Fed futures, and Powell is going to listen no matter what, is the answer we got from today. Powell has mastered the finesse. Now he's data dependent. But again, that's the BS, because data dependent is literally the same line of logic they use to defend transitory. So it's kind of said this is now transitory, but now the Fed is going to do something at every single point they can. That's it. The difference was a year ago with data dependent, they weren't doing shit. They were like, nah, bro, it's good, bro. We going to do something. Nah, just wait. It'll come down, bro. It'll come down. Now they're saying that's it. It's pretty much transitory, but every single data point that's not transitory, they're going to just start cutting the rates at whatever rate is warranted by the Fed futures or by the data itself. But data will affect Fed futures. Powell will listen to Fed futures. That's the logic. It's simple. But now, like I'm saying, there's nothing good or really bad about this. I think everybody could find bullish and bearish in today. However, I am now expecting a much more volatile market, as the data will just drive everything a lot crazier. Oh, you like the comments? You sub now? God bless you, my friend. And thank you if you liked the video. Glad to have some of you. Again, be here on Friday. Tomorrow will be a big day too, but Friday's expiration, that is another catalyst. So we'll see. But keep it positive. Y'all have been good. We've had a lot of good conversations. You got 15 minutes left. And get ready. Watchlist tonight too. Oh, man. I think the uncertainty is kind of bearish. It is, but at least you know Powell will react aggressively now. But I just don't. That's it. I don't think Powell is the head of the. Powell is no longer the captain, which gets scary because Biden was like, nah, I'm not the captain. It's Powell. And then Powell just came on and said, nah, man, I'm not the captain. It's the data. So now it's like, well, wait, what? So it's just like, no, you don't know who's in control right now. And that could lead to the inflation expectations becoming unanchored. So we'll see what happened. But at least Powell responded aggressively. That does something better than nothing, or better than soft, more or less, which is how a lot of people are going to read this today. China's in control. I mean, anybody. I don't know. That's it. That's what I'm saying. There's just there's an eerie feeling that, again, it's nobody could control anything. And that right there is very counterintuitive to this idea that Powell is Daddy Powell. That's why we call him Daddy right now. Otherwise, why the hell am I going to be calling him Daddy if he can't even tell me what he's going to respond to? That's it. Hold up, Dad. I'm just saying. This is where your kids start questioning all of your life. You know what I'm saying? It's just like, hold up. Like, it's kind of stepdad now. Because I'm like, what do you mean? Pfizer wins FDA panel on COVID shots for infants. Is deadbeat Powell? Nah, it's just all of a sudden Powell's just not showing up to the baseball games and shit. I'm like, what do you mean? Well, I'm like, hold up. He's like, nah, man, we just going to see what happens. I don't know. I mean, technically, you could have a soft landing, but that's not in my control. So, I don't know, man. I don't know. But now take a look. You're back to the highs of the day. And then slightly above where the FOMC came out. Bonds are moving this time, so this is something I'd want to see. Until I see bonds break a level from today, you didn't get anything out of today. Blast Rock City in Yemen. I think the market is only focused on Powell, though. big expiration bullish or bullish or bearish, either or. It just really depends on how much is being positioned, how much percentage is in the money, and then that will it'll free up the gamma, or it'll free up a lot of space for some stocks to start moving there. But it's very hard to determine as of yet. But usually a day or so, 1 to 3 days after an expiration, at least this whole year, we've seen 2 or 3 really big moves after it. 10-minute rigged. Oh, yeah, it's coming in. So get ready. You got about 10 seconds here. Let's see the final 10-minute positioning. We'll get the market on close and everything else. Absolutely wild day here. How unethical to leak during this. I can't believe I can't believe 2 comments by Wall Street Journal and JP Morgan got everybody to believe everything, like to quote unquote price it in. That one was surprising, but even Powell said it. He said there's been once or twice in his career where he has ever had an issue where the data has changed so drastically 1 day, 2 days before the meeting in a blackout. So he acknowledged it, but again, his response was, it's outside of my control. We had to do something because we are behind on inflation. That's it. Really. So he didn't admit to it leaking it, but he was just saying, they didn't say anything on the leak. They just said it's the data Friday. But like I showed you, nobody priced in anything till even 30 minutes of Monday's close. It was 50-50 odds. So again, I'm shocked how most of the retail market, again, you had 70% odds in here. Everybody said, oh yeah, it's going to happen. And again, the Fed futures priced it in. So you could argue that it was, but very, very wild to see. Market on close, $3 billion to the sell side. So let's see if a false bull emerges earlier rather than later. Again, even XOM and a couple of other plays went up. I thought that was interesting. But now you're below the high. VWAP is pretty much right where the meeting started, give or take. I'm not good at drawing these straight lines, so yeah. You didn't the housing reset? I did. Like I said, he said housing reset, but he was talking reset in terms of mortgage rates, saying that eventually it'll have to reset and get back to affordable prices. But like I said today, I think worst case scenario, we may see, like worst case, a 10% decline or break even on real estate. But, you guys know where I stand on it. I know a lot of people are bearish on it, bullish. Some people want to see it succeed. Some people want to see it to fail, but we'll see what happens. I will say this. If houses prices don't go down and it doesn't go down by a longer term, then I think some people will never buy a house, is the way I'll put it at this point in time. Because I could see how bearish people are on it and what people are expecting. Mortgage rates need to reset to get a lot of the new buyers. But essentially at this point, depending on what happens in the next year, if it does not come down in the next year or two and give that drop that some people are calling for, I just think some people will never buy a house, because at that point, the psychology will be embedded that real estate is going to crash, and then the demand for real estate is still going to stay, and then it's just going to rocket up and go crazy from there. So let's see what happens. But I agree with his comment towards things resetting in terms of the mortgage rates, but we'll find out. But like I'm saying, like I said, my thesis from yesterday, the only way to break inflation will be to break the bonds, and that will have an effect on real estate. However, I don't think it goes beyond 10% in a year. But let's see what happens next, okay? WWE, what are they doing? A secret 3 million hush pact? I put we instead of WWE. Stocks dropping. You got a candle there. SPY's back at VWAP just above where we opened, or just above where the Fed came in. Yeah, WWE board probes secret 3 million hush pack by CEO Vince McMahon. You think it'll happen? And so if you think real estate is going to happen, I would short the bonds. That's the key. Because because that's the only thing I think brings down real estate. If we watch I don't think it brings it down more than 10% in a 12-month period. But if it does, the only way we see. Okay, wait. Bonds are going up now, though. Hold on, TLT's breaking out for the first time today, and that's kind of bullish. That's all I wanted to see that, but now the dollar's not moving, but that's kind of good. Where's Shy? Shy's still a little up. That one's at least up with the short term. But let's see. But that's what I'm saying is that, again, the inflation, Powell messing up, real estate coming down. Again, even with what he's saying, the bond market going apeshit is what will destroy real estate or will hurt first-time buyers and all of that. So if you want to short real estate, I would say shorting the bonds, it would be the way to go about it. We're in between Fed meeting and highs of the day prior to the Fed meeting. But we were able to hit that 382. It's kind of no man's land between Monday. Bonds are moving up now, so that's good. The WWE news, it came across the wire. I don't know where else it was posted. You might hear it a couple places. Then see if the dollar comes down. WWE did not really even move too much. WWE Dow Jones. TLT puts, not yet, unless the premiums have dropped, but they're still pretty expensive. Again, that's why today's move, it felt like a lot, and we had a lot of anticipation. However, it's we still, you're barely breaking out of the range on the bonds. SPY is in a level it's traded at all day. We're kind of waiting to again, the digestion over tomorrow and Friday. That's really what it's going to be about. The Swiss franc, I'm just worried. Again, we're going to see with everything tomorrow. Damn, we only got 3 minutes left? Oh, my gosh. Only 3 minutes left, Chatadonia. Only 3 minutes left. This market has you in tatters. Don't worry. More uncertainty with all this. I think today gave people a good reaction that Fed is, being aggressive, but it came at a cost of uncertainty. And I think there's a lot more uncertainty because Powell just threw it all to the data again. So I think that's what we got with it. So we'll see what happens, and we'll see by the option expiration. But, even tomorrow, it's good that bonds are finally reacting in a way that they should, but we'll see how the market really takes this. And again, if the bonds start to break out and TLT massively rallies, those recession fears might start to come back again. So let's see how this one plays out. Again, there's just nothing really too telling. The first sign of the day was definitely the dollar, and the dollar got clapped. Still up very high on the week, and we're going to find out where we end up with that. But that would probably be the first place I'd be looking at, and then we'll see any analysts and banks tomorrow. That'll affect sentiment a little bit, and then we'll see where the bonds are at and where everything's going. Oh, yeah, we got to land this shit, man. My bad. All right, ladies and gentlemen, we're making our final approach. So we make our final approach. If you guys are holding on to any bags, please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisle with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal, trading fraternity terminal. That's going to be your nightly watch list and main channel layover around 5 p.m. Pacific time, maybe 4 p.m. if we are able to take off early. But we appreciate you guys' business as we make this final approach into San Diego International Airport. It is about 80 degrees and sunny, looking like a beautiful day unless you bought a call or a put because Theta clapped everybody. But we are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cole Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thanks for flying with the Colt, and hopefully you have a wonderful evening. Let's go, baby. Bring it home. What a day. And you're not leaving in a place that is higher than where you open. So this one is going to be interesting. Emotions and uncertainty is still high. If you're looking for an olive leaf, it's the fact that Powell actually raised that an amount where it looks like he's doing something. So people like that. Uncertainty up. The bonds have moved up a little, which is bullish. The dollar down a little bit, a lot of bit. That is very bullish, but you got to finalize it. 1 minute. Let's go, baby. Let's go. Bring it home, ladies and gentlemen. Bring it home. This is the moment. This is the moment. Time to bring it home. Go, 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 go. You got less than 20 seconds. Probably like 10 seconds left, man. Oh, 4, 3, 2, 1. Ding, 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 ding. Oh, no, let's go, baby. Oh, GG, we did it, we made it, we did it, we made it. Oh, hold on. Oh, I gotta fix this sound. Hold on, I don't wanna. Oh man, GG, I need my GG. It's okay. You can save the GG or drop him now. No, drop him. We need that GG. Okay, we need that GG. Give me that GG, bro. Come on. There you go. Let's get it. Let's go. GG. Okay, we need our outro music. Ah, there it is, baby. Let's go, Chad. God bless you, everybody, especially if you were new. I need a GG. Whether you made money or lost money, I know you learned something, baby. This is for the people working on their craft, the people who believe in good sportsmanship. Imagine all the agreements, disagreements, everything today. I need a GG. It shows you got love in your heart. It'll forgive you. If you drop a GG, you must forgive a GG. Oh, there it is, baby. God bless you, baby. Shout out to Cole. Amen. Amen. GG, baby. Oh, man, what a day. What a day. There it is. Oh, I love the first-time viewer. Oh, I love watching the GGs. There you go, baby. Oh, hey, man, what a day, baby. Oh, welcome to the call. Welcome to the call. I love to see the GGs. There you go. Oh, the GGs. There you go. Hey, man. Oh, my gosh, what a day, Chad. Uncertainty. 75 basis points. First time since 1994. I need a GG to that. Oh, my gosh. Oh, my gosh. Oh, okay, cut it. Cut it, Chad, cut it. Oh, my goodness. Chad, that's the day. Oh, my goodness. Ladies and gentlemen, how do you feel? So if look at 50-50, the Chad was right about 75. Seems like some people thought it was going to close red. 52%. We're going to thank you for voting. God bless you if you liked the video. Oh, my, how many likes do we have? Hold on, I need to see this like counter. Where's the like button? Do you guys have a like button? Oh, man, let's see where it's at. Today was a big one. Today, I feel it. Oh, 4.6 thousand likes. Thank you for voting. Thank you for liking. Shout out to the chat, baby. Oh, no, my goodness. Oh, my goodness. Oh, you guys can't even see anything. Oh, I didn't even know you guys were not even looking at anything. You should have told me. Oh, my goodness. Let's go, baby. God bless you. Thank you for liking the video. If you don't know, man, we are here Monday through Friday, every single day, right at the opening bell, and it's all free 99. So God bless you. If you clicked the like video, you supported the channel, you helped bring some information to people, and we appreciate it. Again, you didn't have to, so whether you were shamed into it, called out, I don't know, or just the love of your heart, we appreciate you, and I appreciate y'all showing love. So thank you. God bless the call, baby. And for all of you, I don't care if you like the video or not. I don't care if you're new, old, even if you don't like me or anything. All I got to say is if you came here today, you showed up with a good attitude, you showed up with good questions, ready to play, ready to work on your craft, ready to contribute and make the most out of everything. Again, we were getting you analyst comments before. Oh, they don't feel me, bro. All free 99. Just like the video and actually act like you give a shit. That's all we ask, baby. Oh, man. But God bless you and thank you, baby. God bless you and thank you. And if you didn't notice, you'll notice. Go to any stock channel. Go to any YouTube channel. And I promise you, you will not see this many membership badges and the ones that say years. Years, baby. Years, baby. So big shout out to all the members. They've been here through hundreds of Powell speeches. They've got to see the analysis back and forth every day. They've came in and they showed love. And like I said, you like the video, you help support what we're doing. Again, it's all free. These are the people who showed up. They paid a membership. They didn't even have to. We didn't even incentivize it, but they helped bring the mission and the news to the people, baby. So God bless you and thank you for supporting. Big shout out to the members, baby. Oh, years, baby. Years, baby. Years, baby. Years. Oh, they've seen every Powell with me. You know that? Oh, and again, hopefully we see you at the next Powell. We like to turn up on Powell's Day, but I'm grateful to have some people who've got to witness every single one. Hopefully you can recognize how crazy today was. Again, the next couple days are going to be even crazier, so it's amazing to see. But again, members, we wouldn't be here without your love, commitment, and support. So thank you, and ultimately thank you for the love, because $4.99 don't give you a good attitude. Oh, they don't feel me. All the real ones, baby. All the real ones. So I love you. And finally, shout out to the Stream Alerts. First link in the description. They support the channel. A lot of the Stream Alerts people, they get amazing benefits. They get the free 99 text. Well, it's not free 99, but they never miss anything while they're working. They never miss a play, a news, a big important event. They don't miss it. But they do it because they love this support tool, which I'm so humbled by, and I love it. And Stream Alerts, God bless you. I hope you didn't miss any of this, and get ready. And if you haven't noticed, y'all better have been on the y'all better get on some of those futures too. I need y'all paper trading the futures. I need you ready to go and experienced on it, baby. You know what I'm talking about? Oh, they don't feel me, but God bless you. And like I said, man, just thankful for all of you today. A lot of you guys made this very, very fun today. Not only was this a very big historical meeting, even Powell admitted it himself, but like I said, today we had a lot of agreement and we had a lot of disagreement. And with, we had 10,000 something people in here today. And for the most part, I'd say for all of it, you guys were very respectful. You were very mature. And that's what it's about, baby. So welcome to the stock market. Thank you to all of you who made this an awesome place to be. All the people who weren't afraid to throw out their opinion. All the people who had the ego to let somebody disagree with them. And y'all were still able to work through with it. Stick to your opinion and keep it positive, baby. I love it. God bless you. God bless you and thank you. I'm so thankful for that. You have no idea. People came to fucking play today. That's what I'm talking about. They came to play. They were ready to agree, ready to disagree. They didn't let the ego get in the way. Oh, it was beautiful, man. These are the days we live for. I'm telling you, it was beautiful. I don't know. Chad, I am a proud Chad parent right now. You know what I'm saying? Oh, my gosh. Like, I can't call Powell ain't Daddy Powell. No, I'm just proud. You know that? So, for real, thank all of you. If you came and contributed to the conversations we have, it really does mean a lot, and I appreciate it, especially when it's as beautiful and constructive as it was today. I'm telling you, it was awesome to see. So, thank you again. Thank you again, my friends. I'm very, very proud. Oh, they don't feel me. Look at years, baby. I'm telling you, go look around YouTube. You ain't going to find that. Go ahead, go to every stock channel, go to every other YouTube channel, and find me that many 3-year badges. Trust me, you ain't going to find it, because you know why? We live in a business. This is a business. You know that. The stock market is very up and down if you haven't noticed the chart. So not everybody's hard to commit like that. It's hard to stay. You know what I'm saying? Y'all don't feel me on this. Y'all don't feel. Look at all the years. Look at all the membership highlights. God bless you. Thank you to all of you, baby. Amen. Oh, hey, I want that 10-year, baby. Amen. Amen. Amen, baby. Amen. Woo! So let's go, baby. Let's go. Let's go. Let's go. The YouTube shut down the chat because of you. All right, listen, man. In every chat you're in, I need y'all to just tell them about the code. Y'all just say, look at the years. Look at the years. The years, baby. The years, baby. Oh, my goodness. But, Chad, that is the day. I love all of you, especially if you're new. You need to check out the second link. Again, first link for the Scream Alerts Bootcamp and Real Estate course. God bless you. But check it out. You got the watch list. We're talking about anything. Again, you got the keys. We gave you the theories. Literally, we told you 75 basis point. We went over some of the plays. You got a lot. You got everything you need. Watch it if you like. Otherwise, 10,000 people are going to beat you to it every single day. That's all I'm saying. Oh, my bad. Your ears, that wasn't your ears. That was your imagination. My bad. Yeah, I'm bad with the audio sometimes. Yeah, my bad. It's good. It wakes you up. If that's not a natural sign to tell you don't miss the watch list and you need to wake up and be on the watch list and you got to get that into your routine, I don't know what could have been a natural way to show you besides that, you know? They don't feel me. 3 years. Tell them, algorithm. 3 years. Years, baby. Years. Nice sell. You like how I flipped that one? I know. I've been watching Powell. You get it? You get it? Because I'll just flip-flop based on whatever the fuck just happened. Oh, yeah. Yeah, Powell taught me well. Yeah, sure. Let's just say the volume's going to be data-dependent from now on. Okay, asshole? Yeah, back up. Yeah, I got no chill about it, man. We have a lot to talk about, man. Are you kidding me? I have so much, excitement, frustration, and optimism at the same time. You have no idea. I'm like, Powell, bro. That's it. I just found Powell's been driving from the back seat. Powell been driving a Tesla, put it on autopilot, and hopped in the back seat to take a selfie and post it on TikTok. So I don't know how I feel about it. And then Biden's in there like, yeah, wait, it's okay. Powell's driving. Don't worry, Powell's driving. He's gonna be good. He's gonna drive us into the we're GM Hummers. Mary Ibarra. I love her. Yeah, he gonna roller coaster all year, man. Let's find out though. But Chad, make sure you're on the watch list today. Trading Fraternity channel. Second link in the description. I hope I see you there. If not, again, it's up to you. It's up to you. That's it. Like I'm saying, shout out the people. Shout out the people who are on it. I know y'all been learning. And then I'm not going to explain the Swiss franc short just yet, but we're going to talk about it in the future. So be there. Third link for that membership badge. God bless you and shout out to the members once again. Like I said, I challenge you. Find me the 3-year badges. Find me. YouTube won't even give us above 3 years, and I got people demanding more than 3 years. Oh, come on. They don't feel me. So check it out. If you would like breathable merchandise, this is the place to go. You could check out the breathable merch. It's great for you. And again, this is probably going to be the only thing I'm going to sell you that is not freemium, and that ties into my Instagram. So you can follow me on Instagram at The Trading Fraternity. We ask that you do so. Say what's up. I love you. But at the end of the day, when you follow me, you will get followed by a fake Josh. So please report him. If anybody tries to sell you crypto, especially with the crypto markets looking, nah, that ain't me. I ain't Michael Saylor. I got coins like Saylor. You know what I'm saying? But still, anyways, just follow me on Instagram. Watch out for the fakes. If they are not trying to sell you breathable merchandise, you got the wrong one. That's it. If I'm going to sell you anything, it's breathable merchandise. Because do you feel how hot it is today? All that your heart was beating, right? You imagine your heartbeat before the Fed release. Then it started coming out. You're like, bearish, bullish. Oh, my gosh. You're like, why is Powell shaking? Even Powell is nervous. You know why? Because Powell's outfit was not breathable. So that's why we have the merch right here. All breathable merchandise. I give you my word. It is very, very breathable. I'm wearing it now myself. I'm rocking that Small Good Decisions, okay? So there it is. Hopefully we see you there. God bless you, okay? If you want a good option trading video, how option pricing works, I promise you will learn something about this. Critically acclaimed, 10,000 likes. This was before I started making aggressive jokes on YouTube, and then they like to show me on their algorithm. So, but it's still a good one to watch. You could check it out, okay? And make sure you go get boosted. Oh, man, I'm just digging my hole. Anyways, but watch that one, and then how to set up your long-term portfolio. It's a very, very good one. Besides everything going on, I don't care what the market looks like, especially with the discounts across the board. I am telling you, right now is a great time to start the long term, especially if you've never done it before. But check it out. You'll see where it is. Our long terms are down right now, unfortunately, but before you know it, it'll go back up. Did you suggest people get boosted? Do you not remember a couple months ago? Before, when inflation was transitory, we talked about that more than anything. Okay, I'm going to stop talking. Finally, prayer request wall, ladies and gentlemen. So listen, we ain't got affiliate links. Like I said, it's all free 99. That's why I'm so grateful for the people who share the stream, who like the video, and actually are able to spread this because it's amazing. We don't have affiliate links. Again, everything is freemium. If I play an Uncle song, they don't even give me ad revenue. It's amazing. But all I'm trying to tell you very, very simply, this is what we believe in, and it is the community. And I tell you, go look around. This community, it's amazing. But one thing that we believe in, One thing that what we're about is praying, okay? We like to pray for everybody in here. It's not that deep, so relax, okay? Because I feel like some of you feel like if you click the link, you're going to turn into Saul. Relax, okay? Your demon ass is safe. Don't worry. All I'm trying to say is what we believe in, and it's very simple. If it can't flow through you, it won't flow to you. That's why we root for everybody. I don't care if you bearish, bullish, whatever you want to call it. I don't care about your political spectrum. None of that shit matters. All that matters is this right here. We are rooting for you, baby. That's all. We want to see good long-term decisions, good short-term decisions, and a lot of small good decisions. You know what I'm saying? Oh, they don't feel me. They don't feel me. You know what I'm saying? But it's simple as that, man. We just want to root for you. I'm praying for all of you. If you ever want to do anything for me, man, like I said, it's all free. Just shoot me a prayer. Shoot me good vibes your way. Root for your boy. You know what I'm saying? That's all we're looking for, man, because we doing the same for every person here and all the people who've been here for such a long time, man. I love it, and it's game time. So God bless you, baby. Amen. Amen, baby. But ladies and gentlemen, that is the day. That is the day. That is the day. Okay, why no gold? I own more gold than all of you. Okay, stop. Okay, stop with it. We've talked about gold. I will talk about gold when it's ready to pop off, and then there will be a viable reason to buy paper gold. Right now, there's not a viable reason to buy paper gold, despite recessionary, inflationary talks or anything. I got a bunch of gold paperweights, and that's about it. So don't worry. We're going to get to it, okay? But I love you, okay? And you're blessed. But ladies and gentlemen, that is the day, okay? So go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World, okay? We're glad to have you here. Those are some great books. Hopefully you go do something positive by the end of today. Hopefully you could take some of this energy and run it up, you know what I'm saying? Oh, man, we need that. And just, like I said, do something positive, wake up and drive tomorrow. But that's it, man. I have a lot to talk about on the watch list, okay? I have a lot to talk about on the watch list. I hope you're there. I hope that you are there. But ladies and gentlemen, I said, you know what song I want to listen to something. I want to listen to something. Let's go. Let's get, this is how we're going to close out today. I think it's good. Are you ready? Are you ready, chat?
Yeah. Go music.
Yeah. Let's go. Shout out to Chad, baby.
Benny, yo, Benny, you bullish.
Hello,
but baby,
Benny.
I'm not from Chicago. Heard me talking about IV and dripping in bad. They thought that I came from the hospital. No, I just came back from trading. Chest to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM to the GG. What's that stand for? I am not a drug dealer, I'm a landlord. On my Tennessee the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without a parking pass. I'm trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching make moves like a salsa class. Plus I got so many bars like the 1 minute chart. I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell them it's a cold, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to the Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the Lexus. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Ay, like Curry on the chain, my brother, you know wait. I know you know name, you ain't never seen my face. Probably watch us in the game, did it with a couple plays. Let me kick a little lesson, you ain't never get a chase. What's yours, you always get what I'm really trying to say. Longer that you want the stock, more that it's getting safe. You ain't like to see what I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting weights. Your portfolio all day, mine's filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names, you probably thought that you should wait, then went and bought a course to trade. Benny, get some clothes and buy to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad, the news is fast. While
let's motivate it. Let's go, and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a pray request. And the list got everything you missed. Love y'all, baby. It's a cup. 2020. But talk to me in 2030.
Oh my God. 2030.
You know what
Tell
it
a
is,
level.
baby.
Tell
Cold
'em.
music 2020.
Uh-huh.
We coming.
Okay.
Watch out. On the radar.
Uh-huh.
Tell 'em I just
Tell 'em
want
what?
the Lexus.
Oh.
We out here making moves, baby. Let's go.
Oh, Chattadonia. So I hope you're ready for tomorrow. I hope you're ready for the end of the week, ladies and gentlemen. I hope you're ready for more volatility, okay? We got a little today. The uncertainty is going to be high, and we got a lot more things that we're going to have to do, baby. So I hope you're ready. I hope you're locked in. We love you. You are blessed. And, there's one more thing. Yes, and today is Wednesday. So don't forget, if you want to join, I don't know, maybe you're scared of the real estate market, whatever it is. It's funny. But I tell this to all that. Well, let me tell you, Cole Real Estate. Email colerealestate@gmail.com. We have a free real estate call tonight if you want to get into it. Hosted by Tyler and Trey, people who have been here for a long, long time. Again, I've known Tyler for almost 8 years. I met him on the internet just like this. Amen. Amen. It's beautiful. But it's great. If you want to get into it, nobody has to talk you into it, really. It's either you want to or not. But what I've been telling the agents, I know a lot of people are worried about the market slowing down, but I've been telling them from 6 months ago, from when the year started. I said, hey, you don't got to worry about a slowdown because you got to realize as an agent, you are the one selling the shovels. So, again, even on the way down, you're going to get the sales. So keep grinding, keep working. But maybe you just want to learn about it. Maybe you got a couple questions. We'll see. Email colerealestate@gmail.com. And that's it, baby. But I love you all. Have a wonderful evening. And just don't forget why we here and why we keep going, why we in the game. You know what I'm saying? Why we keep playing as hard as we do, why we ready and got the armor on, and just know the blessings are on the way, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Woo! I'm hyped today, honest dude. I can't wait for Friday, bro. I can't even wait for the watch list now, bro. Like low key, I should do the watch list right now. Oh, I don't know, bro. I don't even want to leave right now, but I gotta go. It's a crazy day, man. So let's finish this out and just get ready for another wicked, wild end of the year, ladies and gentlemen. All right. So I love you. Have a wonderful, beautiful, glorious day, and I'll see you on the watch list. Peace out. Oh, hey, wait, Josh, wait, I want a pony. Yeah, I told you this was going to happen. No ponies. I told you they're going to raise rates. Jerome Powell, he doesn't know what he's doing. This guy's an idiot. I told you that a long time ago. You know what I told you? It's a great day to celebrate Passover. Yeah, hot dog prices have dropped. So when they do the fireworks at Passover, it'll be great. But enjoy it. You thank Powell, what's it, Jared? Jared, he made the Subway commercial. Now he works in the Fed. Okay, but I love you, okay? And goodbye and good morning. Okay.